microphone settings or
Good morning, everyone. I'm Brian Sazi.
And I'm Alexis Christoforous of Yahoo Finance, and this is the first trade for Tuesday, January 7th.
Risk and recovery. Iran buries the general killed in a U.S. airstrike and pledges retaliation. But investors turn more optimistic that the worst could be behind us. So is the crisis over, or is this just a sucker's rally?
We'll see. Plus, fighting deep fakes. Facebook bans those manipulated videos, but is that enough to stop the scourge of false information being shared on social media?
And a vision for the future of gaming. Our tech editor Dan Howley is at CES, where NVIDIA is unveiling some pretty cool tech with images like you've never seen before.
Pretty cool. Let's get a check of the futures ahead of the opening bell. Better than yesterday, where we have a mixed picture right now. NASDAQ actually in the green. Futures there up 11 points.
And now let's see what's moving the markets in today's Morning Buzz.
Emily McCormick live in our newsroom this morning. And Emily, it looks like, at least for today, investors are shrugging off fears about those escalating tensions in the Middle East. What do you have your eye on today?
Well, Iran has ramped up rhetoric promising retaliation in response to the U.S. airstrike, taking out a top military general last week, but not necessarily seeing any definite actions yet. That's why we're having a little bit of some pairing of losses in the U.S. equity futures markets in early trading. So the head of Iran's National Security Council said the country is considering 13 unspecified scenarios in response to last week's killing of Qasem Soleimani. That's according to Iran's semi-official Fars news agency. In this, the official was quoted as saying that even the weakest of these options would be a, quote, historic nightmare for the U.S. Iran has also designated the entire U.S. military and the Pentagon as a terrorist organization. All this comes as the U.S. is deploying more troops to the Mideast as some of this rhetoric starts to ramp up. We also had U.S. Defense Secretary Mark Esper saying yesterday that there has been no definite decision made to leave Iraq, where Iraq's parliament on Sunday had voted to expel U.S. troops. Meanwhile, hundreds of thousands of mourners have turned out to Soleimani's funeral processions over the past few days in both Iran and Iraq, where he was killed in a U.S. drone strike. A stampede broke out in Kerman, Iran today, reportedly leaving around 40 dead and about 200 injured. Looking at all these effects that we see on commodities markets, we have Brent crude oil prices retreating from yesterday's 3-month high to trade below $69 per barrel. We're looking at that first decline in 4 days. We also had Morgan Stanley raising their 2020 forecast for Brent crude prices by $5 to $65 per barrel in a new report issued this morning, saying that geopolitical risks could send Brent higher in the short term. Back to you.
Emily, thank you. And now, today's big story. Amid growing criticism of its role fighting fakes online, amid growing concerns about growing fakes on fighting online, Facebook is saying no to deep fakes. The site has now banned those manipulated videos that have sucked in everyone from politicians to celebrities. But not every manipulated video is now covered by the ban. Editor-in-Chief Andy Serwer joins us now. Andy, too little, too late?
Well, you know, this is something that Facebook is wrestling with. And instead of just having a wholesale ban on fakes and hiring a lot of people to try to figure out what's fake or not, they continue to try to parse through this, Brian. And it's difficult territory. It's very fraught for this company. The head of global policy management, which is essentially the head of content, Monica Bickert, yesterday put out a report saying that she and the company were going to start to look at which sorts of content had used AI to create deep fakes, and they were going to start banning those.
But now there are videos that can still be shown like that Nancy Pelosi video where people were saying she looked like she was slurring her words and she appeared drunk? Why would that video under these rules still exist?
Because that wasn't using deep AI tools, sort of cutting edge stuff. And so you can see the difficulty.
Yeah.
Well, why does that warrant banning and the Nancy Pelosi video not? So there's a couple things going on here. One, they say, we want to leave up something that's obviously satirical. So in other words, you get a picture of Donald Trump and you draw the devil horns, you put the mustache and the Van Dyke on him. Okay, fine, that's a fake. I mean, that's just satire and everybody knows that. And that's all over the internet. And so Facebook is saying that everyone would obviously know that that is A, satirical, and B, not real. But the company is saying that what it wants to go after are things that aren't satirical, that with an intent to deceive people and that use these deep AI tools. Now, if that distinction makes sense to you, Alexis?
It's a gray line for sure.
It's really very, very difficult.
Andy, I remember several months ago you sat down with some Facebook executives. Is this a sign that the investments in people are starting to pan out?
I would not say that's the case. I mean, I would say that it shows the company continues to struggle with this issue. And, obviously the focus is going to be on them as the election heats up.
What about those political ads? I mean, because Mark Zuckerberg has said they're not going to take false political ads off the platform. What's the thinking there?
And I have talked to Facebook executives about this recently even and said, is this really a beach you guys want to die on? Because the other companies, including YouTube and Twitter, have decided to ban these kinds of things. In other words, where it's discernible that there's an intentional fake in a political ad, Facebook is still saying, well, we may put that up, we may continue to let that ride.
They say it's freedom of speech.
Right,
on the part of
and
the
we'll let, who are we to decide what to take and leave off our platform? But really, it is up to them to decide what stays on their platform or not. So to me, it's still a little bit nonsensical. They continue to toe this line.
All right, we'll see, and it is going to be a busy year for them with the election.
It is.
All right, Andy, thank you.
Thanks.
Well, it could soon be easier to file for personal bankruptcy. Senator Elizabeth Warren just released a new plan, and it's a direct shot at Democratic frontrunner Joe Biden. Ethan Wolf-Mann is joining us this morning for this one. Good morning, good to see you.
Good morning.
Hey.
So we know that bankruptcy has long been a signature focus for Senator Warren. What is her latest plan? What is she saying?
Well, so first of all, back kind of before she even got into politics, when she was a law professor, she went around the country and found, by looking at all of these bankruptcy filings, that it's mostly a matter of luck. One bad financial event can really just put a family in distress. It's not necessarily bad decisions. And so bankruptcy has been her cause, and she has released this plan kind of to undo this 2005 law that made it really hard to file Chapter 7 bankruptcy, which is essentially liquidation bankruptcy. You sell your assets to pay the debts, and whatever kind of that stops there, and then it's erased. The other kind of bankruptcy, Chapter 13 bankruptcy, is something that is more of a payment plan long term. And so that is what this bill pushed everyone into. And it's pretty onerous. It makes it really, really hard to file bankruptcy. And so what she's doing now is kind of trying to bring this back to where it was. This happened right before the financial crisis, and foreclosures went up, and all of these sort of kind of bad things, while the good things that you might expect didn't really change. And so, one thing that I think is interesting here is that, this was based off of abuse. People thinking that, okay, people filing for bankruptcy are just trying to get out of their debts, but really the data has not borne that, and so she's kind of fighting against this. But this is a plan. This is not a bill yet, and probably not something which is going to be realistically implemented anytime soon. This is something that I think is a political move, especially to draw a contrast from Biden.
But I'm sorry, but you mentioned that bill, that 2005 bill. After that was implemented, weren't bankruptcies down something like 50%?
Bankruptcies went down and personal defaults went up. And so it just really squeezed people. And this was something that was mostly kind of along party lines, but some Democrats, like Biden, did join in and support the bill.
Ethan Wolf-Mann, good to see you.
Thank you.
Coming up here on The First Trade, home decor retailer Pier 1 is looking to have a tough go in the market for the second straight day. We'll tell you why. It's one of our Yahoo Finance trending tickers. Time for a look at one of Yahoo Finance's trending tickers, Pier 1 Imports. Stock is looking to open down big time for a second straight day after the home merchandise retailer announced store closures and is reportedly close to filing for bankruptcy. Alexis, IKEA and Target, that monster has come home to roost and looks like they have completely crushed Pier 1.
I guess this really shouldn't be much of a surprise, right? I mean, they've been struggling for years. When you look at the stock price, I think it was back in 2015, the stock was at $300. It's below $5 right now.
It has been a tough time for this company. They've taken a lot of quality out of their business. They'll look to close 450 stores. And very important, in the 10Q they filed last night, they raised a concern if they can continue to stay in business. It's called a going concern. They may not be around in a year. That's the bottom line.
You know, their sales, same-store sales were down about 11.5%. And get this really startling stat, for all of last year, about 2,900 retail store closures.
Sad.
9,300, I'm sorry.
Sad, I used to love this store.
Right, it really was fun to go into. I don't know what happened at Pier 1.
IKEA.
I think you're right. Time now to head down to the New York Stock Exchange, check in with Yahoo Finance's Inez Ferre for an early look at what's going on there. Inez, what do you have your eye on? I believe Tesla's got some news coming out today.
Yeah, that's right, Alexis. Tesla with a big milestone. Tesla started delivery of its China-made Model 3 at its Shanghai factory. Also, Tesla said that it has started production of its Model Y at the Shanghai factory, and Elon Musk expects the Model Y to have the most demand than other cars in the long term. Now, Credit Suisse remains bearish on the stock with an underperform rating, although Credit Suisse did lift its price target on the stock to 340 from 200. Of course, Tesla is trading way above 400. And Goldman Sachs, we're watching Goldman Sachs after the company has said that it will make some changes to the way that it reports some of its results for its divisions in order to highlight its consumer business. Goldman Sachs will start reporting a new segment called Consumer and Wealth Management, and it will include Marcus Online Lending and also its credit card offering with Apple. And finally, we're also watching Micron and Western Digital after Cowen upgraded both of those stocks to outperform and also gave a price target lift to Micron and Western Digital, with the analysts expecting demand for chips and memory devices to continue to recover in 2020. Alexis, Brian?
Inez Ferre, thank you. The Consumer Electronics Show is now going on in Las Vegas. It will change the buying habits from professional gamers to people with big screen TVs in their living room. And Yahoo Finance's tech editor Dan Halley had a chance to see what chipmaker NVIDIA now has on offer.
It's CES 2020, and of course that means NVIDIA is here showing off its latest gaming wares. We're here standing in front of some demos, showing off its RTX technology as well as its DLSS technology. These have been announced previously, but why they're important is because what they do is they allow games to run at higher frame rates with better performance. That's massive for gamers. What you want is higher frame rates, higher resolution, but usually when you go higher resolution, frame rates drop. That means you'll start to get an image that sputters a little bit. This cancels that out by using supercomputers and machine learning to then send you basically data packets that help improve the performance while giving you better resolution. It's basically a win-win without any loss, and it's something that gamers have wanted for quite a while, and this does it using machine learning through the RTX chips that NVIDIA has. Now, the big announcements for the show, though, are in the display category. They've partnered up with LG for a massive line of huge OLED TVs. We looked at one that was 77 inches, an OLED screen, and it has NVIDIA's G-Sync technology. Now, basically what that does is it ensures that when you move quickly within a game, you don't see any screen tearing, so it looks nice and crisp. It's basically what you get out of a computer monitor out of a giant TV. Now, you normally wouldn't be able to do something like that. To be able to do it with a massive screen like that, excellent. And the coup de grace of NVIDIA's big announcements here is the world's fastest display. It's a 360 hertz refresh rate display. It's the Asus Republic of Gamers Swift 360. And why that's important is because gamers, again, want high frame rates. With esports gamers in particular, that can mean the difference between winning and losing a round. I got to try a game that wasn't running at 360 hertz and then one on the monitor running at 360 hertz. And I went from hitting a guy 0 times to hitting a guy 8 times. So it really does make a huge difference, and that's something that esports gamers want. That's what NVIDIA is bringing to the table for 2020. We don't have pricing or availability quite yet, but the fact that it's the fastest refresh rate, 360 hertz, I mean, your average TV, you're lucky if you're getting 60 hertz. For this, it's absolutely mind-blowing. So big announcement coming from NVIDIA on the display front, and of course, the RTX technology, as well as the DLSS here. It's an overload.
I think Dan Alley is having too much fun at CES.
Right.
All right, so NVIDIA turning heads at CES, also turning heads on Wall Street because the stock is up 65% in just the past 12 months. Pretty nice. All right, Impossible Foods is ramping up pressure on Beyond Meat. The company is rolling out new pork and sausage alternatives. Yahoo Finance's Heidi Chung joining us now for this one. I guess the day had to happen, and Burger King is going to be the first one to have this, right?
Yeah, so Brian, you peeled out that part of the story, which is that Impossible Foods is even jumping into the pork space, right?
Yeah.
The sausage space was sort of dominated by Beyond Meat. But what do you think this sort of means, I guess, for the plant-based meat craze?
Well, David Lee, CFO, reached out to him via email. He says they're not disclosing yet where some of these pork and sausage products will be in stores, but Burger King is the big winner here, over 100 restaurants, right? And it had to happen. This company's gotten a lot of funding, $300 million raised a couple months ago, and you can see clearly it's being used to make pork and sausage.
And a lot of investors are actually sort of awaiting that IPO to sort of happen this year. And if it does, it's really going to give Beyond Meat a run for its money. But when I'm thinking about this launch,
There's the
that
sandwich. We're
looks
looking at the
delicious.
croissant witch with the...
But I don't want to call you out, Brian, but is this your favorite breakfast sandwich in the fast food market?
That is
Is
my
it
favorite.
really?
Yeah, the croissant witch. I used to eat 8 of those in one shot in the morning, full and fair disclosure.
How many of them?
8 of them. I used to be a little overweight. We're not eating that right now, I'll tell you that. Sorry.
I don't know, Brian. When I think about this, though, and this launch, while it's very interesting that Impossible Foods is jumping into the sausage space, what this says to me is that the breakfast battle is heating up. And I think 2020's theme in the fast food space is going to be about breakfast. We're awaiting Wendy's to launch their breakfast in the early half of this year, as well as McDonald's. It's under a lot of pressure, I think, within the company because of the cultural reports that have been coming out about the culture within the company, but also a new CEO. But that company has been struggling with the breakfast space for some time. But as we know, it's the most profitable time in the day part of the business for these companies. So if they're able to really sort of crack the code here and make sure that they're really capitalizing on this opportunity, it's going to be big for the rest of this year.
Alexis, you know what could be next? We had Ethan Brown, the founder of Beyond Meat. He was in here a couple months ago.
Yep.
Bacon. It sounded as if bacon is the next frontier for this company.
He wouldn't give us a timeline,
Yeah.
but they're certainly moving in on pork, as you're saying. Get this, too. I think Impossible Foods is really doing it right, especially if they're looking to go public, because according to a new survey, it's called Morning Consult, it ranks 4th on a list of the fastest-growing brands so far. The other ones were DoorDash, White Claw, and Postmates.
White Claw.
Impossible
Another Heidi
Foods
fan.
up there with them. Do you want White Claw with a croissant sandwich there?
No comment, Alexis.
Oh,
sorry.
goodness.
No comment.
All
Sorry.
right. We'll have to see what else they come out with, but exciting stuff from
Certainly.
Impossible Foods. Thanks a lot. Still to come here on The First Trade, arrests in the deadly Australia wildfires. We have your news bites up next. Let's take a look at today's News Bites. There is widespread damage and at least one person is dead after two earthquakes rattled Puerto Rico earlier this morning. A 6.4 magnitude quake hit the island before dawn, followed by a 6.0 aftershock. Puerto Rico's power authority says a key power plant was damaged, but electricity should be back on later today. Meantime, more than 24 people have been arrested in Australia, accused of intentionally starting those catastrophic wildfires. The fires have reportedly killed at least 24 people, destroyed thousands of homes, and burned over 12 million acres. The University of Sydney believes that 480 million animals have also been killed. President Trump reached out to the Prime Minister there to offer help in fighting those fires. And SpaceX is starting off 2020 on a strong note. It launched 60 Starlink satellites on its Falcon 9 rocket from Cape Canaveral. The company wants to send 1,500 satellites into space by the end of the year and eventually set up a network of up to 30,000 satellites, which would beam broadband internet globally. We've got the opening bell coming up next on The First Trade. But first, here is a look at the action in overseas markets where things are mixed this morning. And we'll be right back. Welcome back to The First Trade. We are a few minutes away, about 5 minutes away to be exact, from the opening bell. Stock futures are mixed right now. We have got Dow futures off 26, S&P futures down 3, but NASDAQ futures up 14 points. Let's go around the bell now with Tom Frost, co-founder at Frost & Frost Wealth Management, along with Yahoo Finance editor-in-chief Andy Serwer. We've also got Heidi Chung over at the Wi-Fi Interactive Board taking care of things for us there. Good morning to you all. Tom, I'm going to start with you. Wow, what a difference a night makes, right? Here we have the market pretty much neutral after a wild day. Do you think that investors are complacent about what's happening in the Middle East, or do they have eyes wide open right now?
I hope they're not complacent, although if you look at the VIX, it looks like they may be. But, I think investors are starting to be a little callous to what's been happening in the Middle East. We've had this problem in the Middle East going on for over 20 years now, if you just count back to September 11th. So I think investors realize that geopolitical events like this, while they cause a lot of news and a lot of noise, that they tend to have a temporary effect on the market. So hopefully investors are taking this with stride and just they're in a wait and hold, they're in a holding pattern.
Yeah, I mean, it's interesting to me, Tom, when you were saying that, because there's such a tendency right now for stocks to go up. And I think that if you kind of imagine these tensions, these Middle East tensions, say where there's a negative sentiment pervasive in the marketplace, you would see stocks tanking. And, right now it's sort of like a Teflon market where it's hard to understand or imagine what would make the market, go down at this point. I mean, if, the possibility of World War III doesn't make the market go down, what will?
Well, it's a very valid question. But, fundamentals still remain strong. The Fed continues to remain very, very supportive. And then you look at what's going on with corporations. Corporations are strong right now. We went through kind of an earnings recession. It seems like we're hopefully coming out of that right now. So I think, once again, investors are taking this in stride and saying, let's hope that the president has some sort of a strategy. I mean, if you take the pawn out in chess, you should have some sort of a strategy for going after the king. So they're either taking this with stride or they're looking at fundamentals and they're not making knee-jerk reactions, which at the end of the day is probably a good thing.
Jack, let's bring you into the chat here. You write in your recent note that there is a possibility of a 15% correction. Do you think we're starting to get the setup of that correction happening in the first quarter?
It's possible. I think, obviously we've got a lot of geopolitical uncertainties. That could be the catalyst. Essentially, we've got everything in place, certainly strong liquidity, strong momentum, but valuations are high. Valuation by itself is not a great timing tool, but if you have a scenario where investors take a step back, get a little cautious and look at valuations, that could be what could precipitate a correction, which we think is probably about 15% downside.
All right, I want to get a look at what's happening around the world here with Heidi over at the Interactive Board. What have you got, Heidi?
Good morning, Alexis. Yeah, let's take a look at how markets are doing overseas here. As you can see, it's a bit of a different picture than we had yesterday. We have Asia generally higher here with the major markets. A similar narrative over in Europe, but taking a look at the futures here in the U.S., pointing to a mixed open this morning. We have the Dow futures down about 40 points here. As you can see, we were holding on to gains for most of the morning before we took a leg lower at about 8:45 a.m. or so. Similar picture for the S&P here, but the Nasdaq holding on to gains, pointing to a higher open. But of course, we have data coming out at about 10 a.m. today with the ISM non-manufacturing index, so we could see some movement then as well.
Now I can't hear programming.
Tom, there's one indicator we're watching very closely here. It's the Buffett indicator, and that is now flashing red. It is the total market cap of U.S. stocks versus GDP. It's now at a record 153%. Is that an indicator investors should be watching and making decisions over, or is it outdated?
I think it's something that investors should be watching. It's one of the many factors that they should be watching. But is that the only factor? Absolutely not. I mean, we're encouraging our clients to look at corporate profits. We're encouraging them to look at how's the consumer doing? Are they spending, since they make up 2/3 of GDP? Then we're also looking at I don't want to downplay what's going on with Iran right now. The big question is what's going on with Iran. Is that suddenly going to have a huge impact on the global economic outlook, on corporate profits? U.S. economic outlook, I'm not so sure unless this does absolutely become an all-out World War III, which we don't think that's going to happen. So I think that's one of the factors that we should be looking at, but it's one of many factors.
And here we have the opening bell at the New York Stock Exchange. You saw Planet Fitness ringing the bell at the NYSE. We're going to be speaking to the CEO in a little bit. Dow down 68 points. I want to stick with this Buffett indicator, Andy, because it was flashing red just before the Great Recession, flashing red before the dot-com bubble. Do you think we should be worried? Is this a good indicator?
Yeah, you got to be a little worried. I mean, anything with Buffett's name on, I mean, it legitimately has Buffett's name attached to it, and it's very commonsensical. It's just how much is the market worth versus the economy. Now, having said that, there are a couple caveats. First of all, you're talking about the global stock market versus the U.S. GDP, so you could read into that a little bit. And then also, it's sort of slanted towards big companies. Having said that, it's very common sense. It's been predicted before, and Warren Buffett believes in it. So be a little bit afraid.
Mm-hmm. Jack, let's get back to you here. What do you think new money should be doing in the market? If you have no money in the market, should you get in here now and buy some dips?
Yeah, I mean, I would say if we get 15% pullback, absolutely, that would be a good point to get in. But near term, I would say sit tight. I think I would wait for entry points. Clearly, we're at all-time highs essentially, and not a great entry with valuations where they are. We think 15% pullback would get us on track for kind of a good 7-year glide path.
All right, we're having a little trouble with Jack's mic. We're going to try to fix it. But Andy, Jack's saying a 15% pullback may be a good entry point for this market. Yesterday, you were talking about dollar cost averaging and warning about not wanting to time the market.
Right. Yeah. I mean, the way I look at that, and I'm a big dollar cost averaging fan, and but I agree with Jack. I mean, if you do see the market, say like in March of 2009, or I mean, if you're smart enough to and have the fortitude to see the market once it's really dropped like that, to get in and maybe move a bit more in at those points. I know it sort of contradicts a little bit what I'm saying about DCA, which is dollar cost averaging.
But I think that makes sense as a backdrop, having
Right.
DCA sort of be your strategy,
Right.
if you will. And then if you happen to have the year-end bonus and you want
Right.
to put some money to work, you see a big pullback, might make sense.
Right, and bonus season's coming up, so
Yep.
wouldn't it be ironic or perhaps make sense that bonus season sort of coincides with a market downturn. So, but it's so interesting. I don't know about everyone else, but the psychology of buying when there's blood in the streets is very difficult, but you'd have to be able to do that.
Heidi, over to you at the Wi-Fi Interactive Board.
Hey, Brian. Yeah, so we're a couple minutes into today's trading session. As you can see here, all three of the major indices opening lower. We have the Dow here down about 80 points. I do want to mention, though, yesterday's session was very similar at the open. We had stocks selling off, but all three of the major indices paired those earlier losses and closed in the green yesterday. So we could very well see similar action today. I want to take a look over here at the heat map and see what is moving within the Dow here. Leading the Dow this morning, we have Goldman Sachs, Dow Inc., Apple and Disney higher. And on the flip side here, we have Intel and energy name Chevron down more than 1% in early trade today. Now let's take a look at the NASDAQ and see what is moving there. As you can see, chip stocks are ripping higher today. We have Micron up nearly 5%, as well as Western Digital. And that is because we got an upgrade from Cowen. Both of those stocks upgraded to an outperform rating. The firm citing optimism regarding memory chip pricing there. And on the flip side, lagging here in the NASDAQ 100, we have Gilead down more than 1.25%. Now let's take a quick look at the S&P 500 sectors. No surprise here, we have tech and communication services leading the charge and outperforming. Underperforming today, we have the XLE, which is the energy sector ETF, as well as real estate.
Tom, Heidi mentioned, put a spotlight on real quickly on Goldman Sachs. Stock is higher this morning on some news. They might be improving their financial disclosures, but it could be a big month for Goldman Sachs. They have their long-awaited Investor Day where they're going to likely put out some long-term targets on January 25th, and the CEO will be in Davos. Is that a name you are inclined to trade into earnings? Go looking forward.
Was that for me, Brian?
That's for you.
We don't comment on individual stock names, but I think the banking sector is a sector that we've liked. We've liked that sector for about 6 months now. And then she just brought up energy struggling, and that's a sector that we really would not touch. You've got what's going on with Iran. You think that would be good for energy, but with the U.S. now being the #1 producer of oil with fracking, then that's a sector I think we'll still continue to see a downturn on. But yeah, we like the banking sector a lot.
In fact, you mentioned oil. It is now down about 1%, hovering around $62.50 a barrel. Jack, if you're there with us, what are your thoughts on energy as we head into the new year? Is this a space you think there's some opportunity for investors?
I think there is. It's been an area that's been, aided last year. It's continued to pump out decent results. Master limited partnerships are offering decent yields. I prefer your listeners invest in C corps rather than the pass-through entities. A little better capital structure, but all in all, I think the energy sector will likely be a good one here.
Tom, do you think buying the dips still makes sense?
Absolutely, and I think we're going to continue to see more. The VIX, as I mentioned earlier, is so relatively low in comparison to other times that we've had problems in the Middle East. You look back to 2001, we saw the VIX shoot up to 30 and 40. Then in 2008, upwards of 80. And as of this morning, it was hovering around 14 even. And that's not sustainable. So I do think that we're going to see some dips. Last year was such an even year for the markets. And I'd be looking for the dips. When we are encouraging clients with new money, and what to do with that money, we're saying, first of all, what's your time horizon? But B, if it's money that they're putting into the market that they're looking for near-term growth, we're saying let's be very, very patient and let's look for some entry points. We think we're going to see some entry points here within the first quarter.
All right, we'll have to leave it there. Tom Frost, Jack Ablin, Andy Serwer, and Heidi Chung, thank you.
Good morning.
Inez Ferre is standing by again at the New York Stock Exchange. Inez?
Brian, right now we're looking at the Dow that's down 50 points. The S&P's down 4 points. I want to show you what's happening with Apache. Apache's up around 17% this morning. This is after the company said that it made a significant oil discovery offshore Suriname. That's in the northeast of South America. An analyst had described this as one of the most anticipated wells in the world. And I was just talking to an energy trader here that he said this is very significant. It was a bigger than expected discovery, and you can see that it's being reflected in the stock price. We're also watching Kellogg this morning, seeing a bit of a pop after being upgraded at Credit Suisse to outperform, with the analyst note very bullish on the company's portfolio changes, the reinvestments in the last couple of years, really setting up a scenario for revenue growth and margin expansion. And then we're watching Smile Direct Club a day after it saw a big pop. Yesterday it had announced that it was offering some oral care products at Walmart. It would be offering them in the Walmart in the U.S. and online, and the stock saw a big surge this morning. It's slightly under pressure. Brian, Alexis?
Okay, thanks a lot, Inez. Business owners are in Washington, D.C. today testifying about how more tariffs could impact their bottom line. This time, though, the tariffs are in response to France's new digital services tax, which the U.S. trade rep says unfairly targets American tech companies. Jessica Smith is in our D.C. bureau with more this morning. Good morning, Jessica. Which businesses exactly are making their case today?
Good morning. We are going to hear first from several tech industry groups. We're not hearing from Amazon, Facebook, Google themselves, but they did submit written statements ahead of this hearing today, and we are hearing from the associations that represent some of these big tech companies. Those groups aren't necessarily testifying for or against the tariffs. They're just anti this digital tax. They don't want to see that happen. They're fighting that. Then we are also going to hear from cookware companies, handbag companies, apparel groups, and a lot of people in the wine industry. These tariffs are targeting French wine, handbags, cheese, makeup. They could be tariffs of up to 100%. I did talk to one wine importer who says he has about 20 employees in the U.S., and he says these tariffs would be devastating. If tariffs on French wine go up to 100%, he would probably have to close his business. So those are the kind of stories that this USTR panel is going to be hearing from a lot of these businesses today.
Well, Jess, hopefully $8 box wine is left out of this equation. You know, we're all trying to save money where we could. But switching gears, do you think there's a chance the U.S. and France can work this out and strike a deal?
Well, we now know that the French finance minister, there we go, and Treasury Secretary Steven Mnuchin say they have 15 days. They're giving themselves this deadline before they meet again in Davos to try to come up with a compromise. There is work on an international framework for a digital services tax instead of having each country come up with their own. So we'll see if they're able to come up with any sort of compromise between now and Davos. Public comment on the U.S. tariffs is due next week, a week from today. So we'll be watching that window next week, between next week and Davos.
Jessica Smith, thank you. Coming up here on The First Trade, we'll tell you what has got Tesla CEO Elon Musk doing his happy dance.
Now for a look at some of the companies and stocks the Yahoo Finance team is watching for you today. Elon Musk was on hand in Shanghai as Tesla delivered its first China-built cars to customers. A half dozen buyers drove away with new Model 3 sedans earlier today, and Musk also signaled that Tesla plans to set up a design center in China, but he hasn't given any details on that. Tesla had started delivering cars to select employees there last week. Now, at the same time, China is slamming the brakes on General Motors. GM sold a little over 3 million cars there last year. That's about a 15% decline from the year before and its biggest drop ever in China. And it's not going to get better anytime soon for the company. A GM exec said, quote, "We expect the market downturn to continue in 2020 and anticipate ongoing headwinds in our China business." Starbucks is rolling out more dairy-free options in the Midwest. The coffee giant is adding Oatly brand oat milk to its lineup in 1,300 cafes throughout the region. It will also add 2 new dairy-free drinks to all U.S. locations: almond milk honey flat white and the coconut milk latte. The alternative milk market topped $2 billion in 2018 as more Americans drink less cow's milk. And Boeing says it will not furlough any employees when it suspends production of the 737 MAX jet. The company said it would move up to 3,000 workers off 737 production to help oversee other grounded jets and also assist building other aircraft. And one of the 737 MAX jet's parts suppliers, Spirit AeroSystems, is halting production and looking into a voluntary layoff package for some of its workers. And the Justice Department is closing a bribery case against Uber. It won't take any action against the company after allegations of corruption practices in India, China, Indonesia, and Malaysia. This is good timing for Uber since it will help them close a deal to acquire the Middle Eastern ride-sharing rival Careem. And coming up here on The First Trade, Planet Fitness is hoping to make your New Year's resolution come true. We're going to speak to the CEO right after the break. It's been a week since we welcomed in 2020, and if you resolve to get in shape for the new year, you are certainly not alone. A recent survey by the site YouGov found 50% of Americans, 50%, want to exercise more in 2020. Of the other top 5 resolutions, health played a role in 3 of them. So it is not surprising that Planet Fitness is getting a lot of attention. And the CEO, Chris Rondeau, is live at the New York Stock Exchange, where he just rang the opening bell. Good to see you as always. Thanks so much for joining us. That's got to be news. That's got to be music to your ears when you hear 50% of the country wants to get in shape. What can they expect from Planet Fitness in 2020? What's the outlook?
Yeah, absolutely. I mean, this time of year is really, good for the whole industry. And right now, we have a great promotion going to Planet Fitness where you join for 20 cents down and only $10 per month. And we have great equipment. We're all 2,000 stores now. We broke our 2,000 store on December 31st. So we're pretty much in everybody's backyard at this point. So convenience is key these days. And if it's out of the way, you're just not going to work out. So convenience is a big piece of it.
Chris, you guys were another big year in 2019. You're a full-on growth beast, opening close to 300 stores. How many are you looking to open up this year?
Yeah, we opened 261 in 2019, which is a new record for us, over 230 in 2018, which is also a record. So great momentum here going. This year for 2020, we haven't quite put our forecast together yet, but right now on top of the 2,000 stores open, Brian, we have over 1,000 locations still committed in area development agreements with our current franchisees, and half of those will open in the next 3 years. So we've got a lot of runway for growth and a U.S. potential of 4,000 stores.
Look, you're in a crowded space, right? This is no surprise. There are the traditional gyms, but you've also got the boutique places like Orange Theory.
Sure.
They're popping up everywhere. You've got Peloton, seems to be on a tear. How is this impacting Planet Fitness, or how are you changing strategy, if at all, to better compete?
Yeah, no strategy change at all for Planet Fitness, and I'll tell you why. We cater to casual first-time gym goers. It's really our judgment-free zone. People think it's just about price. It's more our atmosphere component. Almost 40% of our members never belong to a gym in their entire life. When you think about the industry, in 2018, the industry added 1,100 locations, and the industry added 1.6 million members. We added 1.8 million members in that same year. So we accounted for 100% of member growth. And that's really because the industry keeps adding locations, Orange Theories, Soul Cycles, you go down the list, but they're catering to the getting fitter. They're catering all to the same customer, and they're just swapping out people. So they're not really getting more people off the couch like Planet Fitness is.
Chris, I have to ask you, recently there was a management change. Your CFO took over the president role. He will be working more closely with you, with the franchisees. Are you looking at succession at all? You've been at the company since 1993. You've seen and done it all, Planet Fitness.
No, I think, we're really getting ready to pose for our next big explosive growth here. Only halfway there to 4,000 stores. Giving Dorvin more bandwidth here to focus more on development, in the years to come, more international. So with the new CFO coming on board, Tom Fitzgerald, also new CMO, Jeremy came on board as well. So just really getting a good bench strength here for our next wave of growth for the future.
Also partnerships. You talked about international expansion. Partnerships, though, are a big part of your growth strategy. You cut that deal with Kohl's last year. I'm curious how that's going, and can we expect more of that, and with whom this year?
Yeah, with what's going on with retail these days, everybody sees. Every month it seems like there's a new closure or new downsizing or right sizing of other retailers. So yeah, we've done a deal with Kohl's at about 4 or 5 locations so far in 2019. More posed for 2020 as well, where they're going from call it 70,000 square feet to 50,000 square feet. We're in 20,000 square feet right next to them with our own private facade. Looks just like a strip center. It's really because we drive traffic. So a lot of retailers want us there. Each store drives about 5,000 workouts every single week, and a majority of those workouts are Monday through Wednesday. So we're really bringing traffic to the center when the retailers aren't busy. So it's a great compliment for their retail, for other tenants.
All right, Chris Rondeau, always good to see you. Good luck this year.
Yeah, thanks for having me. Yeah, thank you very much. You too.
Now let's take a look at another one of today's Yahoo Finance trending tickers, FireEye. Shares of the cybersecurity company are heading up after SunTrust upgraded the stock to buy from hold and hiked its price target to $22 a share. The analyst sees a tailwind from the geopolitical tensions in Iran and Iraq, leading to increased cybersecurity spending in both the private and public sectors. Interesting here. We were just talking about this yesterday, Alexis. The rally continues in cybersecurity names.
And this stock had not seen a lot of love, FireEye. It is now. And in fact, the company is even hinting that it may be a takeover target.
Yeah, and that's a good point, Alexis. The stock has underperformed a lot of cybersecurity plays over the past year, and they have had some challenges drumming up revenue. We've seen transitions in their business, and there is a lot of competition.
There certainly
Palo
is.
Alto Networks, CloudStrike is a big competitor too as well. They have to step up their game.
All right, but today, a good day.
Good day.
For FireEye. All right. Nuveen's Bob Dahl is out with his annual 10 predictions for the new year, and he says 2020 is already shaping up to be an odd year. Bob Dahl is here with us now. You use the word odd. What's odd about this year?
Oh, I think it's last year we had earnings that were close to zero.
Right.
We had massive PE improvement. 92% of the appreciation last year was about improved valuations. The odd thing this year is the economy is likely to be a bit better than last year, but the market's probably not going to be as good. So that's a weird juxtaposition.
One of your surprises on the list is the status quo election. What is that, and what would that mean to markets?
Donald Trump's reelected. Democrats retain the House. Republicans retain the Senate. Status quo. Nothing changes of significance. I think that will give the market a sigh of relief. They at least know what they get. Whether they like it or don't like it, they at least know what they get. And on balance, the market has liked Donald Trump and his administration.
So you see the market rally, the bull market, you think could continue if President Trump gets reelected?
Yeah, I mean, regardless if he gets elected, the bull market continues, in my view, unless and until we have a recession, and there are no signs of recession. None.
We have some of your predictions up on the screen right now. Value and cyclical is going to outperform growth and defensive stocks. Really, I mean, I'm a little, I'm curious.
A lot of people are and wondering. Actually, it started, as you probably know, about Labor Day of last year. First 8 months of the year, it was growth and defensive stocks. Since Labor Day, it's been value and cyclical stocks. For that to come true, we need the economy to do a little bit better, both here and overseas, and we think we will.
One you got me a little worried about here is cold wars within the U.S. continue and also continue with China.
Yeah, the China part is perhaps obvious to people. You know, the phase one deal means got like 99 phases left if we're going to solve all the trade problems. This is going to go on for years. The inside the U.S. has lots of dimensions to it. The political one, the mass polarization we have. We have a difference opinion about the best economic system according to age brackets. 18 to 29 think that socialism is a better form of an economy than capitalism. That's never happened in the United States before. Sadly, we have declining life expectancy for 3 years in a row here in the U.S., and that's related to lots of things. Much increased suicide rates, alcoholism, drug deaths. So we got a lot of stuff going on. The haves, have-nots in terms of income, in terms of wealth. There's a Cold War inside the U.S.
All right, here we have your first five. We actually did this backwards, but that's okay. The first five predictions, and the first one is the world avoids recession in 2020. You see GDP growth up over 2%. But isn't Iran one of the, I mean, there are many, but isn't Iran one of the big wild cards for this?
No question about it. You know, if you looked at our list of positive and negatives, one on the negative list is geopolitical, who knows what.
Right.
And this one showing up in the first week of the new year. Iran's an issue. Markets have basically ignored it, as you know. I'm not sure that's going to continue. But this one, like the China thing, isn't that new? We've been kind of fighting with Iran with words at a minimum for a long time. Let's hope it doesn't get a lot worse.
And still no inflation this year.
Inflation, we think, moves from 1s to 2s.
Okay.
1.5 to 2 is where we've been. We think 2 to 2.5. Largely driven by wage growth. As you know, the unemployment rate is at a 50-year low, and when that's the case, to get workers, CEOs have to steal them from other companies, and means you have to pay up a little bit.
So prediction then for the Federal Reserve, does it remain dovish all year?
I think they just kind of sit and watch. If there's an extreme in terms of some development, positive or negative, they'll act, but I think they raised the bar significantly in their last pronouncement for any change. So I think they'll be just kind of watching things, hoping that the status quo is okay.
All right, Bob Dahl, great predictions. We got to call you back and see if they come true.
That works.
You're right? Okay,
Back.
thanks so much for being with us. All right, that's going to do it for the first trade for this morning. But before we go, we are celebrating a milestone here at Yahoo Finance. Believe it or not, 1 year ago today, we launched our 8 hours of live streaming coverage. It's been a fast year, hasn't it?
Best year of my life.
And we are so glad to bring all of this information to you. We hope you've been enjoying it. I'm Alexis Christoforous.
And I'm Brian Sazi. Now let's get one more check of the markets with Inez Ferre down at the New York Stock Exchange. Inez?
Brian, Alexis, the Dow is down about 100 points. The S&P's down 11 points. The NASDAQ also lower. We're watching AMD this morning after the company unveiled a new laptop chip. It's aimed at the thinnest and the very lightest of laptops. AMD predicts that this processor will far surpass its rival Intel's. Also, Microchip Technology hit a record intraday high this morning. This is after raising its fiscal third quarter revenue guidance for the second time in a month. The company believes that orders hit bottom back in December. And then we're also watching Micron and Western Digital, both being upgraded at Cowen to outperform with a price target increase for both stocks. The analyst is predicting that demand for the chips and memory devices will keep recovering in 2020. And we're also watching Tesla trading at around $457. It started delivery of its China-made Model 3 cars to consumers in China. Make sure to stay with us because On the Move is up next. Right now, the Dow is off 107 points. S&P, NASDAQ also lower. Stick around. Stay with us.
It's 10 a.m. here in New York City. We're about 30 minutes into the trading day. We've got stocks that are sliding here today modestly. The Nasdaq just barely lower. Off the highs as well, both Brent and crude are surrendering gains after surging the previous two trading days amid rising tensions between the U.S. and Iran. A tale of two automakers as Tesla makes big plans for its future in China. General Motors reports its biggest ever sales decline in that country. And retail apocalypse. Pier 1 becomes the latest big name to struggle as it reportedly plans to close nearly half of its stores. Welcome to On the Move. I'm Julie Hyman.
And I'm Adam Shapiro. We are getting some breaking news regarding economic data right now, and we're going to go to Emily McCormick for the latest on the ISM non-manufacturing number. Emily? Emily, I don't know if you can hear me. We know the ISM number came in.
We have the ISM non-manufacturing index beating expectations just narrowly. That coming in at 55.0 for December, ahead of expectations for 54.5. Now that's above the neutral level of 50 to indicate expansion in the non-manufacturing, also known as the services industry of the economy. This is also above the November reading of 53.9 that we had issued previously. Looking at some of the other economic data that we had just coming out moments ago, durable goods orders did slide more than anticipated in this November final print. Those down 2.1% versus the 2.0 that had been issued in the advanced reading in late December. Excluding transportation orders, durable goods fell 0.1% versus a flat reading in the advanced. And we had capital goods orders, non-defense excluding transportation, up 0.2%. So that was slightly ahead of that advanced print of 0.1%. And then capital goods shipments, non-defense excluding aircraft, down 0.3%, matching that advance print that we received in December. Now, this is one of those metrics that does factor into a calculation of GDP, so looking like we are coming in line with expectations. Earlier this morning, we also received data on the U.S. trade deficit showing that this narrowed more than expected to a more than 3-year low of $43.1 billion in November. That had been smaller than the $43.6 billion deficit expected and the downwardly revised $46.9 billion deficit from October. Julie and Adam?
Thanks, Emily. I appreciate it. Let's discuss those numbers a bit more with our panelists for the next 90 minutes. We've got Yahoo Finance's Rick Newman, as well as the chief strategist for Interactive Brokers, Steve Sosnick, joining us as well. And what this number seems to do is just reinforce the existing narrative that while manufacturing may not be doing well, the services side of the economy, buoyed by the consumer, is still carrying us along.
Can't argue with that. That's really been the narrative, and and it's one of these narratives that doesn't show signs of breaking up right now. 55 is a good number. It's not a rip-roaring, let's go crazy number, but I think that's probably healthier in a sense, just sort of a nice steady growth path for the non-manufacturing side, which manufacturing is a whole other story, which...
Yes.
Okay, so help us understand overall for the economy. If durable goods orders were off by 2.1%, if you take out transportation, it was down by 0.1%. What does that mean going forward in the context of the big picture?
Well, I mean, manufacturing, as much as certain, let's say, the politics highlight manufacturing, that's not really most of the
12% of GDP.
It's not where most of the economy is, and so the ISM reading today sort of continues the narrative that people are spending money on things that they want and need, not necessarily big ticket items in the durable goods category, or certainly not capital goods, where I think you have a divergence between where CEOs view the economy and where individuals view the economy, and I think this continues that mindset.
It's weird that it's actually called the non-manufacturing index, as if manufacturing is the baseline, which it used to be, right? Yeah. But it's not. I mean, as you point out, manufacturing like 10, 11, 12% of the economy.
Well, that's kind of like non-farm payrolls.
I guess it is, yeah. But I mean, it's just really just payrolls. This is, the non-manufacturing index measures a much bigger part of the economy than the manufacturing index. And that part is good. I mean, I think President Trump is very lucky that amid everything going on from impeachment, we still have a trade dispute with China, and now, of course, what's going on in the Middle East with Iran, consumers are still spending money.
All right. Well, none of this makes any sense unless you've got those numbers that you can use in context to make investment choices. So let's head to the floor of the New York Stock Exchange, where Yahoo Finance's Ines Ferre is standing by, looking at what's going on with markets and shares of Apache after a major oil discovery. What's the latest on that?
Yeah, that's right, Adam. Energy stocks today are down, but not Apache. Apache is up around 20% this morning after a major oil discovery offshore Suriname. That's on the northeast coast of South America. And analysts have described that well as one of the most anticipated wells in the world. And I was just talking to an energy trader here that said this is very significant for Apache. It was a bigger than expected discovery, and you can see that it's being reflected in the stock price this morning. And we're also this morning watching Goldman Sachs. This is after Goldman Sachs says it will make some changes to its main segments in order to highlight its consumer business. It will start reporting a new segment that's called Consumer and Wealth Management, and this will include Marcus Online Lending and also, of course, its offering that it has with Apple, its credit card offering as well. Right now, Adam, Julie, we're looking at the Dow that's down about 84 points. The S&P's down 9 points. Basically, the NASDAQ is flat right now.
Thank you, Inez. Well, one stock that's going up today is Tesla. The shares are in focus as CEO Elon Musk is on hand in Shanghai as the company delivered its first China-built cars to customers. A half dozen buyers drove away with new Model 3 sedans. Musk also signaled that Tesla plans to set up a design center in China, but he didn't give any details on that. There he was at the unveiling event as they started to sell the cars. It looks like there's some optimism around it with the shares up. Rick, what's your take on this situation?
Well, Tesla's been getting things right lately. They're operating sort of like a normal automaker without so many problems, and the CEO has not been tweeting controversial things lately. What I think is going on in Iran makes perfect sense. Excuse me, China.
China,
Sorry about that.
It obviously makes sense for Tesla to be in China because it is the world's biggest market for electric vehicles. There are a lot of subsidies by the government there. But, push this down the road a little bit, and as Tesla wants to sell cars around the world, it makes a lot more sense to manufacture them in China and export them from China to other parts of the world than it does to do it from the United States, just because it's cheaper.
But it still
it's
takes
much cheaper to build stuff there.
Okay, but what's the ramp up? Was it about 5 years? And when he talks about design center, don't the Japanese automakers, their design centers are actually, although headquarters perhaps in Japan, are out in California, but we're no longer, everything being designed for the U.S. market then goes.
I mean, there are two things going on. You want to design vehicles for the local or the regional market, but automakers are all global at this point, and so those vehicles have to be globalized. So you can do things like have a single chassis that you can put a bunch of different models on. They all do it now, so I don't know if that means Tesla will be designing vehicles that will be sold only in China. I kind of doubt it. I think
he said for
right,
worldwide.
He said they're eventually going to ship them.
Right, but a design center in China could mean designing vehicles for the Chinese market, but it could also mean just using Chinese designers who get paid less, who earn less and cost less than Americans.
Interesting. All right.
The real thing would come if they actually started importing vehicles from China back to the United States, which incidentally General Motors has done with an SUV called the Buick Endeavor. That is a little bit controversial, and I think we're not going to see that in large scale for some time, but it could happen.
Well, speaking of General Motors, they also released some numbers for China and said they had a big drop last year, or I should say in 2019, 15% drop. That's the biggest drop ever after a 10% drop in 2018. So that shows that, being in China is not an automatic win, right, when you look at GM sales there?
Well, they're still selling 3 million cars a year in China. That's a lot of cars, and that has been a big profit center for General Motors for some time. They've been in China for a long time, so they're one of the automakers that got in early, and they generally got it right. It seems like what's happening, that drawdown in sales for GM, just reflects what's going on in the Chinese market. I mean, the government there is withdrawing some subsidies. The economy has been slowing. It is hurt somewhat by the trade dispute with the United States. And they just have kind of a slowing car market there. We'll see if GM gets back on track in China, but I think they will.
Well, we see ups and downs in any market, but regarding China, I mean, the headline was always grow, 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 grow. Seeing this kind of number for GM, is it time to reconsider that maybe it won't always be grow, 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 and perhaps it might be plateau?
Absolutely. I mean, the Chinese growth numbers, first of all, a lot of the market takes them with a grain of salt. And so they've always had rosy numbers, but the growth numbers are less rosy than they'd been. There is potentially a huge indebtedness problem in China, and most cars are purchased, with some sort of financing. So it doesn't surprise me that maybe this China engine of growth story is sputtering a bit. And certainly big ticket items like cars would be one of the places you'd expect to see that. Tesla's got hype. I've said for years that Tesla is one of the ultimate faith-based stocks because, it moves based more or less upon its faith in Elon Musk. And to be fair, this year the faith has been rewarded somewhat because, as Rick mentioned, it's acting. They've done all the things that a real company would do, as well as all the stuff that Tesla would do. But as for an engine of growth, for the idea of just showing up in China and expecting stuff to sell, I don't know if that narrative holds anymore.
All right, we're going to shift gears because looking at Iran and the escalating tensions in the Middle East, which gave oil a boost in price yesterday, oil today giving back some of those gains in today's trading. You can see West Texas Intermediate is down quite a bit. Gold, by the way, is in focus as investors flock to safe havens, and gold has been trending higher today despite the fact that it would appear the tensions are easing. This comes as the funeral procession for General Qasem Soleimani was ongoing. With millions flooding the streets of Iran, there are reports that dozens of people were killed during today's procession in his hometown. Any takeaway on this that really stands out? Gold is higher. We've had people talking about gold going to $1,600 an ounce.
Well, the trend is sending you that way. There's a lot to unpack. I mean, gold is meant to be, in many ways you could think of it as the anti-dollar, you could think of it as a hedge against inflation or world events. Bottom line is, it costs almost nothing to hold gold. Your opportunity cost of holding gold is continually lower as you've had an easing Fed. So what are you giving up if you take money that would be in a, let's say in a CD and putting, safe money and putting it in gold, your give up there is very small in terms of your opportunity cost of holding. Oil down doesn't surprise me because there's been at least a day backing off of geopolitical. Plus, you just found a lot of it in a place that's not the Middle East. So that would tend toward lowering the price of oil. So there's so many moving parts in here. It's hard to just say that there's rallies in the streets of Iran and people are getting stampeded, unfortunately, to death and things like that. That's terrible. But the fact that gold is sort of a modest riser, it's had this great run, and I think it's largely on economic factors as much as the geopolitical.
Markets can't figure out where the risk is with regard to the escalating Iranian situation. So is there a risk to oil infrastructure in the Middle East? I mean, nobody knows. And everyone's waiting. We all sort of know what the range of options is for Iranian retaliation, and now everybody's just waiting to see what are they going to do.
Well, and I'm sure you've been watching, though, even on our side, there's not sort of a clear message, right? Because the White House in some cases is saying one thing, the military, the U.S. military in some cases, is saying something different. So even that is difficult to parse out.
This is the epitome of uncertainty. If there's anything good you can say about this from a market perspective, it's that the markets have been dealing with Middle East uncertainty, and actually far worse than this for a long time. There have been shooting wars, obviously, in the Middle East where the price of oil has spiked. But then every time we have seen the oil infrastructure remains pretty robust. And now we have other sources of supply, especially here in the United
world's
States.
largest producer now.
Yeah, so, the initial reaction to this was only, to my mind, only about a 4% rise in oil prices, which felt about right. If, I feel like 10 or 20 years ago, that price spike could have been 10 or 20% easily. And now oil prices are settling back down there's almost no fear premium in the oil price right now. And I'm not sure that's wrong.
Think of the lack of market reaction when they took out the Saudi oil facilities, and we rallied for a short period.
And that was a direct attack on oil infrastructure.
Absolutely.
And it was back online within days.
Yep.
All right, let's talk about a battleground here in the U.S. retail. Let's talk about Pier 1 Imports. As part of that, those shares are tumbling today after Pier 1 announced plans to close nearly half of its stores. It's reportedly nearing a bankruptcy filing. The home goods retailer has been struggling for years against rising pressure online and from big box rivals. We recently, by the way, spoke with former president and CEO of the American Apparel and Footwear Association, Rick Helfenbein. Here's what he had to say about the trajectory of retail.
Well, it is and it isn't. We have too much selling space in America, so we've been seeing a paring down. And yes, you are correct, Adam. 9,300 doors were announced to be closed last year, and there could be even more this year, which is a little bit of a frightening thought. But we're paring down.
So obviously, we've already seen a lot of stores close. We could see yet more close, Pier 1 being an example. What's the trading action look like in retail stocks these days? Are people just kind of backing away entirely?
Talk about an unloved sector.
Yeah.
Retail, it actually makes me wonder whether you really should be starting to think about which are going to be the survivors and
Target,
and start
Walmart.
to look at Target. But even is something like Macy's, which has been on the ropes and people hate it. If it's not going anywhere, maybe that's the time to look at it. The problem you have now is with the easy money that's out there and the demand for higher yielding credit, I think you're getting a lot of companies, and it's not specifically retail, but retail has a lot of them, sort of zombie companies that are hanging around a lot longer than they might otherwise. And Pier 1 sort of strikes me as one of those.
I'm thinking back to Pier 1 in the 80s and 90s. You could get inexpensive furniture. You could start your first household from Pier 1, but you can do that now at 1,000 other places. Yeah. IKEA, Amazon. Why does Pier 1 exist?
I bought something from Pier 1 once. I think it was in 1991.
Yeah.
I think it was 1991.
Our plates are from Pier 1. I'll fess up.
I haven't thought about Pier 1 imports pretty much since then until I saw the headline.
You know what I think when I hear Pier 1? Wicker.
Yeah,
that's what I bought. That's what I bought.
They have so much
and then we have plain white China plates that on the back, Pier 1, made in China.
Yeah.
Exactly.
Yeah, so it's not just the internet that is displacing companies like Pier 1. It's IKEA, by the way.
Yes.
That's another big one. you know, you said, you know, you were talking about these zombie retailers. We're going to have a recession at some point, and they're going to all die.
Yeah.
And that's just good. It's going to be sad, but they're going to. I mean, I like Macy's. I hope they make it, but these companies have been barely hanging on while consumers are in a spendy mood. And when that changes, I think a lot of these retailers
I
are
like that, a spendy mood.
It's not just the consumers, though, it's the investors who are keeping the bonds afloat.
Interesting.
Coming up, holding steady why stock market volatility is muted despite the rising tensions in the Middle East. We're going to dive deeper on that. Plus, before we go to break, take a look at some of the biggest losers in the Dow today. And there you see Merck, Chevron, Exxon, Intel. They are dropping.
Let's take another look at the market picture and what's going on today, because it looks somewhat similar to yesterday in that we've got the Dow lower, we've got the S&P lower, but oh, looky here's the NASDAQ peaking once again into the green, just barely to be fair. And we saw it trend lower after a little spike at the open, but now going back into the green. What's going on today? A big focus on semiconductors, which we're going to talk much more about later, but I do want to dive a little bit into it first. First of all, you got the Philadelphia Semiconductor Index up 1.6%, even as we have overall markets that are little changed. What's going on here? A number of different factors. We had positive earnings from Microchip Technology. That's helped lifting things. We've got a new chip that AMD rolled out at CES. Remember, AMD was the big outperformer in the S&P 500 last year, up some 150%. A number of different analysts raised their price targets on it this week, saying it's got further to go in 2020, which is pretty incredible if you think about the performance last year. And then we also have some analyst calls on some of the memory chip makers. So Micron Technology is up by 1%. Western Digital also. Both of them were upgraded to outperform from market perform at Cowen, which talked about an improved view toward memory chip pricing. So this potentially good news. Semiconductors are seen as leading technology, of course, then also seen leading the overall market. So it's an interesting sign here as we get underway in 2020. As I said, we're going to talk much more about this, just about 40 minutes from now. And in the meantime, we'll be right back. Well, despite current tensions between the U.S. and Iran after the assassination of Iranian General Qasem Soleimani, the VIX index has remained relatively muted. Steve watches this very closely, so I wanted to talk to you about it. I think the highest we saw it get over the past few days was, what, 16 or something?
Give or take, yeah.
Which is, I mean, you would think with these tensions like this, it would be going higher. What's going on?
A few things to unpack. Market, as we've discussed earlier, markets don't really know what to do with geopolitical events. Markets know what to do with earnings, with sales, and with a couple of industry exceptions, such as defense and oil. No, but what does this mean to like the semiconductor industry? What does this mean to the FANGs that are driving the market? So you had this, you know, the panic of the panicky part of the sell-off lasted until what, 9:45 on Friday. And so you're in a generally bullish tone. You still have the Fed behind you. You still have the Fed doing the repo operations. And so you still have the buy the dip mentality in there. And that tends to mute these sell-offs and keep the VIX relatively manageable.
Help put this into perspective, or if it's way off base. How does a computer algorithm, which might be driving some of this trading, account for geopolitical uncertainty, whereas it can account for a Fed move?
It doesn't, and that's the problem. What will happen is, basically, if you're, let's say, doing a news reading type of algorithm, and you say, okay, you know, assassination in Iran. This is bad news, and it does go toward the preparation that's involved, and this is where it's sort of dangerous for individual traders to trade off this kind of news, because if you're coming at this without a game plan, there's thousands of other people with the game plan already, so you don't want to be too reactive to it. But buy the dip has worked. And basically, that's what it is. First of all, if you've got the gamma, if you're long put options, effectively you would hedge that by buying more stock or index or whatever you're short. Secondly, buy the dip is going to keep working until it stops working. And I know that's a stupid sounding thing to say, but that's really how it goes.
And is that going to be then what we're going to see stay in place for 2020? What would cause it not to work anymore?
I think what happens is right now, I think sort of the unsung hero of the markets has been the fact that because of these repo troubles, which are still, I don't really know what they're, nobody really knows what caused this problem in the repo market. The Fed was very responsive and put a lot of money into the markets, and you've seen the Fed balance sheet jump. That's probably the biggest input to a lot of trading models and pricing models. Oh, there's money coming in. There's money behind us. The Fed's got our back, which they kind of do, even though explicitly they're saying we're not doing anything. The flow of money is telling you they are. Until or unless that breaks, that pattern tends to hold. A lot of when you mention the machines, Adams, machines know patterns, and they keep staying with a pattern as long as it's a winner. And but when it breaks, who knows?
All right, so we'll keep watching the VIX, but we're also watching American Airlines. They reached a confidential agreement with Boeing over damages incurred last year due to the grounding of the airline's 737 MAX aircraft fleet. American grounded its planes in March after those two fatal crashes that killed 346 people. Those were other airlines that the planes crashed. Joining us now is Alexis Keenan. And so what does this mean? Why would this be confidential? Why wouldn't they give us the number?
You know, Adam, usually these deals are confidential, and Boeing has a lot more work to do on this front. They have to reach agreements with many, many airlines that had already taken deliveries and are awaiting deliveries of the MAX aircraft. But as so far, we know that American has reached this settlement. So has, according to Reuters, Aeromexico. These deals, as you said, confidential. What they cover is financial damages for the 2019 grounding. Anything coming in the future, that would have to be negotiated at a later date. In a press release, American said that these payments will be received over time, actually over several years, but that it will include a $30 million chunk to go into its profit sharing program with its employees, and they expect to distribute that money to employees in March of this year. They will also, they reportedly said that they would continue to talk with Boeing for any ongoing negotiations as the grounding continues to affect American and other airlines. Also, Boeing is reassigning employees that work on the MAX. They have approximately 3,000 employees that work on the MAX in anticipation of that production line shutdown that's supposed to happen sometime this month. I talked to Boeing earlier this morning. They would not give me a date on which the production stop down will take effect. They said they might have some information later on today, but they really want to let employees know what's going to happen before they let external media and others know about when that date and when those reassignments will happen. They said that the employees will be reassigned to work on wide-body aircraft in their Everett, Washington facility. That's the 777, 787, 767, and the 747 aircraft. We're hearing that Spirit AeroSystems, now this is a supplier to Boeing. They're responsible for making 70% of the 737 fuselage, so a huge supplier for Boeing. They are reporting that they have offered all of their union workers a voluntary layoff. In a letter from the CEO that was posted by KSN News, the CEO said that they anticipated that these MAX production rates would be lower from what they said, quote, an extended period of time. That letter also said that Spirit did not have any clarity as of yet on the timing for resuming MAX production or a firm production rate schedule, even when the production line does go back into effect. That company's stock fell 16% in December. Adam?
Thank you very much. Coming up, cyber threat, why Iran is more likely to retaliate against America's weaker allies. Plus, a British astronaut shocks the world, proclaiming there are definitely aliens and they could actually be living undetected with us on Earth. Happy Tuesday, 10:30 here in New York City. We are 1 hour into the trading day. You can see stocks are trading down once again. Take a look at oil. Oil has been coming down as well off of the highs we saw earlier because of the situation in the Middle East. Threat of retaliation, why the U.S. is not prepared for a cyber attack from Iran. Less work, more play. Finland's prime minister is proposing a 4-day, 6-hour work week, 6 hours a day, but a 4-day work week. A toxic addition. A Harvard study finds a harmful toxin in Juul's vape pods. Welcome to On the Move. Shares of Microchip Technology are surging after the company raised its fiscal third quarter revenue guidance. Inez Ferre is on the floor of the New York Stock Exchange. Inez?
Adam, and it's the second time that the company raises its guidance in a month, and this stock hit a record intraday high this morning after raising its third quarter fiscal revenue guidance, believing that its orders had hit bottom back in December. And we're also this morning watching AMD after it unveiled a new processor at the Consumer Electronics Show in Las Vegas aimed at the thinnest and lightest notebooks. AMD is predicting that its processor will surpass its rival Intel. And also, we're watching this morning Micron and Western Digital. Both of these stocks hit 52-week highs this morning after both were upgraded at Cowen to outperform with a price target increase for both. The analyst is predicting that demand for chips and memory devices will keep recovering in 2020. Adam, Julie?
Concerns have escalated over a possible retaliation from Iran in the form of a cyber attack following the airstrike that killed Iranian General Qasem Soleimani. The Department of Homeland Security warned of temporary disruptive effects against critical infrastructure in the United States. Joining us from the newsroom to break it down is Yahoo Finance's Ethan Wolfman. Ethan?
Hey, how's it going? So essentially what we're having here is a lot of risk at both companies and allies of the U.S. There's not a ton of risk for a cyber attack to hit American military installations because that would likely result in a very extreme use of force, probably more than Iran would like to have. They're kind of wanting to appease their people who are extremely furious over what's happened. But I think one thing that is especially interesting is that companies are not particularly prepared. There's been a lot of box checking in terms of cybersecurity in the past, and Iran is a very, very good actor when it comes to cyber attacks, and their state-sponsored capabilities are extremely serious and something that all companies, as well as allies that may not have the same kind of defenses that kind of American electric grids or financial systems or military bases have. So this is something that everybody probably should be concerned about going forward. However, the New York Times just reported that kind of in a break from the proxy method, usually Iran doesn't like to actively attribute its attacks. It kind of plays things cool. Going forward may be different. Nobody really has any idea, but the Supreme Leader said that they would like to sign their name on some stuff, and so I think that's something that kind of adds a level of uncertainty to what's going on.
Ethan, thank you very much. Let's talk about how companies and governments can prepare for a possible cyber attack and from whence it might come. Marsh & McLennan Company's Executive Vice President and General Counsel, Peter Beshar, joins us now. Peter, thank you for being here. Ethan was talking a little bit about the history from Iran and that has been an effective actor when it comes to cyber attacks. What does that look like, and what's their current capability or what we know of it?
Sure. To gauge what may come next, it's helpful to take a brief step back. That it was a decade ago that the Stuxnet virus really caused havoc in the Iranian nuclear program. Stuxnet is a computer virus, a form of cyber attack that disabled thousands of centrifuges that were enriching uranium for the Iranian program. And so after that setback, the Iranians really set out to expand their offensive cyber capabilities. And U.S. intelligence officials now really talk about the big four of China, Russia, Iran, and North Korea.
And so when we are sort of bracing ourselves for a potential attack, what are the places to look for, and are U.S. assets adequately defended against this kind of thing?
What's striking, Julie, is the rise in the sophistication and intensity of the attacks that have been attributed to Iran. So it started out principally with wiperware, as the name sounds, that wipes data away from your computers. There was an infamous attack on Saudi Aramco, now the world's most valued company, that wiped away the data on 30,000 computers. And from that, Iran has really turned its sights onto attacks on the industrial control systems of different aspects of critical infrastructure.
And in some cases, they've succeeded, right?
Absolutely. Here in New York State, for example, there was an attack on a dam upstate. And more recently, in 2017, there was an attack on a petrochemical plant in Saudi Arabia using a form of malware that was called Triton. And Triton's been described as the world's most murderous malware because it goes right at the core operations of a aspect of critical infrastructure and then can override the safety controls.
All of this makes it sound like we are not prepared if they indeed have been successful in the past, unless we've learned from those attacks and have managed to defend against, to tweak the systems and defend against future ones.
I think that's precisely it. One of the areas where there really has been progress in the U.S. is the partnership between industry and government. That if you look back in time, there was a decent measure of distrust, or at least not a lot of collaboration. But in the United States, 80+% of aspects of critical infrastructure are owned and operated by the private sector. In many other countries around the world, in Europe, in Asia, in Latin America, the public sector controls a lot of those facilities. So if you're really going to enhance the cyber resilience of the United States, it's critical that that dynamic between industry and government really gets enhanced. And there are law enforcement agencies like, I think the FBI deserves a particular shout out for just really reaching out into the business community and enhancing the connectivity so that if there is an attack or an attempted attack, then the forms of that malicious software or the threat intelligence is shared in a reciprocal fashion.
At the same time, do you think that there's sort of a coordinated enough response that's prepared? Because I know you've pointed out in the past, you have FEMA to deal with natural disasters, but there's not sort of a single government agency, or I don't know if it would be Homeland Security or one of the other agencies that would take responsibility for this, or does there need to be an agency?
I think there should be, that if there is a major hurricane or an earthquake, it's pretty clear that FEMA will be out front. Lots of other people will support the effort, but FEMA will be in the lead. If there truly was a digital catastrophe, a cyber catastrophe, the power grid is knocked out, a major attack on an energy plant and the like, which government agency would truly take the lead? I think there should be greater clarity around that.
And do you think that there is enough expertise at the federal level at this point to even deal with that?
Clearly, it's getting better and better. If you talk about the FBI, cites better. Department of Homeland Security, it's been a little bit distracted on immigration issues, obviously, but cyber is a key part of their mandate in the interactions as a civilian portal to the business community. Obviously, the military capabilities of the U.S. are a dramatically different issue.
Peter, it's great to get your perspective on this. Thank you so much for being here. Peter Beshar of Marsh & McLennan, thank you.
My pleasure, Julie. Thank you.
Well, coming up, more sexual assault charges were filed against movie maker Harvey Weinstein. Plus, before we go to break, let's take a look at some of the top trending tickers on Yahoo Finance Day. Salesforce got a lift yesterday, and it's extending that gain today.
The Los Angeles County prosecutor filed rape charges against movie mogul Harvey Weinstein. The 4 counts include forcible rape and sexual battery and carry a total 28 years in prison if Weinstein is convicted. He's on trial in New York City on charges of rape right now. Japanese prosecutors issued an arrest warrant for Carol Ghosn, the wife of Carlos Ghosn, who jumped bail, as you know, and fled Japan recently. Carol Ghosn is an American citizen and could face extradition from the United States if the Japanese pursue that. They say she lied when she testified before a Japanese court last year. Emergency crews in Puerto Rico are trying to restore power after a powerful earthquake hit just off the coast of the island. It knocked out electricity across Puerto Rico after triggering automatic safety shutdowns at power plants. It also killed 1 person and caused heavy damage in some areas. The new prime minister in Finland has proposed a 4-day work week of 6 hours a day to help people spend more time with their families. Experiments on shorter work hours and working days in a week in other countries have shown increased productivity as well as happier employees. Britain's first female astronaut says aliens do exist and some may actually be living alongside us here on Earth. Helen Sharman, who spent time aboard the Soviet Mir space station in 1991, granted an interview in which she said, "Aliens exist, there's no two ways about it," adding, quote, "It's possible they're here right now and we simply can't see them."
A C-suite shakeup at Juul. Its newly appointed CFO, Guy Cartwright, will become the company's chief transformation officer, while its accounting chief will step in as the interim CFO. This comes as Harvard is out with a new survey, a new study that shows Juul pods could cause lung damage in the long run from a fungal toxin called glucan. Here to explain more is Yahoo Lifestyle's Abby Haglage. And let's start with the executive change first, Abby. Thank you for being here. So he's called the chief transformation officer, but I mean, what are they going to transform into?
I think that's $1 million question. They have a lot that they need to transform. Juul is in hot water. They came out with a product that they promised was harmless, that they marketed to teens, and that they told regulators was essentially a way to get smokers to quit smoking. And what has ended up happening is a group of millions of teens being addicted. You have people going to the hospital for acute lung injuries who may have started with Juul and transferred there. And then, you have this company who is essentially still on the market and struggling.
But when you mention the teens who've gone to the hospital, are we talking about those who are using the black market cartridges filled with unregulated and impure products that led, because that's what the CDC has said, because Juul comes out, there's that other study from Harvard we're going to be talking about a little bit, that points out that there are some things, but it's not that.
Sure. Yeah. I mean, and that's part of the transformation. Is Juul has really tried to distance itself from the acute lung injuries smartly, because a lot of those have come from the black market. People are, buying vapes online. They're buying them from unmarketed sellers, and they've been contaminated with what we now know is vitamin E acetate. Juul is not necessarily a part of that, but I think where Juul comes in is that they got sort of, this whole demographic of kids addicted to nicotine who may not have gone for cigarettes in the first place, and that's really where the problem lies.
Does Juul face legal liability that could be an existential threat, such as Purdue Pharmaceuticals?
Absolutely. I check in on their lawsuits. I think early on I was counting, and I've lost count of how many lawsuits they have. In the past, I looked this morning, in the past month, they've had over 100 lawsuits filed against them. So you have states suing them, you have companies suing them, you have multiple school districts in many different areas of the country who are saying, our teachers can't deal with all of the kids that are addicted. We don't have the resources. I mean, they're being attacked from every angle.
Juul is the most sort of public face of this, especially that caters to teens. But there are other providers of this stuff also, right? So at some point, even if, say, Juul goes under because of all of these legal troubles, what happens to some of the other stuff that's out there on the market?
Another great question. I mean, I think that the issue here is that these kids have gotten addicted to nicotine, kids and some adults too. And analysts are starting to really say that, if these e-cigarettes are taken off the market, that there could be a huge shift back to cigarettes in a demographic that wasn't going to use them in the first place. And I think it's interesting to note that Juul, a 35% stake is owned by Altria, who is big tobacco. And people are starting to speculate, did they see this coming? Did they, think, oh, this is a good product for us because this is getting nicotine out there? They said we'd like to get people off of cigarettes, but it might work in their favor if that happens.
Leading into the Altria question, are we not potentially looking at another Joe Camel situation, which was very detrimental to the tobacco companies overall? And I would have liked to have thought that Altria would have learned from that one, but it sounds like they're repeating those mistakes.
Potentially they are. I mean, I think that's the problem right now, is that there's so many mistakes being made, and Juul is starting to kind of own up to that and say that they marketed in the wrong way and they've done a lot of things wrong, but I wonder if it's too little too late.
I want to talk about that study.
Okay.
That we were mentioning, the Harvard study. So you have the vitamin E acetate issue, which is linked to mostly the illicit vapes. Then you have this new Harvard study that looks at this fungal toxin and says this could cause inflammation and longer-term effects. What do we know? I mean, it hasn't been on the market that long, so what do we know about
The problem with the Harvard study is that those effects don't show up for several years
Right.
until after you use.
Absolutely. This study is huge. It's just landed, and essentially what it is, it's a follow-up to an April study that these Harvard researchers did. They tested 75 different e-cigarettes. They found toxins in 80% of them that were very dangerous. You know, the American Vaping Association came out and said, well, you didn't test recent ones. You didn't test Juul. I talked to the researcher yesterday. He said we went out and bought a bunch of Juul pods, and they tested the Juul pods, and then sure enough, they contain this toxin as well. And you're exactly right that the effects of this may not be seen for years and years down the line. So it could be extremely detrimental to these kids.
Kids don't vape.
Exactly.
All right. This is like the new anti-drug campaign. Thank you so much, Abby. Appreciate it.
Thank you.
Coming up, cracking down on deep fakes, how Facebook plans to fight back against fake videos. Plus, before we go to break, we want you to look at some of the most active stocks by volume on Yahoo Finance today. We were talking about Avon and Natura, which bought Avon yesterday, but take a look at this. All right, word on the street. We're going to check in with our panelists and find out the stories that they are watching. And Steve, your word of the day, geopolitics.
It's a great word. Sadly, I wish it was more relevant to the markets, as we talked about earlier, that these are the most important world events out there, and they could be shaping the years to come. And somehow the market just is in its own little world and says, well, I don't know how geopolitics affects sales at Apple or any of the things that have been driving the market forward. And so the market has been conveniently somewhat ignoring them. It's background noise. And these are the kind of things that are background noise until they're not. And the problem is what makes that change? That's the multi-zillion dollar question.
This Iran situation is not the only time it's been, right? I mean, look at Brexit, for example.
Yeah.
Brexit is just so complicated to investors in the UK, let alone outside of the UK, that it seems like people just kind of throw up their hands and don't trade on it at all.
You know, as I think about it, there's the known unknowns and the unknown unknowns. Markets are okay at dealing with the known unknowns, earnings, dividends, all the stuff that markets are used to, interest rates. The unknown unknowns, they really throw their hands up, and it's like, how does this impact the set of inputs that we have that let us value shares? And ultimately, they give up and sort of put it in the background until or unless something intrudes on that model.
Right. And Rick, you are looking at the Carlos Ghosn saga.
We were all talking about Carlos Ghosn until that U.S. airstrike killed the Iranian general, but we will be talking about him again. He's going to have his press conference in Beirut tomorrow. And he's going to tell his side of the story. I think we all want to know the details of how he got out of Japan and ended up in Beirut. He's probably not going to say that much about that. But I think he is going to address the substance of the case against him. He will, in theory, explain why he thinks he's innocent. And I've been asking some people in the auto industry whether Carlos Ghosn can ever work again in the industry. And, you know, he's extremely talented. He's a turnaround expert. He saved Nissan from bankruptcy. I'm sure he has almost bottomless knowledge of the auto industry and global supply chains. And people tell me if he could somehow get cleared of these charges, yes, absolutely, he could work again in the auto industry. Maybe not at a public company, but perhaps in private equity. There are some big private equity firms in this space. But if he does not get cleared, he's just going to be toxic.
The Japanese are talking about perhaps trying him in absentia, but if they were even inclined to go towards clearing him, why would they issue the arrest warrant against his wife, who is not in Japan? But
it seems like they just a pro forma thing, like they have to. I mean, is there any chance that so they're in Lebanon right now. They don't extradite. They will not extradite either one of them to Japan. They both have French citizenships, but France, I think, will not extradite them to Japan either. So could either of them, you know, if they're risky enough to travel globally, could they get snatched in an airport somewhere or something? I guess. But I mean, I think Japan is just doing damage control at this point. I mean, it's a huge embarrassment that they lost Carlos Ghosn.
It's sort of hard to visualize Japanese commandos snatching Carlos and Carol Ghosn.
I agree.
I don't know.
I agree. I mean, this whole story has become quite fanciful. So it does seem like anything is possible, doesn't it?
It does. All right, well, stay with us because coming up, Silicon Valley meets Sin City. We're live from the Consumer Electronics Show in Las Vegas. Plus, a quick programming note. Today is the 1-year anniversary of Yahoo Finance's 8 hours of live programming, and there's a lot more to come in 2020 and in 2 minutes. So we'll be right back.
up on 11 o'clock in New York City. That means almost 90 minutes into the trading day. Again, a mixed picture right now with stocks. The Dow and S&P 500 are negative, but the NASDAQ is positive. That was the same scenario yesterday, and then we saw what happened towards the closing bell. Take a look at the 10-year Treasury yield. It is rising, 1.81%. Taking action, Facebook bans deepfakes ahead of the 2020 election, but don't expect all altered content to disappear from the social network. Chips surge from AMD to Micron. Find out why some big names are jumping this morning. And recording record sales with style. We'll talk to the CEO of Rolls-Royce Motor Cars about the automaker's big year, and we will not ask him to pass the Grey Poupon. Welcome to On the Move. As a reminder, we are now coming to you live every day from 10 a.m. to 1 p.m. Eastern. I'm Adam Shapiro.
And I'm Julie Hyman. Thanks so much for being with us. Facebook is cracking down on deepfakes on its platform. The company announced it will ban some videos that have been manipulated using AI, but it will not remove all doctored content. Joining us with more is Akiko Fujita. So, Akiko, it's AI altered stuff, but not other altered stuff. I mean, how are they going to distinguish?
Yeah, so I think it's important to note when we talk about deepfake technology, it's video that's altered using deep neural networks. And I use that very technical term because so much of the doctored content that's out there has all been lumped together to say these are deepfakes. So here's specifically what Facebook has said. They're going to take down edited or synthesized videos that are edited or synthesized in ways that aren't apparent to an average person, product of artificial intelligence or machine learning that merges, replaces, or superimposes content onto a video to make it appear authentic. They will not remove content that is parody or satire. And this policy also doesn't include video edited solely to omit or change the order of words. Now, think about what kind of video that's out there right now. That's the second half of what we said. That's still going to be up there. So Nancy Pelosi is one example we use often. That was a video that was slowed down, not using AI to make it seem like she was drunk. Over the weekend, we saw this video circulating of Joe Biden. It was edited in a way to make it seem like he was making racist comments. Facebook has specifically said, if it's edited words, that doesn't fall under this new policy. So we're talking about very specific video, but it does go a little further than what Facebook had before.
Well, explain to us why this isn't Facebook throwing a rock into a hornet's nest for the reason you just said. If you can still put in falsehoods and post it to Facebook, what good is this?
Well, that's a good question, right? I mean, I think this is Facebook setting itself up for where video is going. So ultimately, it will be a lot of AI video, AI-generated video. And think about a few weeks ago, we were talking about some of these images that were on Facebook that were generated by AI. They were faces of people that didn't actually exist. And they did take that down. So in some ways, this is Facebook prepping for the future. But the reality is the video that's online right now is not deepfake. It's not generated by AI. These are very easily doctored videos that are at home, and so that are being created at home.
So, dumb technology question. So, is Facebook saying that they have the technology to automatically detect when these videos have been altered?
So, yes and no. So this is a constantly evolving thing because the technology is evolving. So Facebook teamed up with companies like Microsoft, universities like UC Berkeley, to say we are going to democratize the tools in place to try and detect some of these deepfake technology. Because the reality is, those who are creating these videos are far ahead of those who are trying to detect it. And so Facebook realizes, just like the US government and DARPA, who's had a team in place to try and detect some of this video too. So this is kind of an all-out war, if you will, to try and track it down. Now, there is a thought on the other side that says, you're not gonna catch all these videos. And so what you have to do is watermark real content so that people know this is genuine.
I will postulate right here that there is no way artificial intelligence can tell the difference between parody and satire and serious disinformation because a lot of humans can't even tell the difference.
Well, and this, by the way, goes to the top risk from Eurasia that it released yesterday, that there is going to be a credibility crisis
on our election
in the United States or surrounding the election because people aren't going to know what to believe.
And also, a lot of this is subjective, right? One person can consider it a parody or a satire, and the person who's being targeted, Mark Zuckerberg, for example, who did have a deepfake of himself, can say, no, this is misinformation.
No, I wouldn't agree with that.
So there's still, I think this still leaves a big hole out there. There's a big loophole. You look at companies like Google and Twitter who said, look, we're going to take down political ads, or we're going to at least eliminate the micro-targeting. So Facebook's still a little behind on that front.
Okay, the people who might be able to come up with this technology, they're all gathering for the biggest annual showcase for technology underway in Las Vegas. It debuts future products and reveals the trends that will shape this year in tech. Joining us from CES is Yahoo Finance's Dan Halley. Are you having fun?
It's fun. It's Vegas, so, you know, everything's overpriced.
It's Vegas, baby.
All right, so you've got a phone you want to tell us about. And it better be cool.
It's pretty cool. This is from a company called OnePlus. It's the 1+1 concept. It's a phone wrapped in the leather from the $300,000 McLaren 720S. It's also got vaporized 24-karat gold around its edges, and it uses electrochromic glass that basically sits on the back. And when it's not in use, this glass is completely opaque, and it covers up the 3 cameras on the back. And basically, OnePlus says that the reason for that is they want to keep the aesthetic of a sports car while kind of covering up those lenses and still giving you the ability to have multiple lenses. When you go to activate the camera, it sends a surge of electricity through that glass, and it uncovers it, basically. It makes it clear again so you can use it. Completely pointless, really. It's just for aesthetic reasons. It really is a beautiful phone. We don't have pricing yet. There is one feature that it gives you. There's a filter that you can use. It's called a ND filter, and basically what it does, it keeps your photos from looking overexposed. So say you're taking a shot like the one behind me, and I'm very pale, obviously, and there's a lot of white, and you know, it'll get brighter in the day. That might be overexposed. And so this ND filter would prevent that by using that electrochromic glass on the back. We don't really have much as far as performance goes. It's going to be the same, more or less, as an existing phone that they have with McLaren. But really, the big thing is this glass. Again, the leather from the $300,000 sports car, and then, oh yeah, the 24-karat gold. And what better place to show that off than Vegas?
Hey, Dan, obviously the stuff that you can see and touch gets a lot of attention out there at CES, but also a lot of the innovation is coming from what goes inside the various devices and what powers them. And I know there have been some unveilings and launches on that front also.
Yeah, I mean, really what we're looking at here is some new chips from the likes of Intel. We've heard a lot from Qualcomm. They're talking about, improvements to auto sectors. And then, of course, we're waiting for Google's announcements. They're right behind us, obviously, in the giant Hey Google shot. And really, those are kind of the inner workings of the devices that we're going to see. Improvements to things like Google Assistant, Amazon's Alexa. I mean, there's a freaking Ferrari inside, literally sitting inside with a big Amazon Alexa sign saying, Alexa works with, Lamborghini, so it's ridiculous. You can see all of these different devices here, and really we're trying to get a feel of what's going to actually come out and what's basically snake oil. I would say 75% of the stuff here is snake oil, 25% we're actually going to see come to market and we'll have in our hands.
All right, well, we'll count on you to suss all that out for us and tell us what's what. Dan Halley joining us from CES in Vegas. Thank you. I want to talk more about chip stocks a little bit because he mentioned some of the rundown there. AMD is another company that is introducing a chip there at CES. That stock's up today after already having an amazing run last year and hitting a record just a couple days ago. You see Intel down a little bit. NVIDIA and Micron are trading higher. There was an upgrade from Micron and Western Digital. Microchip Technology came out with a positive forecast. I'm curious your take on chips, Steve, because they are sort of a leading group, right?
They are, and their narrative really hasn't changed. They've had a good narrative for a while. There has been tech spending. If you think about the broader geopolitical stuff and the interviews that you had earlier today, people are going to need to spend more if there's cyber risks out there. That actually benefits the chip sector, and so there's really not much that's going to disrupt this. And the results that are coming through have been very positive. And if AMD can innovate, that benefits incrementally that benefits them versus their competitors. But it does eventually benefit the whole industry because people have to continue to innovate.
But for those people who might be considering investing in chips, do you want to, when you're looking at a company trying to evaluate, do you want to look at, do they have a cross kind of platform for both mobile, 5G, even PCs. They were supposed to be dead by now. They're not. Flat. But or do you want to go to somebody who might be cutting edge ahead of everyone else?
I hate to give an answer with depends, but it depends. I mean, you know, something like a Qualcomm, which has been very good about getting their chips into sort of all sorts of interesting places. That's much more their strategy.
Or do you just buy the SMH, for example, buy a semi ETF?
That's probably in many ways the best way to go if you're not an engineer, because this way that does a lot of the dirty work for you. If you believe in the sector, that's when it's appropriate to get involved in a sectoral index or a sectoral ETF.
So Steve, are semis out of the woods with regard to China issues? The market thinks so.
Market seems to think so. The market may be a little sanguine on that one. I think that nobody. I think saying somebody's completely out of the woods is always a little difficult, and that comes to get you in hindsight sometimes.
Yeah. Where do
also
the Chinese stand in the ability to make their own chips, and they don't need us? I'd be very careful if I were being led to buy into some of these stocks.
And that's probably the biggest existential risk to the sector is that some competitor who's not part of SMH. Competitor or competitors come on the scene, from China, let's say, and threaten the North American semiconductor industry, or
Huawei's already building phones with its own chips, not the ones that they used to get from the United States. But the chips I'll keep are Ruffles because it's got ridges. So it's the potato chips are what I like. Sorry, I'll keep my day job. No more comedy. Let's go to the markets. Goldman Sachs has renamed its main business units and added a new consumer and wealth management segment. Inez Ferre, save me, please.
Adam, these changes come ahead of bank earnings, which kick off next week, and Goldman Sachs is really highlighting their consumer efforts here. They'll start reporting a new segment called Consumer and Wealth Management, and that segment will include Marcus online lending and also, of course, their credit card offering, which they've been doing with Apple. And as you guys have been mentioning just now, chip stocks doing very well. Well, the NASDAQ has flipped into the green, and the best performers on the NASDAQ right now are Western Digital hitting a 52-week high. Micron also hit a 52-week high. This is after both of these companies were upgraded at Cowen to outperform with a price target increase for each of those. And the analyst is expecting for demand for chips and memory devices to just keep improving in 2020. Also, another top performer on the NASDAQ being Microchip Technology, hitting an all-time high this morning after raising its fiscal third quarter revenue guidance, with the company believing that its orders hit bottom in December and that they'll only improve in 2020. Adam, Julie?
Thank you very much, Inez. Well, let's talk about big tech. 5 of the largest tech-related stocks now count for close to 14% of the U.S. market. So how should that play into investors' strategy? We're going to talk about that a little bit. The FANG stocks, basically, is what we're talking about. And it's interesting. We had a talk with J.J. Kinahan from TD Ameritrade, competitor, I think, yesterday, who talked about that some people had lightened up some of their FANG exposure last year. We saw that in the markets as well. What do you think happens with the sort of market reliance dynamic with the FANGs this year?
I think a lot of it is going to be somewhat rhetoric driven, because really when you think about it, step back and say, what's really going to upset the apple cart for a Facebook or a Google or some of these names? And I think if you start to get the backlash on the campaign trail about re-regulating these type of companies, that's a big risk that's out there. My son read the Surveillance Capitalism book and has me changing all my opinions, and now that's from a young person's point of view. But if that starts to percolate upwards, that's one of those things that could provide the risk. And also they're still not monolithic. I still don't see the value of lumping Netflix in there right now with let's say a Facebook or Google or an Amazon, which you
Microsoft should be in there.
Absolutely, right? But it doesn't make a cute acronym, or maybe
if you break them off, I'm going to use a term we used to use for oil, but it proved to be wrong. Peak oil.
Yep.
Why isn't there a peak social media, for instance, like Facebook or Twitter? Why don't we have that discussion about how much more? I mean, there are 8 billion people on planet Earth, so yes, there's potential growth. But why isn't anyone talking about at what point do you reach that saturation where the advertising dollars are also going to peak?
So That's a hell of a question.
Not yet.
Yeah, not.
The answer is
I
not yet.
don't know that we're there yet, but I think that's great. I think that's a great concept.
And there are also still so many people who aren't even connected, right? So there's still always those.
Well, that's when you get Google and Amazon and everybody launching their own satellites
Yes,
to
exactly.
connect. But
Thinking about, like, you know, with what Akiko was saying about Facebook, they've clearly made a decision that, you know, we want people to be able to put up their amateur content because, you know, we feel that's engaging people, and which is why they're trying to draw these very fine lines about where, you know, what you can and can't do, and a lot of that, when you think about it, is what is going to drive traffic to their and engagement on their site, and ultimately that's their decision process.
All right, let's bring Craig Burke into the conversation. He's the Chief Investment Officer at Personal Capital. He's joining us via Skype from San Francisco. So Craig, when we're talking about this dynamic of the FANG stocks in the market, I know one of the things you point out is if people are buying one of these, they have to be aware of their weighting in the market. So for example, if you own an S&P 500 ETF, you already have pretty heavy exposure.
Yeah, hey, good morning. Yeah, one thing that we see a lot among millions of users of our software is that a lot of investors will own an index fund, and now you've got these top tech stocks there, and then people will add additional positions on top of that, and before you know it, you've got a third of your portfolio in just a handful of stocks.
Had some guests who've come on who've warned us to beware. We were talking about the FANG stocks, and we talked, one way to avoid that might be, when you're talking about technology and microchips going to one of the ETFs. But what advice do you have for people who are still gung-ho, very bullish when it comes either to chip stocks or to FANG?
I think the main thing is just to understand your exposure. It's fine if you want to be gung-ho, but you got to know the risks and know what you own. And again, we just see it's been this whole decade of one theme, U.S. and growth and tech. And so some people forget that could go the other way too, and that there are other parts of the market worth owning.
All right, Craig Burke, thank you very much for joining us on The Move. Coming up, progress in Hollywood, what's driving a record number of women behind the camera. Plus, before we go to break, take a look at some of the biggest losers in the Dow today. All right, stocks on the move in midday trading. Let's talk about Nordstrom. We've talked about retailers and the pending retail apocalypse, but Nordstrom actually up today almost 3%. Part of the reason Matthew Boss over at JP Morgan has upgraded that stock from neutral. And also, they have 34% of their sales are coming from online. They apparently lead their competitors like Macy's and other traditional department stores, but of course we know Target and Walmart are very big, but we're getting real numbers from Nordstrom, and of course they're going to report in March, so we're going to watch all of this to verify. But 34% of their sales online, 90% of their stores are actually, the ones you go to, are actually in what you call grade A top-notch malls. Then there's NIO. That would be today's loser. It ended last year surging. The stock in the last 3 months of the year was up 142% before a pullback on the last 2 days of trading. Here's the problem for NIO. It's an electric car maker in China. We know that Tesla is getting all the headlines. Tesla's making a big push. In their last earnings report, they talked about the cash balance on their sheet not adequate to provide working capital to go forward with their launch of the third vehicle, which is an SUV, all electric. But they got to come up with the cash to be able to make and produce these vehicles. They did up their guidance. They're going to have about 21,000 cars and vehicles delivered for the fiscal year, but they need to come up with the bucks to pay for it. We'll be right back.
Well, while the standoff between the United States and Iran continues to play out on the world stage, investors are keeping a close eye on oil prices. But according to our next guest, while Iran is home to the second largest reserves of gas in the world, ultimately what happens in Saudi Arabia is far more critical to global energy markets. Joining us now is Alexis Crowe, PricewaterhouseCoopers U.S. lead for the geopolitical investing practice. Thank you for being here, Alexis.
Thank you.
Obviously, there are risks to Saudi Arabia potentially as this situation plays out. So what are you watching, and how do you sort of assign probabilities to the host of different potential outcomes?
Indeed, thank you so much for having me. So with regard to what we were talking about, the balance in global energy markets, traders do tend to trade on Iran with regard to supply, and we've seen this historically over the last 20, 30 years. But it is indeed Saudi Arabia that produces 1/10 of global daily oil consumption. Iran has the capacity to produce about a quarter, but generally will produce far less than that. So it really is Saudi Arabia, pivotal to global oil markets, and we saw that with the spike in the attacks on the energy infrastructure in September. So with regard to probabilities, we've already seen attacks on Saudi exposed pipeline. So for this reason, I think we've seen Saudi envoy come to meet with President Trump to be able to quell the tensions and ease the tensions.
As I'm listening to this discussion, I'm wondering, people who take the risks of going in and out of oil, why do they seem to ignore what you're telling them from time to time, or are they not ignoring it?
Well, if you think about it, the Middle East is home to geopolitics. When you think about geopolitics, everybody thinks about the Middle East. And it is home to the world's lowest cost of production of oil in the world. So you are dealing at a long term with some of the large major companies that have historically been in the region since the 1920s. The companies themselves have this experience of dealing with war, civil war, attacks on pipelines, et cetera. Traders, I think, are in a little bit of a different league. And if I was working for an energy company, I wouldn't necessarily be focused on what the traders are doing.
I'm wondering, what is the worst case scenario here? Because if Iran overtly attacked oil infrastructure, it could cause some short-term damage, but it would also trigger an aggressive response from the United States and perhaps an allied response, which would put Iran basically back in a box. So how bad could this actually get?
The question is, can you put Iran in a box? I mean, this is the other thing. It's the second most populous country in the region, just after Egypt. Highly sophisticated Revolutionary Guard, highly sophisticated Al-Quds force. The capacity for counterattacks and counterstrikes is very, very high, and that could just be on troops within the Middle East. The Straits of Hormuz are the most congested waters of the world, so 20% of daily oil consumption moves in and out of the Straits of Hormuz. So it could be an issue with that. It could be cyber attacks as well. We've seen the capacity for that. So there could be a whole host of scenario and ranges of things that could happen.
You're trying to, in your practice, you're trying to separate the signal from the noise. I sort of live on the noise. How do you separate, how do you really make the decision of what's the noise and what's the signal that needs to be guiding capital allocation around the world?
Yeah, it's a great question. Thank you. I think with regard to geopolitics, that's the trick, is to always think, where is there a dislocation in the public market? So public markets have been shrugging off geopolitics, as you were just sharing, with regard to the trade war, certainly over the last few days, safe haven assets coming down. When there is a dislocation in emerging markets, in either fixed income or equities, to be able to then allocate to a weaker currency. So that's where I would say, some of the companies that are poised to be able to play on the consumer market in Saudi, the growing consumer entertainment market in Saudi, being able to work in the logistics space as well. So looking at some of those diversified plays as well. If you have the stomach for it, then you can allocate capital over the longer term.
As you were talking about, though, earlier, investors are sort of saying, we're just going to ignore geopolitics because we can't sort of wrap our heads around all of the potential outcomes. When it comes to companies, whether they're investing in that region or anywhere around the globe, are they doing the same? Or, in other words, are they just mostly proceeding business as usual because you don't know what's going to happen, so you might as well just invest anyway?
It's mixed. So the energy companies are, as we were sharing, the ones that have historically the legacy of doing so, and that's based on personal relationships, stomach, high security personnel to protect your staff on the ground, and a large commitment. Some of these other consumer technology companies, I think, have made a foray in post-2015 into Saudi Arabia and looking around the region to the UAE as well. I think are a bit shaken, but will still be able to try and look over the long haul. It's with private equity and some of the more real estate capital that gets a bit shaky. So I've seen historically PE funds kind of go in and out, shut offices, open offices, make a commitment, shut it down again. So I think it's PE that gets a little more fickle. And that could also be because a lot of the investors say, we don't want to deal with geopolitics, bring the funds home.
Interesting. All right, Alexis Crowe, thank you so much of PricewaterhouseCoopers. Thanks for being here.
Female representation in Hollywood increasing both in front of and behind the camera. That's according to diversity statistics from the Annenberg Inclusion Initiative at USC. Female directors are becoming more common thanks in large part to streaming giant Netflix. Yahoo Finance's Melody Hom joins us from Playa Vista with more on the study. Melody?
Hey, Adam. Yeah, USC Annenberg study is kind of the preeminent legacy study that they've been conducting for the past 13 years. And what's really telling to me is that overall, only 10.6% of the top grossing films were directed by women. However, if you look at Netflix films, that number jumps to 20%. So that's about double. I think ultimately what is most telling is that the Metacritic data and the ratings, when you look at male-directed films and female-directed films, are essentially the same. So there should be no real rationale for why more females aren't in the pipeline. Even if you look at the categorization of the kinds of films, right? Narrative indie films, around 35% of those films are directed by females. So people are willing to take more of a chance on those lower budget films. Obviously, they have limited release. But then if you look more and more, if you look at this chart here, top grossing films between 2007 and 2009, or between 2017 and 2019, that was about 5%. So overall, we have a lot of progress to be made. However, I think 2019 was overall a banner year because of the likes of streaming giants and those $100 million deals with directors like Shonda Rhimes that Netflix did strike up.
All right, thanks so much, Melody. Appreciate it. Let's talk a little bit about this, because one of the themes that we have talked about, I think, increasingly over the past year is that diversity also makes for good business, right? And then, so I wonder how this affects sort of the investability of Netflix.
One thing that when you talk about this trend, there's a great documentary, we've talked about this, that's playing right now. I think it's on HBO, forgive me if it's on Showtime, called This Changes Everything. And Geena Davis, the actress who has put a part of her fortune and her energies to promoting female directors, it's been an effort by Hollywood since the beginning, and the Directors Guild, the union, to keep women from directing. So you get a report like this that women are now moving up, but women have always been there. The industry was keeping them down.
I look at it this way. I think you can't assume that the women are. Let's stipulate the women are equally talented. That you've got a bunch of men in an old boys network, for the most part, making decisions about who they're going to entrust with millions of dollars. Are you going to entrust someone new, and this is a problem because most of the women directors don't have the track record that a lot of the male directors have. And so if you're going to entrust that kind of investment with someone, there's the comfort factor. And I think that is one of the things that perpetuates against female directors coming up.
They talk about that in this documentary, how as they all come out of school, the female director gets a shot, but it's the male directors who get a shot and then get to keep advancing. I forget who it was, Boys Don't Cry. She didn't get a film contract for directing contract for 9 years after winning. She won some major award, but her colleagues were all getting contracts while she wasn't.
I think of mainstream Hollywood as remarkably risk averse. And I just look at all the films that keep coming out. It's just Star Wars sequels. It's just old white guys greenlighting Star Wars sequels because they're proven to make money, or superhero. It's either Star Wars or superheroes. I think the selection of movies in theaters is terrible.
Well, at least Wonder Woman has a female director.
Yeah, I know. So
in defense of old white guys, some of the old white guys like Mel Brooks were fighting to get women where they
I
were
know.
already and should have been. Well, it's blanket statements like that.
Studio establishment, but I
it
think
was the
it's
union. It was the Directors Guild.
But
the union is supposed to defend you.
The best thing going right now is that we've got other venues now with all the streaming services that are great places for new people to try and make better films than we see in theaters.
The big studios are investing heavily. You can't really diversify. They're idiosyncratic investments. So there really is no way to minimize the risk except to perpetuate. Oh well, this guy's a moneymaker, so I'm going to go with what's familiar.
Yeah.
That becomes the outcome.
All right, Steve Sosnick, thank you for being here. Always good to see you. Rick Newman, thank you very much. And coming up, rolling in style. What drove Rolls-Royce to sell a record number of vehicles in 2019 and what drove people to buy them? Plus, before we go to break, take a look at some of the top trending tickers on Yahoo Finance today. We've got Tesla, speaking of cars, rising after rolling out its first Chinese-made car. About 2.5 hours into the trading day, 2 hours into the trading day, and we're seeing stocks mixed right now with the Dow and the S&P lower, the Nasdaq's higher. It's much like we saw in yesterday's session. Let's take a look at the 10-year Treasury yield as well. It is bang on unchanged at the moment, 1.81%. Full of surprises, Blackstone's vice chairman predicts no trade deal in 2020 and sees multiple rate cuts this year. Uber takes flight. The company's partnership with Hyundai could lead to the first air taxi service. Rolls-Royce delivers. This 3-ton SUV led the company to a historic year. The CEO is going to be with us shortly. There it is, that 3-ton SUV. Welcome back to On the Move. I'm Julie Hyman.
And I'm Adam Shapiro. Before we get to the British luxury car maker, we want to talk about Aston Martin, which is warning investors its profit for 2019 will drop by 25%. Shares of that stock are down nearly 17%. Yahoo Finance's Tom Belger joins us with more from London. Tom?
Well, Aston Martin has big hopes of catching up with Ferrari. But in the words of its CEO, it's having a bloody difficult year, or has had even over the past year. Interestingly, it's been hurt by increased sales of its new Vantage sports car. That's because it's driven up financing costs and driven up bonus costs for dealerships, with more consumers now looking to lease rather than buy its luxury models. The car makers also blamed the rising pound as we've got more certainty, at least a little more certainty, over Brexit in recent months and the global slowdown facing the car industry for its woes right now. And it's really pinning a lot of its hopes now on its new DBX SUV, with hopes it can reach a wider audience than its typically very male demographic, hoping this new car will appeal to women. It has seen rising orders, but placing a lot of faith in that. But it's worth saying the figures out today, the headache really for Aston Martin has been exacerbated by separate results out from Rolls-Royce today, showing they've had a record year of sales, driven primarily, they say, mostly by demand for their new Cullinan SUV, if I've pronounced that right.
All right, thanks so much, Tom. Appreciate it. We're going to talk more about that in just a little bit, but right now we're going to talk about a different kind of transportation. Hailing a ride in the skies. Uber is partnering with Hyundai to create flying air taxis. The company's announced the concept at CES. The flight-sharing service could be ready as soon as 2023. It's going to take off from Dallas, Los Angeles, and Melbourne. We're joined by today's panel, this 90-minute panel to talk about this. Heritage Capital President Paul Schatz and Yahoo Finance's Dan Roberts. Pras Subramanian joining us as well. Guys, this is so interesting. It's interesting to me that they're sort of differentiating itself from a helicopter, because effectively it's an electric helicopter, isn't it?
But it's still going to be the problem they face, though, is it's still regulated by the FAA.
Extremely regulated.
So it's not as if this thing's going to be taking off from a heliport near you anytime soon.
Certainly not in Woodbridge, Connecticut. And this is kind of like a cross between Uber meets the Jetsons. It's not ready for prime time, and I'll bet that in 2030, I'll still be around. You guys will be long retired living in the Caymans, but this still won't be ready in 10 years. I think the regulatory hurdles aside, the technological hurdles, it sounds so great. It's cool. My kids think it's awesome. They think they'll be flying around in little kind of flying cars, but this is so far down the road.
I'm with you. 10 years might be a little far of a prediction, but certainly in 5, these things will still not be in the air yet. Look, some of these technological advances, though, have happened quicker than we thought. Look at Internet of Things and how many devices are now connected now in our homes that we're used to. So 10 years, I'm not willing to say not in 10, but I agree with you, not in 5. Certainly not in 2020, not in 2021.
Wouldn't the possible trajectory, since we do have helicopter service that you can take from designated point to designated point, if you can bring the price of that down through this vehicle, instead of paying $140 to ride in a helicopter with 10 other people to LaGuardia, if you can do it for $20 or $30, then you got a business.
Yeah, and Adam, we were at the New York Auto Show last year, and we saw some of these electric concepts by, I think it was Airbus too. So this is, I think, a good feather. It's a feather in the cap of Uber to actually work with Hyundai, like a big conglomerate in South Korea, to make this actual, they call it the SA1. Look, it's supposed to only fly, at 1,000 to 2,000 feet, only 60-mile range. It's not too audacious. Electric power is very interesting because it's going to be a simpler product, easier to maintain, cheaper to fly, and much quieter. So we'll see if they can get it by 2023. I'm a bit more bullish than you guys are in terms of timing, but the big thing is, you're right, it is the regulatory hurdles that could be the problem here.
Okay, we have some breaking news just want to get to. Not there yet, but close. Senate Finance Committee has approved the USMCA 25-3, which advances it to the full Senate, where they still have to vote upon it.
And I want to talk about the 10 surprises that Blackstone Vice Chairman Byron Wien comes out with every year. Now, these are the various surprises that he says the market is only ascribing, say, 1/3 of a percent, a 30% chance to, that he thinks have a better than 50% chance of happening. And I want to hone in on one because we were just talking about these Uber taxis. He says the prospect of a self-driving car is pushed further into the future. A series of accidents with experimental vehicles causes a major manufacturer or technology company to issue a statement that it is no longer developing self-driving technology. What do you think about the chances? I mean, granted, some of these are just kind of for fun, but
all of them are
prospect.
almost all of them are easy predictions that do not go out on a limb.
So you don't think? So you think that one's likely?
Was risky in any way? That's of course it's going to take longer. We all agree now. Frost is a little more bullish on us, but we all agree this technology is going to take much longer than the industry has tried to represent it.
That's not what he's saying. I think he's saying that one is going to stop actually doing the development of the technology.
Part one was the development will take longer. It's going to get pushed further into the future than people say. Right. And part two is that there will be a bad accident, so one company will remove itself entirely. Now that one is a little more bold, but I thought some of these predictions, like big tech will continue to be heavily scrutinized. Yes. We won't see a phase 2 trade deal in 2020. Yes. The economy will disappoint, but we won't enter recession. Okay.
Well, but it's fair to say that the market in some of these cases is not ascribing a high probability to,
for self-driving vehicles.
For example, are tech stocks trading like the government's going to try and break them up? I don't think so.
Certainly are not. But this is going to be so. Aside from the Uber crashing or the Tesla crashing, so tech stocks are not. But let's remember, you still have 10 months until the election, and we don't know who the Democratic candidate is. Once we know who the Democratic candidate is, the markets are going to trade so much differently than they are now. So markets do not trade this far out based on what's happening next November. Once we get that candidate, you'll see perhaps if it's a far left candidate, you'll see healthcare under pressure. You'll see sectors changing, but this is still too far out to say tech is trading on what may happen because if Trump wins and the Senate stays Republican, there's no shot they're going to regulate tech.
Another one of the predictions, though, was it'll be more centrist. That the conversation about, far left, far right, that the country will move more toward the center.
Which is every election.
Too. Right.
Every election we all say that, because we all hope that's what happens.
Especially when there's an incumbent, right? When it's a re-election.
Coming up, luxury sales. The CEO of Rolls-Royce Motor Cars will join us to discuss that company's big year. That's coming up soon. Plus, take a look at some of the winners on the Dow right now, and Boeing is among them. Last year, British luxury car maker Rolls-Royce delivered a record number of sales. It sold more than 5,000 cars in over 50 countries. That's the most in the company's 116-year history. Torsten Müller-Ötvös, CEO of Rolls-Royce Motor Cars, joins us now from London. Just want to let the viewers know there's about a 3-second delay between us and you, sir. But congratulations on the sales, and I think you're standing in front of, is that the SUV, the Quillinon? Because if it is, there's a big thank you, because that's really doing well, isn't it?
Yeah, thank you very much for your congrats. It's really a remarkable achievement, plus 25% all over the world. Great, I must say. And the car behind me, Cullinan, played a significant role in that success story. Aside of course, all our 2,000 people working for Rolls-Royce Motor Cars, they also did a tremendous job to make that happen here. So Cullinan indeed is the winner, and was the winner in 2019 and still goes extremely strong here also into 2020.
Hey, Torsten, Pras here. With the Cullinan out for the entire year of 2019, can you talk to us more about the sales mix of that vehicle? And also, you also mentioned that sales would stabilize in 2020. What does that mean exactly?
I mean, that basically means we have seen, I would call it, a very special effect that plus 25% is accounted due to the fact that we have introduced Cullinan for the first time in the history, first ever sports utility, no predecessor. So that gave us that great lift that was to be expected, by the way. We have expected that to happen. But now, of course, in 2020, we see Cullinan still going strong, but we don't see again an uplift of plus 25%. We will see, indeed, a strong year again in 2020. That's what I see. Given the fact that no political unrest or any major disruption is happening in the world, I'm pretty confident that we should see again a strong year for Rolls-Royce Motor Cars on similar levels as we have been in 2019. So that's for sure.
For people who love cars, they might have been surprised that your top market is still North America, and some might have thought it would have shifted toward China. Do you think North America will continue to hold the top spot as far as sales?
I mean, North America, again, has proven to be a very solid market for us. We have a long-standing relations to the American market for ages, you could even say. Very, very loyal customers, very, very new customers as well. So you also better know than I do how many ultra-high net worth individuals our target group basically lives in the United States. Ultra-high net worth individuals are increasing. We were able to even sell and position our brand to young, tech-savvy audiences. So for that reason, I think we are in a great swing in the United States. And what also happened is that we dramatically shifted that image and that perception of Rolls-Royce Motor Cars, which was maybe 10, 15 years ago more a chauffeur car, into what is a true driver's car. That is and was achieved in North America. So the car is seen as an active drive-it-yourself car, particularly when it comes to Cullinan, the convertible Dawn, or our coupe Wraith. They all did a tremendous job in the North American market. And for that reason, I think we are seeing that constant uplift year by year by year in that market. And as you rightly said, it's our biggest market, accounts roughly for 30% of our total volume, whilst China is now second, 25%. But I think the United States will see again quite a good and strong year in 2020.
Hey, Torsten, let's talk about those younger buyers, the Black Badge line that you guys recently came out with. Now all the cars are sort of introduced into those lines. They're going after younger buyers with sportier kind of looks and performance. How did you guys decide to do that? And do you think that's key to your growth in 2020?
I mean, Black Badge is not only about, let's say, a different performance level or a different agility, how these cars are driving. It is very much a different brand proposition. We call it the more darker side of the brand, the alter ego of Rolls-Royce, the more bolder, more assertive approach driving a Rolls-Royce. And that has played extremely well, particularly again in the United States. I think we roughly see around 30% of all Rolls-Royces where we offer Black Badge now are Black Badge Rolls-Royces. 30% are Black Badges, and that is quite a tremendous number. Yeah?
So Torsten, Pras and I are car lovers. We both love to drive. I am curious, never having the experience to drive a Rolls-Royce. What is it like, and how is it different than, say, driving my mom's VW Dasher?
This is so massively different.
I would bet.
It takes now hours for me to describe that. No, kidding away. I mean, we call it magic carpet ride. And it's something what you very hard can put into words. Sitting behind the wheel of a Rolls-Royce, feeling, smelling what surrounds you, and all the high-end luxurious materials, the quality, the way how the car wafts, accelerates, is unbelievable. It's silent, it's super powerful. It's like, I call it flight on land. And that is what describes to the best what it is driving a Rolls-Royce. Unbelievable performance, waftability, flight on land, magic carpet ride. So very, very different from your mom's Dasher.
Listen, I aspire one day and hope that I have to pay the sales tax on one of those vehicles, because it would certainly be a pleasure. Thank you very much, Torsten Müller-Ötvös, Rolls-Royce Motor Cars CEO, for joining us.
Yeah.
Coming up, the IRS wants to know about your cryptocurrency holdings. Dan Roberts is going to tell us why. Plus, new year, new Paul. He's going to tell us all about his financial resolutions. It's time for your money. We are turning to our panelist for the money moves you should be watching. And Dan, the IRS has a new tax form and wants to know about your cryptocurrencies.
Yeah, so it's the Schedule 1 form for additional income, which has always existed. But what is new this year is that the IRS has added a specific question asking you about your crypto holdings. Now, in the past, Bitcoin and taxes has always been an interesting topic, because people who trade a lot of cryptocurrency or hold a lot of, doesn't have to be Bitcoin, it could be Ether, Ethereum, it could be Litecoin, it could be Bitcoin Cash, whatever you want. It could be XRP. But they have always wondered, well, do I need to worry about disclosing it as capital gains? Because the IRS is sort of only vaguely even aware of cryptocurrency. There's still a learning curve. Do I need to worry? And actually, the answer in 2019, it came out because in July, 10,000 taxpayers were sent an educational letter making the answer clear. The answer is yes, you need to disclose. You need to do your very best to say, look over here. And the problem is people worry, well, does that make me more likely to get an audit? But better safe than sorry. Here's what the specific question is. IRS says, At any time during 2019, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? By the way, cute by the IRS, because no one calls it virtual currency anymore, but whatever. Here's what's confusing about the wording of this question. It says, did you send or exchange any? And so real cryptocurrency traders are saying, well, wait a minute, what if I just moved some Bitcoin from one of my wallets to another wallet? I didn't sell it and make a gain, but do I now have to disclose that? So surprise, the IRS's new question about it is causing some confusion.
I would, the IRS, though, the capital gains you might get from currency trades, that's 20% if you hold for a year. So I imagine that would apply in this case because they're calling it a currency.
Well, in the past, that is how they have deemed it, but all they had done was they issued a sort of guidance announcement on its website saying, hey, you should disclose this as capital gains, but it wasn't overtly called out like this on one of the tax forms. So that's what's new, and if there's one takeaway for our viewers, I think the takeaway is, more than ever before, the IRS is making it clear that yes, they want to know about your crypto holdings, and in fact, specifically in this new announcement, they say the IRS is going to continue to prioritize clarity around cryptocurrency in 2020. So yes, you should disclose.
They are definitely testing the waters for future regulation and taxation. There's this is the trial balloon, and it's sending a shot across the bow to people who trade crypto that you're not going to get out from underneath the claws of the IRS.
Yeah, difficult to do. Let's talk about your top financial resolutions for 2020. Give us your top 5.
Top 5, that's a tough one. But so first of all, I think it's crazy that people don't have a budget. I mean, that's boring and mundane and doesn't help you that much on the surface. Our country's running out of money. People live paycheck to paycheck, and mostly because they don't have a budget, they don't know where the money's going. That's number one. For sure, rebalancing your 401k. So many people they spend all this time setting an allocation, 80% stocks, 20% bonds, 50-50, and they set it and forget it. If you're not going to do it 4 times a year, which is what I recommend, you got to do it at least once a year. Stocks are up almost 30% last year, which means, and bonds had a great year too, but your stock and bond allocation is now out of whack. So you have to rebalance that at least once a year, if not more.
Ooh, don't run from the stock market. That's an interesting one.
How many times have we sat around this desk and heard that outflows from mutual funds? It's month in and month out. Last year was the biggest single year for outflows in the history of investing. So we've heard this, to make it a little political, since the election of 2016, you have a have and a have-not camp. And the have-nots have said, Trump's going to ruin the economy, Trump's going to ruin the stock market, I'm not investing in the stock market. And people have pulled money out little by little.
But isn't that just from mutual funds? Isn't some of that money going into ETFs, or is that everything?
It's not. So the outflows are not showing up at ETFs. So let's say $100 comes out of mutual funds, a couple of bucks goes into ETFs. It's not what you think intuitively. People are saving money on mutual funds going into ETFs. Most of the money, frankly, comes out of the 401ks.
And where's it going?
It's going into bond funds.
But we saw the flow out of bonds, though, in the last month, in December, into equities, I thought.
So I was about to say, you have an outlier month here and there. Look at 1 year's data. Look at 3 years' data. You'll sit back and go, how could all these people take their money out of stocks repeatedly and put it into bonds? That's exactly what people have done.
All right. Coming up, Elon Musk's big plan to design a car in China for global consumption. Plus, we're celebrating 1 year of bell-to-bell coverage here at Yahoo Finance Today. Remember, tune in every day from 9 to 5 as we continue to bring you top financial news and exclusive interviews that you don't want to miss.
11:57 a.m. here in New York City. We're almost 2.5 hours into the trading day, and stocks are mixed right now. The Nasdaq, very little change, but we've got the S&P and the Dow trading a bit lower. Let's take a look at oil prices as well, because we are seeing them come down today after a couple days surging off the highs. Both Brent and crude, in fact, WTI that is, are surrendering gains after surging the prior two trading days amid those rising tensions between the U.S. and Iran. Utter devastation as the Australia wildfires rage. We take a look at the massive economic toll they're taking. And a tale of two automakers. As Tesla makes big plans for its future in China, General Motors reports its biggest ever sales decline in that country. Welcome to On the Move. And as a reminder, we're now coming to you live every day from 10 a.m. to 1 p.m. Eastern, an hour longer. I'm Julie Hyman.
And I'm Adam Shapiro. Tensions between the U.S. and Iran remain in the spotlight as funeral processions for General Qasem Soleimani continue throughout Iran. Yahoo Finance's Jess Smith joins us from Washington. Jess, what's the latest?
Well, that burial for Soleimani has been postponed after more than 50 people were killed in a funeral procession in Iran. Meanwhile, Iranian leaders are stepping up calls for revenge, vowing that they will retaliate against the U.S. In a State Department briefing this morning, Secretary of State Mike Pompeo warned Iran not to make the bad decision of retaliating. He also defended the strike when reporters pressed him for more details on the imminent attack the administration says Soleimani was planning before the strike. Let's watch.
If you're looking for imminence, you needn't look no further than the days that led up to the strike that was taken against Soleimani. And then you, in addition to that, have what we could clearly see were continuing efforts on behalf of this terrorist to build out a network of campaign activities that were going to lead potentially to the death of many more Americans. It was the right decision. We got it right.
Reporters also asked Pompeo about whether or not the U.S. would strike Iranian cultural sites. As President Trump has threatened, experts say that would be a war crime. Pompeo just repeatedly said that any strikes would be lawful. Members of Congress are set to be briefed on the situation tomorrow morning, so we'll be sure to keep you updated on anything new we learn about the situation with Iran. Adam and Julie.
Jess, thank you. We want to dive into Iran just a bit more as tensions have been impacting the price of oil, which has given back some of the gains we saw yesterday. Turn on to our panel on this one. Let me start with you. I mean, we were being told yesterday, be careful of the spike in oil, because in September, when the Saudi facilities were attacked, went up and came back pretty quickly.
Well, and our own oil guy, Jared Blickery, was saying that people were kind of getting ahead of themselves yesterday with thinking that we were going to hit like $80 a barrel. You know, I think people kind of started to freak out, and clearly that's not what's going to happen. I do think that it's possible to be alarmed by, say, President Trump's tweets on this issue without that being a political opinion. You know, the idea that what might happen next is going to be influenced by a series of cast-off, casual-looking tweets is alarming. But all that being said, I mean, what military experts have been saying on TV for the last few days is that, you know, Iran doesn't really have the capability to create the kind of worst-case scenario that a lot of people are afraid of right now. But I certainly think there's high fears.
Paul, I want to ask you, obviously the markets have calmed down a little bit after the initial burst of activity following the attack, but there are a lot of questions about what happens next. Do you, as an investor, do you put some kind of hedge on? Do you have some sort of geopolitical hedge?
So I think if you talk about a geopolitical hedge or worst case scenario, find me a day, week, month, quarter, year where we're not worried about something big.
Well, so
China,
do you have
North
something
Korea.
in the background then? Do you have gold, for example, in that event?
So no, to me, I look at every opportunity, every day, week, month, quarter, year as an opportunity by itself. I don't look at, oh my gosh, look what's going on in Iran, look what happened in North Korea, China, Russia. Because I think you can always convince yourself not to invest. And I'm paid to invest, to make money, to find opportunities. So, but given that, most of these temporary oil scares or shocks are just that. They're a 1 to a few day deal. When they spike, and oil typically comes right back down again. Somebody can always pull out, 1990, when oil went at that time $42 a barrel, and it was going to cause the economy to break, which it did. But more modern day, first of all, look, U.S., we are the largest energy producer on Earth. Much different than the 70s. You weren't around. We were waiting on gas lines.
Can I back up just for? Do you say you never hedge? You never have something to protect?
I never say never, but I take every opportunity because for sure my levels of cash will oscillate throughout the year depending on how the market trades. But I wouldn't hedge just based on a single geopolitical event.
Gotcha.
So there are times where we've got the pedal down and we are full throttle, perhaps with some leverage on top of it. And there are other times where we'll raise cash or we'll hedge with either bonds or some instrument that will go down when stocks go up, or vice versa. But for the most part, I think it's really hard to pick a single event and hedge. Look at the last 2 Iraq wars.
Yeah.
I mean, there's classic case.
Now, that said, even though these oil-related events often only last a few days, this is a particularly concerning example, this one. No?
Maybe. I mean, the market doesn't think so.
Right.
All right, well, let's get to the floor of the New York Stock Exchange, where Yahoo Finance's Inez Ferrer is standing by. Inez, you're watching shares of Boeing.
Yeah, Julie, Boeing this morning flipped into green territory. You can see it's up almost 2%. About 40 minutes ago, it was up almost 3%, with the traders here noting that the volume was more than double its 20-day average for this time of day. Boeing shares right now are up almost 2%. And we're watching some energy stocks, which are under pressure. Of course, on the Dow, you're looking at ExxonMobil that's under pressure, also Chevron under pressure. But take a look at Apache. This is one energy stock that this morning has been soaring. This is after the company announced that it made a significant oil discovery offshore Suriname. This is on the northeast coast of South America. And one energy trader here this morning told me this is big because it was bigger than what they had anticipated, and analysts had been describing this as one of the most anticipated wells in the world. And then we're also this morning watching Netflix not moving too much after JP Morgan came out with a note lifting its estimates on subscriber growth for Netflix, primarily because of its global subscriber growth. Just 3 weeks ago, Netflix had come out with some data on its international growth, showing some pretty impressive numbers as far as international subscribers are concerned.
Inez, thank you. Tesla shares are in focus today as CEO Elon Musk was on hand in Shanghai. The company delivered its first China-built cars to customers last week, as we reported, and a half dozen buyers drove away with new Model 3 sedans. Musk also signaled Tesla plans to set up a design center in China, but hasn't given any details or thoughts. And we were talking about this design center and the potential to eventually build and export cars back to the United States. Just so you know, they've predicted by the end of 2020, Tesla will have the infrastructure in place to locally source all of the parts it needs to produce the Model 3. So how quickly could we be looking at cars coming from China, Tesla-built cars back to the U.S., do you think?
So I have to be full disclosure, I got Tesla wrong. About a year and change ago, I thought at the funding secured, I thought that was it for a much bigger pullback. It did go from 400 down to roughly 180. I did not see this latest rip from 180 to
Well, I don't think you're alone in that.
50.
Well, and give it a year. Who knows where it'll be? I mean, it bottomed out.
But certainly, at least in my view, someone else behind the company, not Elon Musk, is making some phenomenally good decisions and is really broadening out the infrastructure of the company, the corporate governance. I think Elon Musk has been somewhat under wraps, but he's not fully controlled.
Why do you think it's not him making the decisions?
I think, so from the whispers, and listen, and I was a bear, so people love to poke me with positive stuff on Tesla, and I was always making fun of Elon Musk. But everything I've heard all along was that they've got a really brilliant management team behind him, dotting the I's, crossing the T's, getting the day-to-day stuff done, where he's more of the big visionary, a la, let's say Steve Jobs, but not, I wouldn't say he's
But he's sleeping under his desk, so he would say, I'm not just the visionary, right?
Well,
I'm
he
getting
was,
micro.
at least. I don't know. If there is this brilliant management team behind him, why didn't the company put them out there when Elon Musk was crashing and burning and doing funding secured?
So
reputation.
So look
Well, but
at
you would think that would improve the reputation.
Look at other semi-mercurial personalities. Let's pick on Bill Gates, Steve Jobs. Through thick and thin, they were the face, they were the company. I think it's the same here.
Zuckerberg.
There's a certain credibility associated with having that face, the founder, the genius, front and center.
Can I, before we move on to what was happening in other parts? how long until they're building cars in China to export back to the United States?
I think it could happen sooner than expected. Now, just quickly,
I agree with you.
I don't think it's mutually exclusive to be able to make fun of Elon Musk's antics and also think the company has really surprised all the bears. What a 2019 for Tesla. The stock did bottom out. I mean, look at, I think it was May or June, and then, he's tweeting the other day, lol, the stock is so high. And it is. We're way past the 420 price mark. And China has been, so far, because let's remember, we're talking about a company where in a period of 3 months, the narrative can completely change. But as of right now, the China venture for Tesla has been a huge success, it looks like. I mean, putting out cars pretty quickly, I think 1,000 made. They have big targets there. And it's all happening at a time when President Trump doesn't want that. So there is some irony.
It's all just a wrap, but they promised 2,000 to 3,000 by this period. Just saying, they're doing 1,000, but they had said it'd be 2,000 to 3,000.
I think it's too early to deem it a roaring success. We'll see. All right, let's move on to a more somber topic. That is Australia's wildfires. They are unprecedented in their size and severity, engulfing much of the nation, especially the coasts. The massive fires so intense, they're setting off a series of bizarre phenomena, including fire-driven thunderstorms, fire clouds, so-called ember attacks as well. With us now at the latest is Sarah O'Connell. She's Yahoo Finance editor-in-chief for Australia and New Zealand. Sarah, thank you so much for being here. We have seen a lot of the footage on the news, of course, of the fires happening there in Australia. Talk to us about the economic toll that these fires are taking.
Hi guys, yeah, thanks for having me. It's as you know, the fires have been raging now since the end of September. It's been absolutely devastating what's been happening here. As you know, about 8 million hectares. And in comparison, if you want to compare, has been destroyed with the fires. If you want to compare that to, say, the Californian fires, where it was 800,000. So it's about 10 times the size. But what we're looking at, in terms of the economic, we won't know the true extent of the economic impact that these are going to have until we can really assess the damages. We're only halfway through the fire season at the moment. And but if you look, Deloitte, for example, did a study before these fires started that estimated that about the natural disasters, and this is before the fires started, the natural disasters would cost the Australian economy about 50 billion a year by 2050. So welcome to 2050 already, because it's going to hit a lot more than that. Here in Sydney, at the Yahoo Finance office here in Sydney, we're in the city, so we're not directly in any danger from fires, but there's been an eerie cloud over the city for the last few weeks, and some days been covered in smoke. And a group of economists have looked at the actual just impact here in the city alone, where we're not even been impacted directly by the fires, is up to about 50 million a day for the days that smoke. Yes.
I am curious. There are articles that we read here in the United States about what's going on there, and you said this is only halfway through your fire season, temperatures, over 100 degrees Fahrenheit. So how do things, after this is settled and done, how do things change perhaps in Australia? Because the articles here are talking about, do you rebuild, and does it change the way of life for the people who live in this area that's prone to wildfires?
Yeah, so the fires that happened in 2009 down in Black Saturday, where 173 people were killed in those fires. This time is 24 people have died. So the government have pledged $2 billion to rebuild these communities that have been destroyed. We don't know how it's going to be, how they're going to be directly impacted yet. But they are going to have to do a serious review into how we're going to curtail these fires in the future. So one of the ways in which they prevent these fires is what's called backburning, is during the emergencies, where they try and prevent the fires from continuing on. But what they do, fires have been burning here for years, and prescribed and controlled burning is what they're going to look at more. And there's been an intense debate about how much we need to do of that to try and control these in the future. So how people are going to be impacted. So communities have some towns have been they've been isolated, haven't been able to get access to resources, and their small businesses, healthcare, everything. So it has been completely destroyed. So we're going to have to see how it's going to pan out over the next few months, as we see what the extent of the damage is.
Sarah, Dan Roberts here. I know we're talking about important things like the science and the prevention measures, but I do also want to ask you, we just had the Golden Globes here in the U.S., and a lot of actors were talking about the wildfires, and a lot of them used that opportunity to make it a stance around climate change. A lot of them were saying, make no mistake, this is caused by climate change. So what is happening there has also started, it's become a political debate, yet another one here in the U.S. Is that happening where you are, and is some of the conversation around that the climate debate?
Oh, absolutely. And this has really brought it to the fore. These fires have really brought climate change is it's not something that's happening. It's right here. It's right now. And there's a lot of anger towards the current government at the moment about their stance on climate. Scott Morrison, who's the Prime Minister here, he was on holiday in Hawaii during these fires, and also the Minister of Emergency Services was also on holiday in Europe, but they both returned. And the discussion is, well, we know there's no scientific, it's not absolute that these fires are directly impacted by climate are caused by climate change, but it is definitely something that the government are going to have to be more serious about in the future. Russell Crowe, obviously, Russell Crowe, Cate Blanchett at the Golden Globes, as you mentioned, came out and said this is directly as a result of climate change.
Sarah O'Carroll, a Yahoo Finance editor-in-chief for Australia and New Zealand. Thank you so much, Sarah. Appreciate it.
Thanks a million, guys.
Coming up, it's been a decade for the bulls, but will we see a fall in 2020? Paul Schatz has more for us and his take. Let's take a look at the losers on the Dow today.
Let's take a look at some trending tickers from YahooFinance.com. Micron Technology getting an upgrade from Cowen along with Western Digital. The analysts there raising it to outperform, saying there is now a better view about memory chip pricing, or so-called DRAM pricing. So we're seeing Micron shares up by 7%. We've talked a lot about AMD last year and how well it did. Well, Micron also did quite well. It wasn't up 150% like AMD, but still, now if you look over the past 12 months, a 68% gain. Also, we're watching Beyond Meat today. Of course, that stock spiking after its IPO and then coming back down. But today, the shares are up about 7%. I don't see any news on Beyond Meat. There is some news, however, on its competitor, Impossible Foods, the privately held company unveiling a new pork alternative meat product, plant-based product. We're going to be hearing from the CEO of Impossible Foods shortly from CES, so get some more details on that. But people are watching the publicly traded fake meat company. And then there's Square. Those shares are up by 4%. Bank of America upgraded the stock, saying sentiment has been mixed and that the company will beat expectations. Its revenue guidance, according to the analysts there, is conservative, and so those shares are getting a lift today. We'll be right back. Got some breaking news on Sonos, which is now filing suit against Google, suing Google in 2 federal court systems, according to the New York Times. It is seeking financial damages and a ban on sale of Google speakers, smartphones, and laptops in the United States. Now, Sonos, because of its partnership with Google, several years ago actually gave the blueprints for the plans for its speakers to Google. At that time, Google didn't make a smart speaker, but now it does. Sonos not happy about that. You see those Sonos shares are actually up about 2%, but this is an interesting development, to say the least, between these companies. Dan, I know you have some thoughts
Well,
on
there's
this.
so much here. First of all, as you mentioned, at the time, Google wasn't making speakers. Well, Sonos should have known. Every tech company now wants to do everything. That's clear. And none are better examples than Amazon, Apple, Google, the 3 that right now offer such smart home speakers. You know, there's the Echo, Apple's is the HomePod, and Google's is just called the Home. Google Home. I have said for a while now that I have no interest in any of these things, and when people complain because there are these reports, there's another part of this is that it's been a very popular investigation topic in the last year that, guess what? They're listening to you. Well, yeah, you put these devices in your home.
I have a Sonos, but I don't.
No,
it's
not
my
Sonos. Sonos, not a smart speaker in the same way. It's not a voice assistant.
Right.
Can we pull back at the Sonos shares again, because they are trading higher today, but this also signals that they are concerned about perhaps the intrusion of
Clearly.
Google and the others into their thing.
To sue.
It's expensive to sue, and they're going to have to, because clearly there was a contract of some type in which certain things were spelled out. It's going to be up to a court or jury, a judge, to determine whether there's really grounds for this. Because if they goofed by not putting in a clause to protect their proprietary information, they goofed.
Remember that episode of Silicon Valley where they do the same thing? They come to meet with a prospective VC firm and tell them exactly how their tech works, and then the company steals it?
I don't, but I'm going to take your word for it.
Yes.
So you look,
Like
first of all,
imitating art.
Sonos stock was trading well before this announcement. As I'm looking at it, I don't think this announcement has more than a few basis points in the stock today. Google's stock is at an all-time high, or we're within a few basis points of an all-time high. They're yawning. I don't think it matters. I don't think it ever sees a courtroom. I think they'll make a settlement, and it will go away very quietly.
Okay, the last decade's been one for the bulls, but could there be a fall to come? Let's take a deeper dive with Paul. This is something you've been looking at, and we touched upon, but now in depth. What do you think?
Well, as we spoke about earlier, money's been flooding out of the market by individuals, and as we mentioned in the break, second half of December, I've heard some folks who have been in cash since the big election of 2016 wonder if they start to put money back to work now, which is kind of curious. This is an election year. 2008 was also an election year. Didn't go so well for the bulls. 2000 also an election year. Didn't go so well for the bulls. .com bubble burst. Typical election years are up mid to upper single digits. So you got that at the back, the wind at the back of the bulls there. Also, market was up roughly 30% last year. Usually after such a huge year, stocks don't go in the tank. If they're going to go in the tank, there's usually some kind of exogenous event. When you go from 1989 to 1990, Iraq invaded Kuwait, second half of the S&L crisis. Absence that, this should be an okay year for the bulls, but not without a much bigger surge in volatility.
Now, you mentioned 2000 and 2008, and just interestingly, those were both years where there was no incumbent. We're fresh, there's going to be a completely new president. I'd be interested in, 2020 is a different example. 2020, you have someone who's already in office and is running for a second term. So I don't know if stocks behave differently in that scenario.
They do. Stocks behave better in an election year when you've got the incumbent there. It's kind of the devil you know.
Let's talk stock picks, because 2 of yours that you sent to us stood out to me, both commodity companies, Schlumberger and Newmont Mining.
Okay, so when I came up with picks for this year, given how easy last year was, where the rising tide really lifted all the boats, this year is going to be different. It doesn't mean it's not going to be a good year, but it's a little different. So I did some top-down work. One, I did my picks before the year ended. So Schlumberger, I thought, oil was 60-ish. I thought it was going to 75, 80.
Poorly last year.
Yeah. Correct. And usually you don't have sectors that are dogs back-to-back years. I thought crude is going to have a decent year, so I thought maybe you could hit 75, possibly 80. So if crude's good, then what do you look for leverage plays? Schlumberger, huge international oil driller, number one. Number two, they're paying you 5% a dividend yield to wait, even if they're wrong. The stock has been decimated. I mean, so unless you really think oil is going in the tank again, what's your worst case? Could it be a flat year? Sure.
Well, oil's been flat for almost a decade. I mean, it's...
But we're not talking about investing for the next 10 years. We're talking about investing for 2020.
Although we did talk to somebody yesterday who thinks energy stocks are the trade of the decade.
Why
but that's
Newmont? Why Newmont?
So last time I was on, I told you about my forecast for gold in the 2020s. I think by 2025-ish, gold will be at least $2,500 to $3,000 an ounce. Okay, so this year, gold had a good year in 2019, as did most trading instruments. I don't think the rally's over in gold by any means. I think there's one pocket of potential weakness. First 4-ish months of the year, gold sentiment's really hot right now. Everybody loves gold. So maybe there's a pullback in the first quarter. That's when I would really, with both hands, look to buy. I'm not a long-term gold bug. I think gold's a trading vehicle. But if you like gold, what do? You find a leveraged way to play it. So I chose Newmont. It's the big granddaddy in the industry. They typically have a leverage effect. So gold goes up $2, that stock, or gold goes up 2%, that stock may go up 3%. You could just as easily do the GDX, which is a diversified ETF of
But
gold.
a lot of the
silver
miners have
shares.
not been keeping pace with the gains we've seen in gold, have they?
So when you talk about miners, you've got gold miners and you have silver miners. Some are hedged, some are not. That's where if you want to do your bottoms-up work, you may come out with a different result. So GDX is a good diversified play.
What's been interesting about gold doing so well is it's supposed to be flight to safety, but stocks have been doing great.
Be very careful with the whole flight to safety thing. And as I always remind people, in 2008, gold initially went from 1,000 to 680 before reflating. So the whole gold, and gold is not this great hedge against inflation that people think it is. Gold leads inflation, doesn't trail inflation.
Well, then maybe we have something to be worried about. I don't know. Or encouraged by. All right, let's get to this. Nevada has joined other states in the new year with its AB 170 law. This law prevents insurers from denying coverage to patients with pre-existing conditions and will also keep protections in place should the Affordable Care Act be eliminated. Joining us now from Washington, D.C. to discuss is the Director of Health Policy Research at the Milken Institute School of Public Health at George Washington University, Dr. Leighton Koo. Dr. Koo, thank you for joining us. So this legislation was put in place in Nevada. It's also in place in several other states. So is this indeed going to be sort of insurance, if you will, if the ACA goes away? Is that the impetus behind these pieces of legislation?
That's right. What happened with Nevada and a number of other states right now, maybe 13 other states have something similar. It's backup legislation. States are worried about the possibility that the Affordable Care Act might be damaged, might be essentially undone because of this strange lawsuit that occurred in Texas, where a judge who is considerably to the right of most justices, most judges in the country, has said that because the individual mandate, the tax penalty, was done away with, that the Affordable Care Act is unconstitutional. This lawsuit will be going on for a while, probably is not going to be resolved before the 2020 election, but it poses the risk that the ACA might be dismantled. So a number of states have said, we believe that pre-existing conditions are really important, protections are important, so we want to set up a backup plan in case the ACA goes away. There are some similar things. For example, a number of states have enacted their own individual mandate tax penalties because of that change in the law. So California is the big one, but here in D.C. we also have something similar, and 4 other states also have some taxes like that.
Do the state measures, would they hold up in court? Before the ACA, did any state have anything similar to what we're talking about, whether it was requirements for pre-existing conditions? No, I don't know if anyone had I don't think anyone other than perhaps Massachusetts had a mandate. But if the federal court is striking down these provisions at the federal level, why would they hold up at the state level?
It's not that they would hold up at the state. What happens is the concern is the Affordable Care Act goes away. So with the Affordable Care Act, there were a number of protections. I don't think that the constitutional challenges that are at the heart of the sort of the federal case deal with state laws or with state policies. The states presumably have their own issues. The same issue of severability is not at issue there. That's why the states have set up these backup protections in case the federal law goes away. And it's also a signal for them that they're core parts of the Affordable Care Act, some of those protections that even conservative states like Nevada or Texas or some of the others have similar laws for that, for similar sorts of policies to back themselves up in. I mean, that in the coming year, what I'd expect is it's not clear how much will happen in Congress because it's an election year, because of the impeachment, because of all the usual things why there's gridlock. There will probably be more action of states, some to back up laws like Nevada did. Some states may still expand Medicaid. There may be 5 or 6 states that are still talking seriously about expanding Medicaid, and they know if it's an election year, they have a better chance of doing that. So that's where some of the changes will be occurring.
So do you think long-term, assuming Congress is as impotent as it's been, do you think long-term that we're going to see states kind of pick apart the Affordable Care Act, depending upon where they sit politically, and create their own mini ACAs?
I think many states, part of it is we don't know what the courts will do. Ultimately, what the original judge in Texas said was the entire Affordable Care Act it needs to be taken down. I think most people think that's a total recipe for chaos, and that will be a disaster. In part because Congress would have great difficulty creating a replacement law. So everyone expects that in the event that this case moves forward, and there are a lot of people who think that this was a sort of crazy case to begin with that should have been tossed out at the beginning. If it goes forward, we don't know exactly what elements of the law will be struck down. So these are preventive actions being taken just in case there's a risk. So it's like if you put your seatbelt on just as you're driving the car. You don't know that you're going to be accident. You don't know which direction you're going to be hit from, but you decide, well, let's be a little safe.
Well, we'll be tracking and see what happens. We'll check back in with you depending on developments. Dr. Leighton Koo of George Washington University, thank you.
Coming up, visiting the world in a Wienermobile, how you can land the hashtag dream of your job, dream job. Plus, Impossible Foods added sausage to the meatless menu. We're going to speak to the CEO straight ahead.
It's 12:30 here in New York City. We are 3 hours, 12:31 actually, 3 hours into the trading day, and stocks are mixed right now. The NASDAQ barely in the green as the Dow and the S&P fall a little bit more deeply into the red. We've been watching the 10-year Treasury yield today, but it has not been moving very much, and now is at 1.81%. High-tech meets fake meat. We'll talk to the CEO of Impossible Foods about the company's latest faux meat product just unveiled at CES. Milking the trend, speaking of fake animal-based products, Starbucks looks to test trendy lattes popular on the coasts in the Midwest. And steering towards your dream job, Oscar Mayer is looking for someone to drive the Wienermobile across the U.S. So we have the full pantheon: plant-based meat, plant-based milk, meat-based meat. Welcome back to On the Move. I'm Julie Hyman.
And I'm Adam Shapiro. It's more than just tech in Las Vegas this week. Food is also taking center stage at CES. Impossible Foods is adding to the meatless movement, launching new Impossible Pork and Sausage, the company's first all-new product since it debuted the Impossible Burger back in 2016. Yahoo Finance's Dan Howley joins us with more live from CES. Hi, Dan.
Hey, how's it going? We're here with Impossible CEO Pat Brown, and you guys just announced two new products. We already had Impossible Beef Meat. We saw that in the Whopper. Now you have pork. What are these products that you guys are launching?
Yeah, so we have two products that we're announcing here at CES. The first one is Impossible Pork. Pork, as I'm sure you know, is the most widely consumed meat in the world. Most widely consumed in Europe, in Asia, in China, most of the world outside the U.S. So critically important for our global mission, which is to completely replace animals as a food production technology by 2035. The second product is a pork sausage. And that's actually the first thing that will go on the market from our pork platform, and that's going to be with Burger King. They're going to be launching the Impossible Croissantwich in 139 of their outlets in 5 regions, with the hope of expanding that nationwide later in the year.
So I guess you have pork, you have sausage, and I guess my question is, for the U.S. market, are we getting to the point where we eventually will have Impossible Chicken, Impossible Turkey, things along those lines?
Oh, absolutely. Absolutely. That's been part of our plan from the get-go. Again, the thing that you just have to remember to anticipate everything Impossible is going to do is that our intention is to completely replace animals as a food production technology, the most destructive technology on Earth by far. And that means that any product that we're currently producing using animals, Impossible Foods is already working on and will commercialize a plant-based, a better, more delicious, more nutritious, more affordable, vastly more sustainable version of that product.
So you talk about the impact that meats and the meat industry has on the environment. I guess beef, obviously, we've heard a lot about how that can be an issue, methane. What is it with pork? Is it a similar issue? How is that impacting the climate? And taking pork out, how much will that improve climate change or reduce climate change?
Oh, well, of course, it's not just about climate. It's about global biodiversity. It's about water resources, water pollution, and so forth. So pigs convert protein in their diet into protein in the form of a pig with less than 10% efficiency. Okay, so vastly wasteful in terms of the resources that go into producing the foods that we feed pigs to produce pork. It means that the land footprint, the water footprint, the greenhouse gas footprint and the biodiversity footprint are vastly greater than they should be. And again, because the world consumes 250 billion pounds of pork a year, there's literally 47 pigs are slaughtered every second of every day to meet the global demand for pork. And the total biomass of the pigs that are being raised for food exceeds the total biomass of every land vertebrate, every wild land vertebrate, by almost a factor of 2. So the pigs take every wild mammal, bird, reptile, amphibian living on Earth. The pigs outweigh them by almost a factor of 2. So that's the biodiversity impact of just pork production. It's a very important problem to solve. And of course, there's also the fact that, our product is lower calorie, lower fat. It's 40% lower calorie, 60% lower fat, 40% lower saturated fat, 0 cholesterol. And pork production actually is a big public health issue because there are more antibiotics fed to pork, to pigs than to all humans. And as a result, it's a major source of antibiotic-resistant pathogens. And in fact, there was a study published a couple of years ago from the University of Minnesota that found that 70% of the ground pork sold in supermarkets is contaminated with fecal pathogens, most of which are antibiotic resistant. So there's a million reasons why this is important to do.
We have some of the product here. This is some of the Impossible Pork. I'm going to give it a try. Let me get
Go for
a
it.
shot here.
Go for it.
My wonderful producer.
None of this matters if it's not delicious.
All right, here we go. Ready? I'm going to hold my mic here.
Do you want me to hold your mic?
Oh, yeah. Thank you. This is really good. It's not dry. It's really moist. I'm doing an interview with food in my mouth. It's fantastic.
Great.
Never done it before, but this is working great.
I like it. I like it. Dan, would you?
Pat, thank you so much. I really appreciate it.
Sure, my pleasure.
Dan, thank you very much. Appreciate it. Would you tell us if you didn't like it? That's the big question.
Yes, I would.
Okay, thank you, Dan Halley, for some honest reporting. I appreciate it, and thank you to Pat. And we want to bring Heidi Chung into this as well. She's here with us on set because she covers real meat, fake meat, fast food, all of this stuff.
Have you tried this?
Oh, no, I haven't yet. It's not available. And they're testing it only in 5 different cities within the U.S. with Burger King. It hasn't been announced where they are going to be distributing this, Impossible Foods that is, to regular consumers like you and myself yet.
Although I don't think it was impossible, but Dunkin' Donuts had the breakfast sandwich with sausage.
Right.
And
that was Beyond Meat.
That was Beyond Meat, yeah.
Yes, and that is national right now.
Tastes good.
Yeah, I think Julie and I have very differing opinions when it comes to Beyond Meat and Impossible Foods. You and I did a taste test of our own, but the main ingredients between Beyond Meat and Impossible differ quite vastly, and I think that's why the taste difference is there. You preferred Beyond Meat, I preferred Impossible Foods, so there is a divide right now.
So I am the carnivore of carnivores, and my wife tries to sneak in ground fake meat into myself and my kids' dinners all the time. I mean, for me, I think it's great that there's an alternative. I think it's great that we're getting into plant-based products. But for the carnivores, I don't enjoy it. And it's too salty. The texture bothers me.
That's the issue. So the salt content, it is processed food, even though it's plant-based. And the flavoring, we talked about this in our morning meeting, the flavoring to make it taste like pork. What is that? What synthetic substance out there tastes like pork?
So I don't have the exact ingredient list for the pork part of this Impossible Foods experiment, but I do have the information regarding their beef product.
Yeah.
Now, the main reason why it bleeds like real meat is because of heme, and heme is found in the protein that we widely know as hemoglobin, right? So that is the protein that's in meat that gives it that meat flavor, and that is what Impossible Foods is essentially extracting. Originally, they started by extracting it from soybeans, but they found that that wasn't very efficient. So I'm going to read you a bit that they have on their website because I've been through it many, many times. But what they did here is they started to take the DNA from the soy plants and inserted it into a genetically engineered yeast. Then they fermented that yeast, kind of like you do with beer, right? When you're fermenting
the GMO crowd's going to go nuts over this.
Exactly, to produce the heme. And that's where you're getting that blood-like content from the Impossible Foods burger. Now, it's different for Beyond Meat. Beyond Meat uses beet flavoring and coloring to imitate the blood from.
How many of these things are being sold? That's the bottom line, right? Beyond Meat, the stock went up and has come down a little bit. Impossible Foods is not publicly traded. There's so much buzz about this. Do the numbers back up the buzz?
We have no idea how many actual units they are selling, and that's why the metric that we had been using in terms of success has been how many partnerships they were able to get.
Impossible, you're talking.
Impossible, as well as Beyond as well, right? So how many partnerships with food services companies, grocery stores, are they able to sort of ink? And that was the main metric. I think going forward in the plant-based meat space, it's not going to be about how many partnerships they gain, but it's truly going to be about unit sales and those actual hard figures.
Is there also enough, I know enough to be dangerous here, is there enough plant-based product there, the raw product, to satisfy the appetite of what may be an enormous market?
I mean, that's a great question, right? So there have been supply issues in the past, specifically 2017. And when we hop on the conference call and listen to Beyond CEO speak, he says, hey, don't worry about the supply issues. We have partnered with a lot of different companies to make sure that you're able to get your product and supply when you need it. Now, that still remains to be proven because it's only been about a year since we've seen Beyond Meat on the public market, right? But we're seeing a lot of competitors with deeper pockets, such as Nestle, jump into the space as well. So in terms of supply, I think you're not going to be getting it just from Beyond Meat, right? You're partnering with companies that are going to be able to give you the product when you need it, whether it's Nestle, whether it's other companies that are jumping on the bandwagon.
All right, thanks, Heidi. Coming up, a tale of two diamonds, why some stones are falling while others still shine. Plus, forget Mars, NASA just discovered another Earth-sized planet that could be habitable.
Climate change activists may have influenced JetBlue. The carrier announced it will be the first large U.S. airline to offset emissions from all of its domestic flights. It plans to use sustainable aviation fuel when it flies cross-country. No word yet on how much it will cost the carrier, but the price of tickets will not increase. Out of this world, NASA found an Earth-sized planet orbiting a star, and get this, they say it could possibly sustain life since its conditions may allow for water. And ever dream of driving the Oscar Mayer Wienermobile? Now is your chance. The company is hiring 12 people to drive that vehicle across country to meet and greet fans. The position is full-time, comes with benefits, probably all the hot dogs you can eat. Applications are due January 31st. Diamonds may be losing their sparkle. Rough diamond sales are expected to fall 25%. Meanwhile, lab-grown diamonds are edging out the real thing. Sales of the handmade gems grew 15 to 25% in 2019. For more on what we can expect from the lab-grown diamond industry, let's go to Alexis Christoforous.
Thank you so much, Adam. Appreciate it. I am here with the co-founders of the lab-grown diamond company, Great Heights. Joining me now is the president, Ryan Bonificino, and the CEO, Alex Wendling. Great to have you both here.
Thanks for having us.
And for bringing along some of your diamonds as well. First off, what is a lab-grown diamond? Is it a real diamond, Ryan?
100% a real diamond. Chemically, optically, geologically, a real diamond. And that's backed by our FTC, which ruled last year in the US that a lab-grown diamond is a real diamond.
It's also different from a mined diamond in that you're not affecting the environment in the same way, but it also costs, what is it, 30 to 50% less than a mined diamond?
Well, we hope to start at that price and deliver even better value to consumers. So yes, it's a far better value, and you can feel a lot better about knowing you haven't potentially dug a hole in the earth visible from the upper atmosphere. It's completely conflict-free. You can be certain of that. It was grown above ground rather than really dug from below ground.
Is it rare in the way a diamond would be? Because a natural diamond is found in nature. It's unique unto itself. Does that sort of lose that when it's in a lab?
You've listened to a lot of marketing. I don't believe if any of our guests go into their local mall and count all the diamonds in all the showcases, I think I've proven my point. They aren't particularly rare. It was controlled by a monopoly for many years who created the illusion of scarcity. Now, if you were to have a 9-carat blue mined diamond like this 9-carat blue diamond, yeah, that's pretty rare. Okay?
I'd have to say, and it's quite the beauty, too.
This is the only one we know of in the world. And we wanted to give it to you, but your producer said we couldn't.
Oh, no,
so
I've got to talk to our
here.
producer after that. You talk about it being good for the environment and sustainable. What about the fact that these labs do have to run on a lot of energy? And a lot of the time they're made in places like India, where these environments are very reliant on coal and natural gas. Are you sort of trading one problem for another?
You know, you don't let the perfect be the enemy of the good. All right? Is this perfect? No. Is it certainly better than the alternative? In my opinion, yes.
Is it going more mainstream? I know we've got some U.S. soccer stars, Ali Krieger and Ashley Harris. When they got married, they used your rings to do it. Is that helping these lab-grown diamonds go more mainstream?
It is. It's a big help for awareness, not just our brand, but of course the category, which benefits all brands that make and sell lab-grown diamonds.
Now, you are direct to consumer, unlike a lot of your rivals. They can be seen at Kay Jewelers and Signet and other jewelers. Are you planning to go brick and mortar at all?
We are, actually. That's my background.
From Alex and Ani.
From Alex and Ani. I was the chief marketing officer, and I was there for probably the largest growth story in the history of the jewelry business.
So what are the plans for this company now, for Great Heights?
So we believe Great Heights, it's an intimate experience. We believe in a showroom model, sort of a second floor private showroom. We find incredible opportunities all over the country. So 2020 will be our big test for second floor retail and then ultimately street level as we expand outside of bridal.
Very exciting. What about the value this diamond holds? Because jewelry gets passed down from generation to generation. Does it hold the same value as a mined diamond?
You know, value is one of those questions I often struggle with because value, the only things of real value are water, food, and shelter. So everything else we kind of assign a value to. For me, the value of a diamond is it's the most beautiful stone in the world. It's one of the most beautiful things. We can talk about a diamond, but if I put this on your finger, you're not going to take it off unless
I'm going to put it on my finger since we keep talking about it. You actually come from a mining background, don't you? Your family is from a bunch of miners. This is feels like a real diamond, I got to tell you. It is a real diamond, right? We can't say it's a fake diamond.
It's a real diamond. It looks very good on you.
But you come from a family of miners. So was this a difficult decision for you to make this move over to the lab grown?
This was a redemption story for me. Yes, I'm a third generation diamond family, originally from Antwerp, which is where the diamond industry once was. I'm as a baby boomer, I think we've done a lot of things that we shouldn't be proud of. I think we've used a lot of the natural resources, put a lot of debt on the next generation. I think we have some cleaning up to do. So for me, this is really a redemption story. There's a better way. We don't need to dig holes in the ground that are visible from the upper atmosphere. We just don't need to do that
And
anymore.
I know you guys are going to be busy because it's going to be engagement season. It is right now as we move closer to Valentine's Day. Ryan and Alex, thanks so much for being with us of Great Heights. Back over to you, Adam and Julie.
Alexis, thank you very much. And coming up, a new way to tip. We'll tell you the trend that is going viral in 2020. Plus, a Japanese employee is protesting 7-Eleven after the chain punished him for taking one single day off.
Time for the buzzer beater round. 3 stories, 1 minute each. We're going to start with this. New Kids on the Block singer Donnie Wahlberg made some headlines because of this tip. $2,020 on a bill that was only $78.
Back up. Is this still what we know Donnie Wahlberg for? He's still New Kids on the Block singer?
Yes.
Really?
No, he's an actor.
And they came back.
Danny Reagan.
Well, I don't know
I always
what that
confuse him, though. I always confuse him with. Was he Boogie Nights or was it the other?
Mark.
Mark Wahlberg. That's the one I was thinking of.
He's Danny
Anyway,
Reagan on
All right, he
Blue Bloods.
tipped 2020.
He tipped $2,020.
And his wife had the chutzpah
Nice
to take
to
a
be
picture
rich.
of it, like to say, "Hey, everybody, look at us."
Right, that's
So
why
I
you
get
do
why
it.
they
Credit.
did it. It's a nice feel-good thing. But I love when people do things and you hear about it anonymously.
Right.
Somebody did this, somebody did that, versus I'm rich, I'm famous,
Yeah.
here's what I did.
That is true.
But others are now following and trying to do the same thing.
Well, right, we're seeing a
$2,020
movement here, but you got to be rich. I mean,
Unless
this
you
has
get-
been a thing for a while. It's called tip the bill or tip the check. So it's like whatever your
right,
total
right.
is.
Yeah.
Another popular thing on social media is you tip the amount of your full total.
All right,
So it doubles it.
7-Eleven
Gotta be
owner
rich.
in Japan is standing up against the company. The franchise owner says he is being penalized for closing his store on New Year's Day. In Japan, 7-Eleven stores are expected to be open 24 hours a day, 365 days a year. He has barely anything left on the shelves because they're not shipping anything to him anymore.
He signed a contract. The contract says you're open 365.
Hire somebody.
It's not his
Hire
decision.
people,
It's the
yeah.
But it
company's
is a
decision.
protest against the culture.
That's
though.
right. That's a culture move in Japan. Japan is a very different work culture. They essentially work you to death, and those who don't like it end up taking their own
By the way,
lives.
But he's obviously prepared to deal with the consequences.
And he's losing.
Okay, well, but is he? Because we're talking about it over here, people are probably talking about it there in Japan. So if he is trying to make a statement about the work culture there, in that he has succeeded. He's not necessarily succeeded monetarily.
But it's hard for us to appreciate it because we're not part of that work culture. It's like the people in Finland. I just saw that new 35-year-old prime minister was talking about going to a
6-hour workday, 4-day
four days
work
a
week.
week. I mean, come on. We laugh at that.
Do we? I'm moving.
Starbucks oat milk lattes are a hot commodity in the Midwest. In roughly 1,300 cafes in Illinois, Indiana, and Iowa, Starbucks now serves its new oat milk honey latte and added 2 non-dairy espresso drinks to its national menu. Dan Roberts, you have something to say.
Well, all that matters for coffee people when they see that Starbucks is adding oat milk is it Oatly? And the answer via a quick Twitter search just now appears to be yes. Oatly, the brand of oat milk that you have to have if you're serving oat milk in coffee shops. All the snobs, it better be Oatly, and it is, but sometimes it's hard to get.
Meanwhile,
we've had the CEO of the company on one of our live shows.
Another sign of the times, the second big dairy producer has just declared bankruptcy. Borden, big dairy producer, has now, after Dean Foods, declaring bankruptcy. So cow milk is going out, and
well, you got to get your calcium though, kids.
And you got to be
strong
careful.
bones.
So these dairy producers,
eat spinach.
Many of them are over leveraged to begin with, and they can't support their debt payments. But this is a bigger. One of my themes for the 2020s is food. Food prices going up, up, up. Oats,
food,
fake
glorious
meat.
food.
Yep.
Okay, we appreciate everyone being here. We are going to pass you on to Wi-Fi PM to take you through the next hour of trading. Maybe we'll show you where we stand with some of the stocks right now.
It is 1 p.m. in New York City, and the major indices are mixed, with energy stocks dragging the market lower and tech stocks helping the NASDAQ stay in the green. On tap for today, Secretary of State Mike Pompeo outlining possible future strikes against Iran as complying with international law after President Trump hints at targeting cultural sites. We'll dig deeper into the threat facing America and why preparing for cyber attacks specifically is getting costlier and costlier for the country. Plus, new non-manufacturing data painting a rosier picture to end the year. So what drove a slight tick higher? We'll discuss that. And Bitcoin surging to kick off the year. But with big returns comes big responsibilities as the IRS looks to crack down on crypto investors skirting taxes. We'll chat with one Winklevoss Twins-backed CEO looking to take the pain out of that process. All that and more. This is Wi-Fi PM. Good afternoon, everybody. I'm Zach Guzman, and joining me on Wi-Fi PM today is Yahoo Finance's Heidi Chung, along with Level Agency's CEO and author of the CEO's Digital Marketing Playbook, Thomas Donahoe, in studio with us. Guys, good to see you. Happy Tuesday.
Happy Tuesday indeed.
Got a lot to dig through here. The markets, as we said, are mixed right now. As you can see, the NASDAQ, the only major index in the green, up by about 0.1% as we're seeing the Dow off 100 points. We'll keep our eyes on all the market action throughout the hour. But first, there are new developments with Iran to discuss today. Secretary of State Mike Pompeo speaking to the press earlier, where he doubled down on the Trump administration's decision to take down Iranian General Qasem Soleimani. Let's watch.
If you're looking for imminence, you needn't look no further than the days that led up to the strike that was taken against Soleimani. And then you, in addition to that, have what we could clearly see were continuing efforts on behalf of this terrorist to build out a network of campaign activities that were going to lead potentially to the death of many more Americans. It was the right decision. We got it right.
All right, so there you go, guys. You heard from Secretary of State Mike Pompeo there calling it the right decision. Of course, you know, in the backdrop of what we've seen in terms of U.S. policy in the Middle East, there will always be question marks about what is the right intelligence and what is not the right intelligence. But nonetheless, sticking to their guns here about saying this was the right thing to do.
Yeah, I mean, we don't know what's going to happen in the future. We don't know what the next steps are, but what we do, I think, know is that there most likely will be retaliation from Iran, right? But what the U.S. does after that, I still think is a big, big question, not just for the world, but just for investors in the market as well. I think the market action that we're seeing today, the mixed picture with the NASDAQ higher and the other two indices lower, is just telling us that investors are sort of taking a wait-and-see approach. They want to see what happens in terms of escalation. And so, I mean, I can't tell you what's going to happen next, but I think everyone is keeping a very close eye, at least for now. And in addition to the U.S.-China trade war, I think that the relationship with Iran and what's happening in the Middle East is going to continue to be an overhang for the markets.
Yeah, I mean, that's what we talked. We talked about a lot of guests, former ambassadors to the region, and a lot of people are saying, I mean, no one would be able to tell you what is to be expected out of this, because right now there are so many different routes, different allies could go in the region. We've seen that play out. But the other thing that we heard from Secretary of State Mike Pompeo was also on the focus of what might happen when we're thinking about the U.S. retaliating against whatever might happen in terms of the Iran's decisions to move forward from here. He said that we would respond within international law after President Trump reiterated his threat to attack Iran's cultural sites should the country retaliate. Take a look.
Every target that's being reviewed, every effort that's being made will always be conducted inside the international laws of war. Seen it. I've worked on this project, and I'm very confident of that.
We should note an attack on a cultural site would likely be illegal under the laws of armed conflict and the United Nations Charter. And we had heard that from some of the White House officials that came out and kind of responded to that too. But that would be a big question mark here when we're talking about, and it kind of speaks to the idea of we're at a very dangerous point in time when we're already talking about possibilities as kind of what would be assumptions for worst case scenario, kind of already expect when we're thinking about retaliating against a retaliation for what we've already done.
Yeah, I think you should keep in mind that like the ethos or edict of like an eye for an eye, like that area was doing this 2,000 years BC. So like that's Babylonian, like that's in the dirt. So I think whether it's from a financial standpoint or other, it's a foregone conclusion that there's going to be a back and forth retaliation.
Mm-hmm. That's a very good point too, because we even talk about how President Trump looked at this last year in terms of how he called that one strike off that he said wouldn't be an appropriate retaliation when he was thinking about responding to what we saw play out, including responses to potential or the attacks we saw on Saudi Arabian oil facilities as well there. So you do wonder about if his thinking around retaliation has changed or what might be responsible, what might be irresponsible. All of that going on, and we're seeing that play out right now. But President Trump is meeting with Greece's Prime Minister at the White House today as tensions with Iran will continue to remain high. When we're looking at that meeting, any expectations for what might come out of that? We're probably going to hear an update about Iran regardless. We've seen that play out before.
Is that the expectation? Sorry, I didn't know that he was planning to speak on Iran at this?
I mean, we've
seen he's going to get questions thrown at him, right?
It's to be expected that we've seen that play out. They've complained about that.
You should expect the unexpected from every...
Right, but hasn't President Trump said, well, if you want to know what's going to happen next with Iran, stay tuned via my Twitter.
Sure.
Very interesting times that we are in. But yeah, hopefully we get some more updates when it comes to what's happening in the Middle East in terms of ratcheting up of tensions. But in all of this, what really interests me the most is just crude oil. And the fact that we are actually not breaking above $70 a barrel, which we did yesterday, but the fact that we're not able to maintain those levels, I think speaks to a lot has changed, right? When we look at the energy market and specifically crude oil, the U.S. being a main producer of oil. But if we do see ratcheting up of tensions, at least in the Middle East, the world is more affected, I think, than the U.S., than anyone else. And I think President Trump, knows that.
Yeah, and as we discussed last week, I mean, the fact that about a quarter of the world's oil supplies goes through the Strait of Hormuz and what could happen if tensions do escalate, that's another thing to keep an eye on what happens to oil prices moving forward. But we should note that we'll have 4 coverage on Yahoo Finance for President Trump's Oval Office meeting live on the ticker in the next hour, so stay tuned for that. The U.S., of course, is also bracing for a potential cyber attack from Iran as tensions mount between the two countries. And Yahoo Finance's Kristen Myers joins us now for more details on the costs of protecting ourselves from some cyber threats. And what have you been figuring out there?
Okay, so we've been talking a lot ever since the assassination of General Soleimani, essentially what the retaliation was going to be. We obviously saw the Iranian president, Rouhani, he actually tweeted out that Iran would take revenge on the United States, and all everyone has ever been talking about the last couple of days is what that revenge is going to look like. So I've actually been talking to former U.S. cybersecurity officials. I spoke yesterday with the former director of the NSA. Essentially, what this could look like. A lot of people are saying cyber attacks. While Iran does have the capabilities, I want to make clear, to physically attack the United States, I think people are largely shrugging off that option for a couple of reasons. One, neither the United States nor Iran wants to get into an all-out physical conflict with each other, right? We've seen all of the memes, all of the tweets and jokes about World War III. Just truly no world leader wants that right now. Cyber attacks, however, is something that is very possible. Now, the Department of Homeland Security has said that we have not yet seen any credible threats on any specific attacks that Iran might take, but they are starting to warn businesses that they could be hit with cyber attacks. This is something that Iran has done before. Back in 2011 and 2012, they actually hit about 50 financial institutions here in the United States with cyber attacks, and that cost tens of millions of dollars actually to mitigate, according to the FBI. So when it comes to the cost of a cyber war with Iran, that number is a little bit unclear. However, the White House has come out and said that cyber attacks in the United States have cost anywhere between $57 and $109 billion in just 1 year. So you have to consider, okay, if Iran wants to do a retaliatory attack, what are those sectors that they might go and hit? And the people that I've been speaking with have said, look, they are probably going to be going after the United States government itself. We actually already saw a minor hack of a little-known website for the United States government. We might expect to see some more of that going forward, but also energy and financial sectors, right? If you hit the banking industry in the United States, that's something that could be hit pretty hard. Now you're telling people that they can't access their financial information or their banking data, and that's something that's going to cost millions and millions of dollars to mitigate if that does happen. And I also asked the question, okay, well, if Iran does decide to commit some sort of cyber attack against the United States, how prepared are we for that? And scarily enough, the answer is not prepared. I mean, the United States in the fiscal year 2020 budget actually allotted $17.4 billion for cybersecurity, and that's actually a 5% uptick from what we've seen previously in the previous budgets. But the thing is that no nation, as I was told, is really ready or prepared to be on the defense for another powerful nation state attacking them over and over and over again with cyber warfare. When it comes to cyber warfare, when it comes to cybersecurity, it is better to be on the offense than it is to be on the defense. It's much easier to attack someone than it is to try to protect yourself.
Yeah, and as we've discussed too, I mean, it's an election year as well, so you got to think that the targets only get even bigger.
Right. Is there any concern? I mean, when you see a cybersecurity portfolio of threats, A, it's an election year. B, that is certainly a piece of that. That's a tentpole. The Senate just approved a $250 million package. $600 million was requested. So in this whole portfolio of let's defend ourselves, I think the DoD got about just shy of $10 billion of that $17.5 billion. But from an election security an anti-cyber threat standpoint, it was actually less than what was requested. Would that be of concern, do you think?
Right. So, I mean, I think, right, the question that we're asking here is enough money being allotted to our cybersecurity and to our defense? I think the answer that I've been getting is a little bit mixed. It's pretty clear that the United States is not prepared enough. We do some of the most preparations among all of our, Western countries and also allies when it comes to cybersecurity and defense. We also are one of the countries that allots the most money to this area. However, it's not necessarily the money that I'm being told that is the issue. It's the problem of the United States government coordinating with the private sector to protect itself against these threats. The United States government isn't providing cybersecurity and defense for JP Morgan and Chase, right? So if Chase gets hacked, for example, they have to be able to call on the United States government and say, actually, we think that there's something going on here. We think that a nation state might be trying to attack us. And it's not just, JP Morgan or a bank that has this happen to. It's also ExxonMobil.
Yeah.
You have all the gas companies. They all need to coordinate with each other.
And I know the Air Force handles a lot of the ideas of cyber threats and cybersecurity, at least in this country, but it does make you kind of wonder about the idea of focusing so hard on Space Force when we could be focusing a little bit more, perhaps, on some cyber threats. But Kristen Myers, thank you so much. Appreciate it. The closely watched ISM non-manufacturing index increased last month as optimism grows around a U.S.-China trade deal. It's giving investors reasons for renewed optimism. The index rose to a reading of 55 in December. That's up from 53.9 in November. So, Heidi, at least moving in the right direction here.
Right.
Not necessarily a huge spike here, but I mean, it is kind of conducive to the idea that investors are warming to the idea that this U.S.-China trade deal will indeed be signed mid-January as promised.
Certainly lifting sentiment, as we can see. But the services industries here in the U.S. continuing to do the heavy lifting. We had manufacturing data out last week, not so great, still in a mild recession. Now, a lot of economists and a lot of analysts are saying, well, the recovery is intact. We will come out of this manufacturing recession, but it's something that we're closely watching. But as the U.S. continues to shift into a services economy, we're continuing to see strength here. And of course, a reading above 50 means expansion and a reading below 50 is contraction. So for those that are not familiar.
And Thomas, we also got, the U.S. trade deficit fell sharply in November, sinking 8.2% to a 3-year low. So that's tied here to something that President Trump focuses on a lot. Most of it's tied to the shrinking deficit with China, with imports slipping amid the ongoing trade war. But CEO confidence is still kind of out there as kind of mixed when we think about how confident they are moving forward in 2020. So I'm not entirely sure how much the trade deal, phase one trade deal, might actually do to change things. It might just be status quo.
Yeah, manufacturing specifically aside, the overall consumer confidence, and just looking at the past holiday season, look, 2018 to 2019 was a 3.4% uptick. So 2019's holiday season went a heck of a lot better than the year prior. E-commerce crushed it. I think it was just shy of 19% year-over-year growth. I mean, there's not even like the first shoe, there's not even any shoe dropping in that respect. So that's the overall health of the consumer marketplace. So again, with respect to a specific large sector like manufacturing, if we're looking for any tea leaves of the overall health, I still think we've got fairly open space and blue skies.
All right, there you go. I mean, we'll obviously see as we learn more data. This is one. We've got a big jobs number coming out, too, so we'll be focusing on that. Coming up, we'll head out live to CES for the latest in consumer tech and chat with the VP of Engineering for Google's Assistant about how they are keeping pace with the competition heating up in smart devices. Plus, Elon Musk busting out his best dance moves in China. We'll tell you why after the break. And as Wi-Fi PM celebrates its 1-year anniversary as part of Yahoo Finance's Bell to Bell coverage, we want to thank you for watching our debut season and hope you stick around for many more years to come from the best team in the biz. More Wi-Fi PM right after this. All right, well, the biggest annual showcase for technology is underway in Las Vegas, and Yahoo Finance's Dan Howley is live at CES with the details. Dan?
How you doing? We're here with VP of Engineering for Assistant, Scott Huffman. We're checking out some of the big announcements here. You're obviously spreading out Assistant throughout various devices, right? We have a sync here, we have TVs, we have autos. Why move it throughout so many different devices? And then what's the uptake as far as users go for Assistant been like?
Well, so we're really excited to be here at CES, and in terms of spreading out, we just believe that a great assistant should be present with you wherever you are, in whatever context, whether it's in your home, in your car, when you're on the go, on your phone, and that it should be able to help you control all the smart devices in your life. So here at CES, we're announcing over 50 new devices that have the assistant built in from a bunch of partners like D-Link, GE, Hisense, a bunch of others. And we're announcing over 20 new types of devices that the Google Assistant can help you control. My favorite is actually not displayed right here. It's the smart bathtub. I don't actually know what you quite do with the smart bathtub, but whatever it is, I feel like now I need one in my house.
Yeah, why not, right?
In terms of uptake, that's something we're really excited about. One thing we're announcing here at CES, we recently crossed over 500 million users who use the Google Assistant every month. And that's across the world, so in 30 different languages, over 90 different countries. And so for me, just as a computer scientist, the thought that 500 million people will have a conversation with Google in natural language to get something done in the next month is really exciting.
So, we obviously talk about assistant, voice assistants, and one of the big things that comes up is privacy. You guys made an announcement about privacy improvements. We have the CCPA coming out in California, and we GDPR obviously in Europe. These are all big privacy laws for people that don't know. And I guess how are you working towards that, and what are some of the privacy improvements that are going into Assistant as part of your announcements this year?
Well, so one thing that we've been working on, we talk about the assistant as the best way to get things done, and so we kind of thought to ourselves, shouldn't the assistant be the best way to understand your privacy, your data, where it's going, how it's being used? So for example, here at CS, we're announcing some new commands. One of them that I like is, sometimes you start talking to the assistant, someone else starts talking to you, it gets in the way, and Google has heard something potentially you don't want. You can just say, hey Google, that wasn't for you. Or, hey Google, I wasn't talking to you, and what you just said gets immediately deleted, removed from all the records, so that you don't have to worry about that. The other point that we're kind of stressing here at CS is that from the beginning, people may not realize the Google Assistant has always been purely opt-in in terms of recording any audio data. So for folks who do opt in, we get a little better at recognizing your voice, the peculiarities of how you speak, but for people who are uncomfortable with recordings of their voice, you can just not opt in, and you can still use all the great functionality of the Assistant without having anything ever recorded.
So you also have kind of two new features, one newish, one new, the interpreter mode, which basically allows you to have a conversation with someone in another language, with Assistant being a kind of intermediary for you. So we could speaking English and Japanese, and the Assistant would give us an idea of what we're both saying, right?
That's right. So interpreter mode combines, the assistant's ability to understand speech with Google Translate's ability to real-time translate to another language. And so we can have a conversation completely seamlessly in different languages. And it's something that we've been really excited about. And one thing that we're doing this year is really bringing this to a lot more places with a lot more partners. So things like hotels and airports and kiosks. One I'm excited about is even NGOs, nonprofit organizations, are using this to help communicate when they're serving clients who speak other languages.
I know you got JFK is going to be one of the airports, so if you could bring that to LaGuardia as well as just improve LaGuardia in general, that would be nice. I think the other piece is the read it mode, right? So that's a feature that allows Assistant to read what you see on a page, or how does that work exactly?
So we've been working for a long time on making the voice that you hear from the Assistant sound very natural. So today we have natural voices. Even in my house, I have it set to John Legend, so I get to hear his voice tell me the weather. But those voices are really optimized for reading short things like the weather or the sports score. What our teams have been working on is using machine learning to create voices that sound very natural reading longer content. So things like a whole web page or a book chapter, those kinds of things, without fatiguing your ear. Okay. And so we're starting simple with this. If you're looking at a web page on your phone, you can just say, hey Google, read it to me. and it will just read out the web page. So maybe your hands are busy, you're cooking, you're doing something, you can hear that article or that web page read to you, and it sounds natural and sounds nice. And then the team threw in a little twist on this, which is they said, well, we have this translate capability. So in fact, you can say, well, read it to me in French, read it to me in German, and we support something like 42 languages where you can ask and have their web page translated in real time and then read out to you.
All right, Scott Huffman, thank you so much. Back to you, Zach, in New York.
All right, Dan Howley out at CES. Thanks so much, guys. Moving on, talk about a victory dance. Tesla CEO Elon Musk is busting a move at the automaker's Shanghai factory earlier today, celebrating the first deliveries of the Chinese-made Model 3 vehicle. You can watch him cutting the rug there. The executive also announced that Tesla will make the Model Y SUV at the same facility. And guys, just watching that footage reminds me of the dance moves from Bill Gates and Steve Ballmer at the Microsoft Windows 95 launch event. And I'm not sure who did it better here, guys, but both of these CEOs dancing as their stock is at all-time highs, as we see Tesla hit all-time highs.
I mean, what are you supposed to do when you're a CEO and your company's stock is at all-time highs and you're shutting up all the short sellers and all the bears? I mean, you dance like that.
You do the Egyptian.
Exactly.
I don't know if you do I feel like you dance, but why the Egyptian? That one's going to be lost on me for a while.
I think that's one of the only dances he probably knows how to do.
I don't know. I mean, I don't know who did it better in those clips, Tom. I don't know if there's a winner. I don't know if they're both. 20
years from now, when he's on Dancing the Stars, we will find out.
Yeah,
oh my gosh, that's a good
know
call.
who it is. I mean, he's got a lot to celebrate right now. You can't take away
Agreed.
anything from the guy. Plus, he's trying to make a good impression over there in a new country. Finally rolling out 2 models now in Shanghai. So, I mean, there's a lot to celebrate.
And they're finally delivering those Model 3s that are made in China to Chinese consumers. So that's good news. I mean, Tesla really proving themselves, I think, this year. Actually, not just this year, I would say more of like the last 3 months, ever since they had that surprise profit.
Yeah.
But really, really quieting all the bears on the street right now. I mean, the stock at all-time highs. People out there saying that the batteries and software that Tesla makes is just unrivaled in the EV space. So a lot to look forward to, I think, in 2020 for Elon Musk as well as Tesla investors.
And a lot of room to improve when it comes to dance moves as well. So good stuff.
Hey, dancing.
Good stuff. I'm not going to hate.
Tough crowd.
I didn't dance.
Tough crowd.
Yeah. You probably outdid me. All right. Well, meet the former UPS box handler that's now in charge of the Small Business Administration. Jovita Carranza was just confirmed to lead the Small Business Administration after an 88-5 vote in the Senate. Before her confirmation, Carranza served as the 44th Treasurer of the United States, and prior to her government position, she worked her way up at UPS, starting as a box handler for the delivery giant before becoming the highest-ranking Latina at the company. She replaces Linda McMahon, who left the position in 2019. Guys, a very interesting appointment here to the SBA.
Just a quick correction, it was an 88-5 vote.
88-5.
88-5, right. That being said, she's long been known as someone for the people, right? She wants to definitely help women as well as, people of color. So I think broadly speaking, even though she is a Trump favorite, I think a lot of people are looking forward to what she's going to bring to the table when she really takes this job on.
Agreed. I mean, I like any ground-up story, and working from the trenches all the way up, I think, is a fantastic story, regardless of political alignment.
But she really worked her way up.
She did?
Yep.
I'm not going to try to say her last name like you. I can't roll the R like
There's
that.
2 R's in there.
But yeah, I think a lot of people are very excited about her
Yes.
taking the helm there.
And the former SBA leader, Linda McMahon, moving on to a position for a pro-Trump Super PAC. So she's got other things to handle in 2020 as well. But just after the break, Bitcoin surging to kick off the year, but with big returns comes big responsibilities as the IRS looks to crack down on crypto investors skirting taxes. We'll chat with one Winklevoss Twins-backed CEO looking to take the pain out of the process when Wi-Fi PM returns in 60 seconds. Welcome back to Wi-Fi PM. More investors are jumping on the Bitcoin bandwagon, and the cryptocurrency has jumped more than 9% so far in the new year, making its way back towards $8,000 a coin. You can see where it's trading right now. But if we take a look at the big picture, Bitcoin has popped more than 90% since 1 year ago. So clearly holding in there when we talk about the gains. Of course, it's come down a bit from the all-time highs Bitcoin saw the year before, but still relatively pretty good success.
All of the tensions that we're seeing in the Middle East, all the geopolitical uncertainty, obviously giving Bitcoin a bit of a boost here. You know, it is the digital gold, and we've seen investors flock towards safe haven assets, Bitcoin probably being one of them. So if we continue to see all of these tensions escalate or sort of ratchet higher, I think we can continue to see crypto sort of get a bit of a boost from it.
Yeah, at least one of those assets now emerging as a way to hedge from some of the other volatility we're seeing out there, and more investors catching wind of that, which means potentially, depending on when you bought, more profits out there as well. And we're just a few months away from tax season, and this year the IRS will be asking specifically about cryptocurrency holdings and profits. And this comes after the agency sent thousands of letters last year requesting taxpayers who have transacted with cryptocurrency to pay back the taxes and file amended returns. It sounds like a lot of work, but this government scrutiny has seen a proliferation of crypto tax software to help ease that work and the tax confusion. Joining us now to discuss is Austin Woodward, the CEO of TaxBit. Austin, good to see you.
Nice to be here.
Yeah, thank you for joining us. I mean, when we look at all the work that goes into crypto tax reporting, it's sometimes confusing because it's hard to track a lot of these transactions in the same way that maybe some other platforms with traditional stocks might be tracking it for you. So how does TaxBit help people handle this?
Yeah, that's a great question. It is super complex to track. There's a lot of transaction volume. You trade on exchanges, you might move assets to different exchanges, to hardware wallets, so software is absolutely needed in order to automate all of that cost basis tracking. You want to make sure that you're not resetting your holding periods or your cost basis, or detect what actually is a taxable event. So that was the premise on which TaxBit was founded, was, hey, let's take the pain off of cryptocurrency users' shoulders and let tax experts handle all of that on the back end and make it super simple for everyday cryptocurrency investors and users to have their taxes automated.
And you guys are backed by the Winklevoss Capital and Winklevoss twins, obviously very active in the crypto space, but also the way that it works, you link your accounts with these exchanges to kind of read through what transactions need to be reported. Are there any security concerns along with that?
Yeah, there absolutely are. We make sure we follow best practices in security. So we only collect read-only API keys, which is huge because we don't want to touch anyone's assets. We don't want to have custody. So we only have permissions to view transactional data and perform the tax calculations on that. No custody to assets whatsoever. And we take security very seriously. We just hired a VP of compliance with great experience coming from Coinbase, one of the largest exchanges in the world. So very, very solid hire on that front to make sure that we're achieving best practices.
Austin, so in addition to the surge in demand that you're seeing because of this IRS crackdown, I imagine demand is also high because, you know, crypto, specifically Bitcoin, surging means a lot more people were investing in it. What did the regulation and what did the IRS sort of do back in early 2018 after we saw that huge run up in Bitcoin and cryptocurrency? Was the demand crazy then as well, or what was the picture like then?
Well, so many question marks, people didn't even know how to tackle it.
No, it's really interesting because 2017 was an unprecedented year. You know, Bitcoin hit close to $20,000. I think it did hit it. And user growth, if you looked at it, it was about 35 million people at the end of 17. And people thought, well, 2018 is a super bear market, maybe crypto's going away. And I think potentially regulators might have thought that or maybe hoped that as well. But user growth continued to double year over year. As we look at the end of 2019 here, initial reports are showing close to 70 million people worldwide. So it was fascinating that despite declining prices, the actual use cases and technology behind Bitcoin have been proliferating and growing. And so I think the IRS has now realized, hey, this is an asset class that's not going away. We have huge Fortune 500 companies now investing resources into it, such as Facebook's Libra project and other initiatives that are kicking off. So hey, let's get serious about this and educate U.S. taxpayers. That way no one's left in the dark and, you know, caught in trouble unknowingly.
And that was kind of the problem, too, though, because there were a lot of question marks around how you even do this, because the IRS, the SEC, there were so many agencies trying to figure it out. So I feel like they didn't really set the rules appropriately so people, the average American, would be able to figure out how much I'm supposed to pay, because it was very murky. But now that they've added this question asking if you transacted in cryptocurrencies, it's very clear that if you hit that question that you need to answer it and you need to be truthful. But I mean, what about the penalties of someone who might say, oh, I don't need to worry about this? What have you seen in the crypto world for people just kind of shedding off their responsibilities?
I think you hit on the biggest misconception in crypto, and that's that it's untraceable, it's hidden, it's decentralized. And that's true to an extent, but in order for cryptocurrency to really proliferate to the next level, tax compliance has to be followed. And the IRS, of course, anything that materially moves in value, it always has been taxable, whether that be property, real estate, equities, bonds. That's been the case for every other asset class. So cryptocurrency is no different. And so this new question that you're alluding to is really unprecedented in that 175 million US taxpayers are going to have to now intentionally answer that question. And if you lie, if you say, no, I didn't engage in cryptocurrency transactions, now the IRS can prove intent, right?
Yeah, now they got you.
Whereas before, pleading ignorance, you can kind of get away with it. Now you can't anymore. And so it is something that people need to be aware of and take seriously.
You should be excited. I think 2019, less than 7% of U.S. investors would participate. So from a blue sky standpoint, that's going to be a good thing from a marketing and customer acquisition for you.
Yeah, absolutely. We're just here to make cryptocurrency more accessible and easy to use for everyone. We don't want people to have to worry about getting in trouble unknowingly. So our software really automates that process, gives people real-time visibility into what they owe as they trade, because this is an asset class where you can just engage in transactions and before you know it, you have a tax liability unknowingly. And so our software can monitor that for
It's a very good point, though. I mean, the tax prep industry as a whole, over $10 billion a long time ago. So now if you think more people are moving to crypto, a lot of money on the table. Austin Woodward, see why you're chasing it. Thank you so much for being here. Appreciate it. Let's check in with Ines Ferre, though, on the floor of the New York Stock Exchange for more market action. Ines?
Zach, we're looking at mixed markets right now. You're looking at the Dow and the S&P that are slightly lower, but you're also looking at the NASDAQ that's in the green, that flipped into the green earlier this morning. And I just want to show you some of the best performers on the NASDAQ right now. You're looking at Micron, Western Digital. Both of those stocks hit 52-week highs after being upgraded at Cowen to outperform, with a price target raised for both of those, with the analyst note expecting that demand for chips and memory devices will keep recovering in 2020. Also, Microchip Technology hitting an all-time high today after the company raised its fiscal third quarter revenue guidance for the second time in a month. And Traders Hero have also been talking about Tesla reaching all-time highs today, and Elon Musk dancing on the stage after at the Shanghai factory after Tesla started delivering the Model 3 China-made vehicle to consumers, and also announced that it was starting production of the Model Y in Shanghai at the Shanghai factory. So Tesla being spoken about a lot here on the floor of the stock exchange. Zach?
We just played the clip again. Normally I get mad that we replayed the video, but I mean, you can't get tired of watching Elon Musk.
You can't get tired of it. No,
unless you're short Tesla, but of course we'll leave it there. Ines Ferre, check back in with you later on in the show. Next on Wi-Fi PM, though, fast food giant Burger King doubling down on its plant-based meat menu offerings. We'll tell you what it's adding to go with its Impossible Whopper when Wi-Fi PM returns. Good afternoon and welcome to Wi-Fi PM. I'm Zach Guzman, and joining me today is Yahoo Finance's Heidi Chung. along with Level Agency CEO and author of the CEO's Digital Marketing Playbook, Thomas Donahoe, in studio with us, along for the ride. It's been a hell of a ride so far.
Good afternoon so far.
We'll see what happens in Act 2. We're checking the market action right now, and still the NASDAQ, the only lone major index in the green right now, up by about 0.15%. The Dow and the S&P in the red. The Dow, as you can see there, off 100 points. Well, Burger King is doubling down on plant-based meat. The fast food chain is teaming up with Impossible Foods for the second time to test an Impossible croissant-wish.
Croissant-wich?
I say croissant-wich.
I don't know how to say it either.
French version?
Yeah, I don't know. It depends. This comes after the success of its, of course, very famous now, Impossible Whopper. And Heidi, you've eaten one of those.
So have
We've
you.
eaten one of those.
Yeah, we've all eaten one of those.
Well, everybody pretty much right now has eaten one of those. But what are we talking about when Burger King's taking the same tech and moving into breakfast?
Well, so this announcement comes on the heels of an announcement by Impossible Foods that they have actually developed a pork and sausage item. Finally, this was dominated by Beyond Meat. They had that partnership with Dunkin', and they currently have a breakfast sandwich that is offered in all of Dunkin' brand stores nationwide. And this is just another entrant into the breakfast battle. That is what I'm calling it, the breakfast battle of 2020. I foresee that as being a really, really big theme come this year. We're awaiting Wendy's. They're planning to launch their, I think, 4th attempt at breakfast. But this time it's going to cost them about $20 million and 20,000 additional employees. Now, what Wendy's has been touting is that this time around, none of the franchisees are going to have to purchase any new equipment. No new training essentially is going to be required. And so it's going to be easier this time around for success. Well, with restaurant brands, company Burger King jumping into the really looking to expand on their breakfast offerings. I think we're starting to see how much these companies want to capitalize on the most profitable part of their day.
And marketable.
Yes, and marketable as well.
Do you think that it is? I mean, I was thinking about this too. I mean, when you think about breakfast at some of these fast food places, I mean, it's clear that there is a big incentive if you're putting a plant-based menu that gets people excited to come in for breakfast, if you know that's where you want to focus.
I just think any of the trending things, whether it's lactose-free things, gluten-free things, meat replacements, if you don't have that as part of your marketing portfolio or product portfolio, that's probably going to hurt you down the line.
Yeah, absolutely. And I think one of the things that we need to take into consideration here is when we talk about fast food restaurants or restaurants in general, one of the biggest headwinds for them is commodity inflation and wage inflation, right? So in an environment where we have a ton of beef inflation and even hog inflation given the African swine fever, this is a very timely launch because now we're not going to be so tethered to the fact that animals are susceptible to diseases.
If these really take off.
Exactly, and if they're able to provide enough supply to these chains, I think it's a very, very viable option for them.
Well, you said 2020 is going to be breakfast, right? That's your trend
I think
here?
It's the breakfast battle.
Let's talk about 2019's trend because that was all about the chicken sandwich wars, and KFC is launching a plant-based chicken sandwich in the UK. The new menu item dubbed the Zero Chicken Sandwich comes amid this recent plant-based boom. But Heidi, we've seen a lot of plant-based options. Obviously, we were just talking them in burger form, but not so much in chicken. So what do we think about the move into chicken here? And also the name to me, the Zero Chicken makes me think that there's no chicken or plant-based chicken in the sandwich whatsoever.
Yeah, so KFC actually did a test back in August with Beyond Meat to test out chicken, right, in a couple of stores in the Atlanta area. This partnership in the UK is not with Beyond Meat. It's with a lesser-known brand, not to say it's a smaller brand, but a lesser-known brand called Quorn. Now, I think that's how you pronounce it. It starts with a Q, so please don't come after me if it's wrong. But yeah, so Quorn actually does not use the same pea protein isolate that Beyond Meat uses. So they use fungus.
Yum.
I know, right? So I think it's an interesting way to test out a different type of plant-based protein.
Yeah.
But
mushrooms are fungus too, though. And look at this.
I love mushrooms.
And Portobello mushroom burgers are supposedly the best.
I like the name. It's like a superhero.
Right? Corn or a hard rock band.
Yeah, but I want to briefly bring this up. This was reported earlier, but a consumer in the UK region actually was mistakenly given an actual chicken sandwich.
Yes.
And that consumer was a vegan for about 5 years or so up until this point.
Not
and
anymore.
As you can imagine, very, very infuriating. But I want to mention, we've had this issue brought up here in the US as well. Remember when I first hit the streets when the Impossible Whopper was launched, a cook in the store here in Manhattan was telling me that they were cooking the actual real burger made of beef and the Impossible one on the same grill.
No doubt problematic. And they got sued for that, too.
They did.
So there's a lot of problems here. I'm sure they're going to iron it out. Maybe that's a theme in 2020, figuring out how to appease your vegan audience there as well. When we talk about food space, though, the trend continuing in coffee, the competition, of course, as well. That's been the theme. Starbucks capitalizing, though, on the alternative dairy industry. The coffee giant is planning to introduce oat milk in select markets and also adding the almond milk, honey flat white, and coconut milk latte drinks throughout the stores in the U.S. and Canada. I mean, Thomas, you were just talking about food trends. Oat milk sales have skyrocketed 636% according to data from Nielsen. So that seems to be another hot trend in Starbucks trying to capitalize here.
I think investors and consumers should be really aware that this is a marketing exercise and not really a exercise based on legitimacy of product. A quick data point from a gluten standpoint. 86% of people that claim or would say that they are gluten intolerant, 86% are wrong. And 32% of gluten-free products have gluten in it.
Huh.
Okay, so from and I believe that market year over year is up almost 5% or 7%. So the market's growing, more products are coming out that are gluten-free, whether it's soy-based or replacement meat. This is a marketing exercise. It's not necessarily based on genetics or a real need. So I think that's a pretty interesting thing from an investor standpoint.
Yeah, no, I mean, we've seen people try and capitalize on the health trends, no doubt. And with plant-based meats, it's also been interesting, as we've highlighted on the show, not necessarily all that much more healthy, depending on what you're trying to do. If you're just saying, all right, I don't want to eat meat anymore, there's one thing, but also high sodium levels, a lot to consider. So we'll leave that there for now, because there's a lot of food trends to watch in 2020. Coming up, Facebook finally cracking down on deepfake videos after CEO Mark Zuckerberg got trolled last year. We'll tell you why its new policy might have just opened Pandora's box right after this.
You know what I think?
Welcome back. Facebook is updating its content rules once again. The social media company announced in a new blog post that it's now banning certain videos that feature advanced editing techniques, otherwise known as deepfakes, like the one we saw an artist satirically post on Instagram last year. Let's take a look back to that doctored video to remind you.
Imagine this for a second. One man with total control of billions of people's stolen data, all their secrets, their lives, their futures.
So that was, of course, not actually Zuckerberg speaking there. But Facebook clarified that the update to its rules would apply to any videos that have, quote, been edited or synthesized beyond adjustments for clarity or quality in ways that aren't apparent to an average person and would likely mislead someone into thinking that a subject of the video said words that they did not actually say. Importantly, though, the company noted that the policy against such videos would not apply to any content deemed to be, quote, parody or satire, which again, guys, here kind of opens up Facebook to a lot of question marks in terms of what they tried to avoid in the first place, which is calling balls and strikes, not just in what is parody and satire, but also what is an average person? How do you define these things? And it kind of opens the door, Tom, to Facebook getting called out here.
It's the same ballpark of arbiting truth in political advertisements, what's right or wrong, what's true or false. And I think he kicked the can as far down the road as he could. Initially came out a few months ago and said, I believe in the First Amendment, which, by the way, is absurd because he, at the end of the day, if he wants something done, it happens in Facebook. So the First Amendment has nothing to do with it. But his initial reaction was, look, our job is to not call balls and strikes. So this would probably be the first larger, slippery slope, foot in the door of them doing that. And I think that's, I don't want to say it's a third rail, but where does that end? It's not just the deep fake thing. It's going to go into, in 2020, the political arena, to say nothing of general user content.
To that point, Tom, I'm going to channel my best Liam Neeson impersonation and say good luck. Because right now, Facebook can't even seem to manage all of the issues that they have on their platform at the moment. But in order to tackle something like this, it takes even more manpower, even more AI at this point. So how much more are they going to invest in that? And who's regulating who at this point? We don't really have great regulation coming from Washington right now. So they're all self-regulating right now at this point, right? So how much can we trust Facebook and Mark Zuckerberg here to effectively regulate content on their site, which they haven't been able to do successfully?
Let's not forget, too, I think that's part of the reason why they pushed internally to promote this independent editorial review board, content review board, for lack of a better term, set up. They haven't established who's going to be on that, but they have announced that people will be named to it. So that might be a piece in terms of saying, all right, it's not us calling it, this is our independent review board. They're not Facebook employees, but of course, it's kind of unclear how they're going to relate to the company's board. And also, the question marks, those are deep fakes we're talking about there. But that doesn't apply to all of the doctored videos on Facebook's website. There was, of course, the one that we talked about last year with House Speaker Nancy Pelosi, which altered her to appear drunk. And that video would not come under the same rules because it wasn't necessarily altered to the idea that you wouldn't be able to tell was altered, and also it wasn't a deepfake. She was just slowed down to make it look like she was drunk.
Yeah, I think to your point, it might not be a lack of desire to do it. It's lack of manpower. Just do the math. 2.45 billion users on the aggregated networks that Facebook owns. It's not feasible. I mean, AI can solve, we're sitting in 2020, AI is not yet to the point where you can flip a switch and it can solve 99.9%. It's going to have to be a manual process. How do you even scale that?
Exactly.
It's a big problem, and I think that's one that it didn't solve in 2019 and is definitely overhanging here in 2020. And no doubt, again, it all ties back to that big event we got coming up later on in the year, the election, and what Facebook can do around that. But after the break, it's a bird, it's a plane, it's an Uber, and Hyundai flying taxi. You won't want to miss what the duo is working on. Stick with Wi-Fi PM. right, welcome back to Wi-Fi PM. We are checking the market action we're seeing right now, and things remain mixed. As you can see there, the NASDAQ remains in the green, up by about 0.15%. The NASDAQ is the only major index in the green right now, Heidi. Look at that, the Dow off by about 108 points. Well, you may soon be hailing a ride in the skies because Uber is partnering with Hyundai to develop electric air taxis. The company's announced the concept at CES, and the flight sharing service could be ready as soon as 2023. Of course, there's already helicopters out there, so I don't know, layman's terms, you might be able to call a helicopter an air taxi, but this here is what the concept looks like from Hyundai and Uber. That
looks cool.
Awesome.
It does look cool, but you could also call it a helicopter. What's the difference here? Am I missing something?
I do not know the details of
what is and what isn't.
I do know what's going to be similar. Both of those things are going to be insanely subsidized by very wealthy private equity people until they have to make a profit. Again, isn't the helicopter ride out of JFK $100 or something where the unit economics are so insanely from as of today, like I absolutely want to do it before they price it to $500 or whatever it's going to be.
There was a weird time though when it was really backed up in Manhattan, where I think someone saw that the Uber taxi ride was cheaper than actually getting an Uber XL or one of the nicer XLs.
Right, you guys were planning to try that out, but I don't know if that happened.
You know, there's weather delays, always issues around weather.
I know this is going to sound silly because car accidents are way more frequent and also very, very dangerous, but it scares me. And I've ridden in a helicopter one other time, and it was a Blade, and I can't say that it was a pleasant experience. Helicopters, you feel a lot of pressure.
It's for street cred.
It is.
It's for the gram.
How was your ride to work? It was awesome.
I don't know. Check my story. Peep my story. There were some blades involved. I don't know. In the air. Couldn't tell you.
Talk to my pilot.
Yeah, I think it's a serious.
It's a win.
It's a serious win. But Tom Donahoe, thank you so much for sticking around for the full hour. I want to thank you for being with us today. Heidi Chung, thanks as always. Let's check in with Ines Ferre on the floor of the New York Stock Exchange for more market action. Ines?
Zach, I'm here with Matt Cheslock. Matt, we're looking at mixed markets today, but still about 1% off all-time highs. Are investors kind of shrugging off any tensions with the Middle East?
They seem to be shrugging them off. If you're going to count this as a dip to buy into, well, I mean, that's pretty creative, right? You're finding a reason to allocate money to the new year. So, but right now we're definitely shrugging it off. You see oil's backed off a little bit. That's despite an oil inventory number that was rather bullish for oil last week, and then all the tensions. So really, there's no real conviction, but they're certainly shrugging off what potentially could be a hotbed issue.
The ISM non-manufacturing number came out, and it came out better than expected, and quite a difference also from the manufacturing number. So what are you seeing there?
You know, what's interesting is that manufacturing, people are now talking about it, the smaller role that it plays in the U.S. and things. So that number is really not moving the markets as much as it could. So while it was a good number, it wasn't anything earth-shattering, I think, to really move the needle one way or the other. That's why this market right now is pretty undecided on how to take the start of this new year, and we're only 1% off the high, as you mentioned. You know, it's a good time to reevaluate your portfolio, I think, based on some of the economic numbers and some of the other things going on.
The jobs report is coming out this Friday. Are there any expectations there?
What's interesting about this jobs report, it's going to include the holiday season. And, you know, you're going to have numbers. Hopefully the estimates are going to be all over the map, and it's going to be somewhere in between. So this is one I think you kind of have to throw out in my mind. I don't know if it's going to matter as much because of all of the job creation that takes place during the holidays. It was a little bit shorter of a season, which is going to play a part of it as well. So there's a lot for the Fed to look at as you look at this jobs number, but I'm not sure they're going to take a whole lot into consideration.
Is there anything that these markets should be taking into consideration which they're not?
No, you know, I mean, the earnings estimates have been lowered a little bit, which is a good sign for the market. It gives us a lower bar to hurdle. I think the first half of the year, with the absence of geopolitical news, is mildly positive. And I think we're starting to see some stocks separate themselves from others going forward. I think you're going to continue to play stocks that have performed well. Meaning that some of the tech names that have run, people are still buying into Apple. We're seeing upgrades in Apple today. Those are still continuation. I think that's where money's going to flow early this year.
Thanks so much, Matt Cheslock. Zach?
All right, coming up, President Trump is slated to meet with Greece's prime minister as tensions with Iran escalate. Stay tuned for live coverage. Next, the ticker starts in 2.
Good afternoon and welcome to the ticker on Yahoo Finance. I'm Shauna Smith. Checking in on the market action. It is a down day. We have the Dow off just around 96 points. On the move to the downside comes as investors weigh the risk of a possible U.S.-Iran conflict. You can see the Dow now off 96 points. The biggest decliners in the Dow, Merck, that stock off over 2%. We're also seeing losses from Chevron, JP Morgan, Exxon, and Caterpillar. Those stocks are the 5 worst performers in the Dow so far today. The S&P is also moving to the downside. The Nasdaq, though, still holding on to gains. Well, first, let's get to the latest. Secretary of State Mike Pompeo speaking to reporters earlier today about the rising geopolitical tensions with Iran. Yahoo Finance's Jessica Smith that joins us now from Washington, D.C. with the latest. Jess.
Well, in that briefing, Secretary of State Mike Pompeo told reporters that it was the right decision to go forward with that strike that killed Qasem Soleimani. He said that it was the decision that kept Americans from dying. He also went on to talk about the President Trump and his words that, that it could hit Iranian cultural sites in retaliation if Iran were to strike the U.S. Many have said that that would be a war crime, and here's what Pompeo had to say about that.
Target that's being reviewed, every effort that's being made will always be conducted inside the international laws of war. Seen it. I've worked on this project, and I'm very confident of that.
Some members of Congress will be briefed on the situation tomorrow, so we'll be sure to keep you updated on what they say about the situation after they are briefed by the White House and the Pentagon.
Jess, there's another thing on the agenda today that we are watching. President Trump is set to meet with Greece's prime minister at the White House this afternoon. Right. This, of course, comes as the tensions do remain high between the U.S. and Iran, what you were just talking about. What are you hearing in regards to that in Washington, and do we expect President Trump to comment any more on the latest with Iran then?
Well, the situation with Iran will surely come up in that meeting. It is just on everyone's minds here. A senior administration official has said that the focus of this meeting will likely be highlighting Greece's efforts to open up to business. They want to show American investors that they are open for business, that they have taken steps to improve their business climate. That's according to a White House official. But surely Iran will come up. Reporters will be in the room, and that is likely what they will ask him, at least when they are involved at the beginning of this conversation. Shauna.
All right, Jess Smith, thank you. Well, joining us now to talk more about this is Scott Wren. He's a senior global market strategist at Wells Fargo Investment Institute. And Scott, when you take a look at the potential, the rising tensions, I should say, between the U.S. and Iran, the potential economic impact it could have on the U.S. economy, how big of an impact do you think it can have?
Well, it all depends on what happens to the price of oil. So let's say something very unlikely happens, like the Strait of Hormuz is shut down for any length of time. Global oil prices are going to go up. Gasoline prices are going to go up. That means U.S. consumers and consumers really in many parts of the world are going to have less money in their pocket to spend on discretionary items. So that's how the economy gets hurt. Expenses go up for businesses, whether it's airlines who have probably actually hedged most of their fuel usage out over the next 12 months anyway. But some businesses would be negatively affected. That's how it's going to hurt the economy if something like that happens. In our opinion, it all comes down to how high is the price of oil going to go.
Scott, has this at all changed your outlook in terms of the U.S. economy and for the markets in 2020?
You know, it hasn't at all. At least we don't really see a reason to change it. Our year-end 2020 price for West Texas Intermediate is $55 to $65. So, we've seen oil sell off a little bit here. We're moving towards the middle of that range. Really, I don't think the U.S. consumer is going to be affected unless that gasoline price goes up, like I mentioned. So, the bottom line for us is we're expecting modest growth. We're expecting modest inflation. We don't think the Fed's going to make a mistake. Don't think there's a recession, or at least a very high probability of one over the course of the next 12 to 15 months. So we've been trying to stay the course. We want to lean a little bit cyclically. We like tech. We like consumer discretionary. We like financials. We don't want our clients to get too defensive. And I feel pretty good that that's going to be our outlook as we move forward.
Scott, with the trade deal, you're saying that you don't want your clients to get too defensive. Is now the time to maybe add some risk to a client's portfolio? Just because even though we do have these geopolitical tensions, trade at least seems to be progressing in the right direction.
You know, it does, and I'll be honest with you. We'll probably have let's say maybe a mid-single digit total return this year. One thing where we could be too conservative, we didn't think this trade deal was going to come together this soon. Now, did we expect some huge trade deal? No, we didn't. But we thought there was going to be more tensions that would last longer. So we get something signed here on the 15th. I don't think we'll hear much about phase 2 in 2020, and so I think that's bringing down these trade tensions is important. Certainly, the market's been pricing that in. That's one of the reasons why we're run up here to the level where we're at right now. And also, I think some of the news from abroad is starting to improve a bit. And I think those two things combined, you throw in a little chasing from people who have been underinvested. That's why we're at 32.50 or awful close to it.
Scott, do you think, as it stands right now, that the market is overbought in terms of U.S. equities, at least?
No, I tell you, really, last year we thought the market was, our target for year-end 2019 was 30.30 in the S&P 500. So, we finished the year better than that. So, for us right now, stocks are a little bit ahead of fair value, but they're not super expensive. They certainly aren't cheap. So we would say stocks right now are pretty close to fair value. And this year, in addition to those other things that I mentioned that could be positives, one thing it's hard to gauge, we've seen a little bit of chasing so far in this run we've had over the last few months, not a lot. And if we get a lot of chasing, the market has some upside on something like that could take us, beyond really fair value. And sometimes in other cycles anyway, taking us well beyond fair value.
Scott, what about the fact that there's still some uncertainty? We talk about the rising tension between the U.S. and Iran. In terms of volatility, do you expect an uptick in volatility in 2020?
Well, I think it's safe to say that with the presidential election coming up, market not paying attention to it now, but that'll change in the summertime. These Iran tensions likely to not go away anytime soon. I think that we're going to have some bouts of volatility, but for us, our macro outlook is good. It's not great as we look ahead. So all else being equal, I think if we see some pullbacks here, the 200-day moving average is almost 10% below where we are now. And, 10% pullbacks happen pretty regularly, more than once a year on average. So I think we'll be looking at that as an opportunity should we see some pullbacks that are meaningful.
Scott, what do you think the biggest risk is to your projections in 2020 at this point?
Well, I think one thing is that this international growth does not pan out. And so if we see Europe really slip from here, if we see this emerging market growth that looks like it's stabilizing and maybe improving a little bit, if that doesn't pan out, that's going to be a real problem, I believe. I don't think we're going to see anything in terms of the Fed making a mistake, but I would think that global growth is the biggest risk as we look down the road.
All right, Scott Wren of Wells Fargo, thanks for joining me.
Thank you.
Well, coming up, Elon Musk breaking out his dance moves on a landmark day for Tesla in China. We've got the details on those moves and on the newly announced expansion plans over in China next. We have brand new developments for Boeing, the airline or the airplane manufacturer, saying that it will recommend simulator training for the 737 MAX pilots. Emily McCormick is with me to discuss. And Emily, what is the latest on this breaking news?
Well, this is a new update coming from Boeing because originally they were just anticipating that in order to get the 737 MAX back into the air, it would only require additional computer training. Now that they're actually anticipating simulator training, this is something that could further delay that eventual ungrounding of the Boeing that we've had since last March for this aircraft. This is what interim Boeing CEO Greg Smith had to say in a statement just coming out at about the top of the hour. He said, quote, "Public, customer, and stakeholder confidence in the 737 MAX is critically important to us, and with that focus, Boeing has decided to recommend MAX simulator training combined with computer-based training for all pilots prior to returning the MAX safely to service." It's interesting with the timing of this because we also just had the Wall Street Journal earlier this week reporting, citing people familiar with the matter, that the FAA was actually also mulling requiring that Boeing have this simulator training on top of the computer training. That's something that the FAA had not necessarily been considering originally in effort to try to get this plane back in the air in a timely manner. But it's looking like this is something that could be on the table now for Boeing.
Yeah, Emily, what's interesting was we just talk about the importance of really just for Boeing and for the shareholders of getting the 737 MAX back in the air, getting that fleet flying again, just in terms of future revenue, because we know that it's not only been hurting Boeing, but a lot of the airlines as well, Southwest, American Airlines. So the fact that they could now require this, of course, is great news, I think, and they'll win back public trust. But then, of course, that also is likely the fact that the 737 MAX will be grounded now for quite some time.
Right, and that's something that investors are going to want to look at once we get those next earnings results out at the end of the month. So Boeing has previously earmarked about $6.1 billion in compensation for its customers and potentially also for its suppliers who really were blindsided by that announcement late last year that the 737 MAX production would be halted for the foreseeable future until they're actually able to get this program back online. That's something, and these costs, the compensation, could potentially go up even further, and it's something that could, again, cut into Boeing's bottom line.
All right, again, we just had a Boeing stock up on the screen. Shares are moving up just around 1.3% today, trading at $338 a share. Emily, stick around, because I also want to ask you about the latest with Tesla. So we had Tesla CEO Elon Musk. He was busting a move at the automaker's Shanghai factory earlier, celebrating the first deliveries of the Chinese-made Model 3 vehicle. Now, the executive also announcing that Tesla will make the Model Y SUV at the same facility. And Emily, we talk about the importance of China. You can see Elon Musk dancing right on our screen, but we talk about the importance of China. Elon Musk is obviously very excited about that. The fact that they are now going to be making the Model Y SUV there. How big of a boost could this be for Tesla's business?
It's huge. The China Shanghai Gigafactory and getting that online has been central to the bull thesis for this company. We've seen the stock pop continuously over the past couple days in anticipation of this launch. And right now, this plant really has been ahead of schedule. The plant's now producing around 1,000 cars per week, planning to double that rate over the next year. That's something that the factory's manufacturing director, Song Gang, actually said last week. It's a big boon also for the Shanghai economy, and that's part of the reason why China has been so friendly and so amenable to Tesla coming in and becoming a foreign automaker, launching production in the country. So right now, only about 30% of parts used in this facility are sourced locally, but the company does plan to increase that up to 100% by the end of 2020. So that's why we also saw shares of Chinese companies like Tianjin Motors, which is a supplier for Tesla, along with VT Industrial Technology, really getting a boost up today.
Emily, what's interesting is Tesla sees opportunity over in China at the same time that a lot of these other U.S. automakers have been struggling in this market just because of the decline that we have been seeing over in China. Is Tesla expected to have a better success rate than maybe some of the traditional automakers over there?
Right now, it does look like that is the case, just because Tesla does operate in that new energy vehicle or electric vehicle space. That's something that China has really been pushing as it's trying to move towards greener energy sources. It's really been providing subsidies. This is something that Tesla has also definitely benefited from if we think about the fact that it does qualify for an exemption from a 10% purchase tax in China and a government subsidy equivalent to $3,560 US per vehicle. So really trying to give a boost here to these electric vehicles, which is, of course, what Tesla specializes in and what General Motors is also eventually trying to push into. They're also trying to launch about 10 new vehicles over the next couple years in the China market.
Emily, it was interesting. We talk about the fact that these traditional automakers are struggling. We had GM out with its China numbers, and they posted their biggest decline in sales in China in 2019. It was down just around 15%, and that followed a 10% decline in 2018. When they're trying to make some progress in this region, are they expected to have, or really to face, more headwinds in front of them?
Definitely. I mean, this is something that we've seen with the Chinese auto market as a whole, but again, it's that electric vehicle vertical within that they're trying to help bolster. Still, even with some of these declines we've seen, I think it was a 4.2% year-over-year decline we saw in China's overall auto market in November. We have seen strength within the pocket of electric vehicles, and we've seen competition pick up in that space, and that's something that Tesla also will face. So we have Volkswagen's Audi planning to start selling 9 new energy vehicle models in China over just the next 2 years. We have Daimler's Mercedes-Benz coming in with its own new models. And then we have actual Chinese domestic players like NIO and XPeng, which are also operating in the space.
Yeah, NIO stock has seen quite a boost over the last couple of days, right? Emily McCormick, thank you. Well, moving on, let's talk about a bullish call on Netflix. JP Morgan raising its outlook for the streaming giant. Now, the bank expects stronger international growth as Netflix expands its original content. We have Inez Ferre joining us from the floor of the New York Stock Exchange. And Inez, this is another bullish call on Netflix. This is all about international growth. Why do you think this will be such a force for the company going forward when they have so many more competitors now in the marketplace?
Shauna, well, a few weeks ago, Netflix had given out some details on its international growth, and there were very impressive numbers. And on the heels of that, you had some upgrades. And JP Morgan is saying that Netflix could reach some 300 million subscribers globally by 2024. And so much of this is, of course, based on the pace at which they're growing internationally. Now, for the fourth quarter, JP Morgan's predicting 7.7 million net adds for globally, and that would come in ahead of the 7.6 million guidance. It did, though, lower its fourth quarter EPS to an estimate of 3 cents. That's because of some debt that Netflix had raised. But really, the main thesis here is that they're growing so much internationally, and Netflix is ahead of the game when you talk about international growth with these streaming services. RBC Capital came out with a note not too long ago and basically saying the same thing, that they're growing so much abroad, and also the fact that so many investors are talking about the fact that Netflix spends so much money on its content compared to some of these streaming services. Well, abroad, the content costs a lot less than it does in the US. So RBC, for example, is saying that long-term, Netflix International could be as profitable or even more than it is in the US. This is, of course, all based on costs and, of course, based on the sheer growth of the international market, and really the first mover advantage when it comes to global expansion.
And as what's interesting here is there was a recent survey out from Trade Desk, and they were asking people just in terms of, one, how much they would be willing to pay for some streaming services, and then two, if they would be willing to watch ad-supported models. And majority of them said that they won't pay more than $20 a month for the streaming TV services. But then they also said a majority of consumers are willing to view ads relevant to their interests to reduce subscription costs. I wonder if that's something that Netflix could look to in the future, just since we're seeing a rise in competition and people don't really want to dish out more money each month.
Yeah, well, Reed Hastings has said that he's not going to go towards an ad model, but I will tell you that, for example, Comcast already sees that there will be some space for ad tier offerings, and so Peacock is going to be offering different tiers, some with ads, some without ads, some with partial ads. But basically, what the survey is that you're referring to is also saying is that yes, people do not want to watch ads, but 53% of those surveyed said that if it will lower the cost of their streaming, then they're willing to, of course, watch ads. As you said, though, this is a space which, because it's so tight and because people don't want to spend more than a certain amount, there will be streaming services that will need to look at advertising in order to go forward.
All right, Inez, thanks so much.
Thank you.
Well, straight ahead, the U.S. trade deficit dropping to the lowest level of the Trump administration. But how much of an impact will it have on investors? We've got those details next. Welcome back to the ticker. The closely watched ISM non-manufacturing index increasing last month as optimism grows around a U.S.-China trade deal. Now the index rose to a reading of 55 in December. That was up from 53.9 in November. Joining us now is Ryan Payne, president of Payne Capital Management. We also have Alfred Eskandar. He's the president of Salt Financial. And Alfred, let me start with you. We're seeing this divergence between the services sector and also manufacturing. When you take a look at what's going on in those two sectors, how big of a challenge do you think that will be for the markets this year?
Well, I think it played a big role last year, believe it or not. So this trend is not new. It's been happening for several quarters, and you saw a lot of defensive posturing because of it. The imminent sort of manufacturing recession that's been talked about for so long pushed investors into much lower vol, safer type of positions on the equity space.
Ryan, when you're positioning your portfolio for 2020, we're coming off a record-setting year. Obviously, we've seen a pullback over the last couple of days. How are you positioning your portfolio at this point?
Well, I'm just as wildly bullish as last year. And of course, I was right. And if you just look at statistics, I've talked about this a lot.
You don't think we can have a repeat of 2019, do you?
I don't think you're going to see another 20% plus return. But anytime you have a 20% plus return year, the following year is typically like averages around 10%. So a double-digit return this year is not out of the question, Shauna.
What about the rise in the geopolitical tensions between the U.S. and Iran? We obviously see it spooked investors a little bit, although we didn't see maybe the extent of the sell-off that we were expecting to see. Do you expect that to kind of simmer down at this point and be in the rearview mirror pretty soon?
Yeah, I think, look, oil prices have kind of settled back. Last year we had that drone attack, same thing happened, big spike in oil, came back. And really, we've kind of been at war with Iran since the 1980s. So I don't think it's as earth-shattering as as people may think, especially the market right now is not reacting that dramatically to it.
Alfred, we saw the price of oil spike as a result of this. Energy, obviously, sector-wise, was a huge underperformer of the last decade. Do you expect that to have changed tides a little bit, that trend to change as we head into this new year?
It's really hard to predict, but energy lagged all the major sectors last year, I think, by double digits. Last year was really a year of high beta, so you saw all the sectors that were sensitive really move much higher than the overall market. Going into this year, we saw the spike. I think the biggest news was just how little the VIX actually moved in light of these recent events. And I believe the VIX was at 15 at the start of the year. It dipped lower, and I think we're back to 14.5 today.
Well, then does that suggest that investors are complacent?
I think it's more of a function of the efficiency of the market. I think one thing which gives me reason to agree with Ryan for 2020 is just is that you've got a really great alternative to the rest of the world. We've been talking about EM for a while. I think EM will find a bid this year, but more importantly, when you look at U.S. companies and the U.S. market and the U.S. Market structure, it's as sound as it gets. It's incredibly efficient. It's incredibly liquid. And, investors want liquidity when they need it, and the U.S. market offers it.
Ryan, you're bullish on the U.S. market. Are you seeing any opportunity overseas, specifically in emerging markets?
Yeah, I would go with Alfred on that one. I love the emerging markets here. Again, it just comes down to you have cheaper valuations. The dollar's finally starting to weaken, which is very good for the emerging markets. And growth rates are better overseas. It's hard to believe. But if you look at growth rates, specifically in the emerging markets, where populations are bigger and a lot younger, that's really the long-term opportunity. The U.S. is still a great place to be. But long game, you got to have emerging markets in your portfolio.
Well, you two are very bullish as it stands right now. I want to talk about the Warren Buffett indicator, because that's something that's maybe flashing some warning signals. So the Warren Buffett indicator, for our viewers that don't know, it measures the total market cap of U.S. stocks versus GDP. So as it stands right now, that's at a record high of 153%.
Sure.
Does that make you guys second guess or be a little bit hesitant at all?
So the good news about being a quant-driven firm is that we get all this fear out of the way, right? So 153 historical high, but if you look at the last 3 years, it's been trending that way. So it has been in red zone area for 3 years consecutively while the market has just ripped. Now, looking at GDP growth decline while the market is up 31% in 2019, you would expect it to get even more alarming, which is where we are. We don't use it, so we don't necessarily look at it, but what we're telling investors and advisors is it is a really good time now to look at your portfolio's risk. Take a good look at how sensitive is your portfolio to the overall market, because what we're seeing is that there's going to be more volatility of movement. And investors don't want to be caught flat-footed and not realize, well, I'm carrying a lot of risk. Well, that's why your portfolio moves so much to the downside.
Yeah, I have to agree with that. I mean, when the tide goes out, you can see it's been swimming naked. If you see where any money's been going in the market, it's been a lot of growth stocks and growth where the multiples are actually getting overvalued here. Where if you talk about value stocks, we talk about international stocks, there's a lot of places where valuations are a lot cheaper and the value is a lot better for the long term. You're not going to know that until the market actually pulls back. So it's a good time to get rediversified. I absolutely agree.
Ryan, what about technology? Technology was a huge outperformer in 2019. A lot of these tech giants were covering calls, it seems like almost every day, and there's still numerous bullish calls when it comes to some of the biggest names like Apple, names like Facebook, like Google. Are you seeing any investment opportunity there?
I think it's going to keep going up just because if you buy the S&P, and that's what investors like to do, it's like a tech fund and drag. It's basically 30% tech, so that can keep bidding those names up. But again, longer term, that's probably not where the value is. Short term, you may get another pop. I mean, Apple was up almost 80% last year. You may get some upside here, but that's not where the real value is if you're buying new equities. You want to be buying value again, international, emerging markets. All those things are really better value.
Yeah.
All right.
Well, we just try to make it simple. Either it's risk on or risk off. And if you believe more in the value trade, then you want to be more in a risk off posture. That's your low volatility stocks, your low volatility funds, sectors. And that'll allow you to participate in the equities, but also give you some cushion to the downside, which is what everyone fears.
Everyone. All right. Well, Alfred and Ryan, thanks so much for stopping by today.
Thanks, Sean.
Well, coming up, how the global shipping industry is bracing for a potential conflict between the U.S. and Iran. We've got those details. Stay with us. Welcome back to The Ticker. I'm Shauna Smith. Let's give you a quick recap of some of the tickers that we've covered in the show today. Our first was Boeing. Now it's recommending that pilots train in-flight simulators before flying the 737 MAX jet. Now the move is expected to likely cause additional delays to getting that jet back into service. Also in focus, we took a look at Tesla. Elon Musk saying that the automaker will begin production of its Model Y SUV at its Shanghai Gigafactory. Now the news coming as Tesla delivered its first Chinese-built Model 3 sedans to customers in the country today. We also took a look at Netflix. JP Morgan is now predicting that Netflix's global paid subscribers will nearly double by 2024 to 300 million. Now, it's also estimated that Netflix will have added 7.7 million new global subscribers in the fourth quarter, above the current guidance of 7.6 million. Checking in on the closing price of oil today. When you take a look at crude, it's giving back some of the gains from earlier this week, closing off just around 0.8% at $62.73 a barrel. Now oil ticking just a little bit lower as investors rethink the likelihood of supply disruptions in the Middle East after the U.S. airstrike killed a top Iranian general last week. Analysts are turning bullish on both PayPal and Square. We have Bank of America raising Square to a buy rating as Bernstein upgraded PayPal to outperform. Emily McCormick is back with us. And Emily, when you take a look at some of these bullish calls on Square and on PayPal, Square was a huge underperformer in 2019. Why do you think the narrative around these two companies is changing at this point?
Well, it's exactly that. It's because they'd underperformed so much, particularly on Square's side in 2019, that analysts are really expecting them to post a turnaround, especially relative to analyst expectations. So if we just look at the stock performance for Square, that was only up 11.5% versus an S&P 500 appreciation of 29%, and then the more comparable Russell 1000 Financial Services Index rise of about 31%. So over the past year, there have been concerns that Square's overall revenue growth has been slowing. We saw that trend for the past 4 straight quarters. Most recently, that increased by just 40% in the third quarter of 2019. It's down from about 60% just a couple of quarters ago. So really, as we're seeing this company that had been on the public markets just for the past 4 years, really starting to see a little bit of a slowdown from that high growth startup it once was to a little bit more of a mature company.
Emily, when you take a look at the future just in terms of banking, a lot of these, there's obviously been questions when it comes to Square and to PayPal, when it comes to Bernstein and Bank of America at least. They're seeing a favorable outlook beyond that 1-year estimation. Is there any, I guess, hesitation in terms of Square and PayPal's dominance in that space at this point?
Well, one of the concerns, I mean, particularly in an area that they both compete in, is really on the fact of, these customer kind of retail investor transactions that take place. So you have Square Cash and then, of course, Venmo with PayPal. Those are two areas that have seen a little bit of a slowdown beneath those headline revenue figures over the past year. And of course, since they compete in the same space, that's something that analysts are going to be watching very closely. But at the same time, these are two companies that have been very acquisitive, but have also been divesting some of their businesses in order to focus more on those core spaces. So, I mean, take PayPal, for example. They acquired Honey just late last year for about $4 billion, its largest ever acquisition of a startup, essentially. But that company had already been profitable. It really benefits that core payment space and customer discounts, really working in that same fintech space where PayPal has accelerated and exceeded. And that's something that Bernstein in particular here with this call is very constructive on.
All right, Emily McCormick, thank you. We're also watching Micron and Western Digital today, a bullish call on both of these stocks. They got upgraded from Cowen. Now the chip makers raising their ratings from market perform to outperform. Ines Ferre is back with me. And Ines, when you take a look at some of these calls, Micron, for example, they're seeing an upside of just around 30% for the stock, raising their price target to $70 a share, just from $50 a share. Why are they so bullish at this point?
Hey, Shauna, in part because the analysts are saying that the memory fundamentals will improve faster than expected. Also, they're saying that this is because of 2 reasons. One is because of a modest server upgrade, which is expected. And also, of course, the 5G cycle. And the upgrade, as you just mentioned, was to outperform. The analysts are saying that the valuation right now for Micron is compelling, that their sales will be increasing in 2020 and 2021. And also, when you take a look at Western Digital, Cowen is saying that they've passed the bottom of the NAND chip cycle, that they're looking at greater than anticipated margin expansion. The 5G cycle will be starting in March, and they're very bullish on that, of course. And also the video game console, which is expected later in 2020, that is also something that to look forward to. So as far as these stocks are concerned, both of them hit 52-week highs today. They're the best performers, some of the best performers on the NASDAQ. Earlier this morning, the NASDAQ flipped into the green, and these are some of the top performers on the NASDAQ this morning.
And as you quickly mentioned, 5G, obviously it could be a positive catalyst for these companies. How important is the success of 5G to this bull thesis?
It's huge because so much is banking on 5G, and really you've seen this over and over with these analyst calls, that 5G is going to drive so much of the growth going forward. So both with Micron and also with Western Digital, this note was citing 5G, and it's something that that's expected to go not only, I know that we're talking about the end of 2020 when we're looking at really the implementation of 5G, but really across all industries and going into 21.
All right, Ines Ferre, thank you.
Thank you.
Turning to the presidential election, some states like Texas are undergoing population changes, and it could have a big impact by 2024. This is all according to the Brookings Institute. Sabeel Marcellus is here to break all this down. And Sabeel, when you take a look at the population change impact on Congress and the future in terms of 2024, how does that all shake out?
So reliably, Republican states such as Texas could possibly turn blue because of population changes we've been seeing over the past decade. So what has happened is that the Census Bureau has come out with new numbers showing what has happened across the country from 2010 to 2020. And what we're seeing is that there are some big winners and some big losers. Now, states that are winners are gaining congressional representation, which means that they're also gaining votes when it comes to the Electoral College that decides presidential elections. Big losers, they're losing seats in Congress and thus they're losing power when it comes to deciding those elections. So the big winners are states like Texas, Florida, North Carolina, the West and the South.
Why are these states winning? Why are they being able to attract some of these voters? Is it all because of an improved economy? Is that why more people are moving to some of these states?
Yes, the improved economy is key, Shauna. So what we're seeing is that states like New York, Connecticut, that had a lot of people there, they basically stayed put as we were coming out of the recovery. But once the whole economy started to recover, we saw new opportunities in different states that had lower costs of living. Then we saw domestic migration and people move to those states. So that's what we're seeing, like Florida, Texas, their population grew, and therefore they're going to be getting more congressional seats as a result.
And then some of those blue states are the ones that are losing. They have negative.
Exactly. So over the past 4 years, for example, New York has shrunk. Their population has gotten smaller, and they're going to be losing a congressional seat.
And this isn't expected to happen or to have an impact, really, I guess, until 2024.
Yes, it's going to impact the 2022 midterm elections and then 2024 presidential elections.
All right, Sabeel Marcellus, thanks so much. Well, coming up, how global shipping companies are preparing for escalating tensions in the Middle East. We've got an expert here to weigh in next. Tensions between the U.S. and Iran continue to rise after President Trump doubled down on his threat to target Iranian cultural sites if Tehran retaliates. Now, Secretary of State Mike Pompeo stating earlier today that every Iranian target will, quote, be conducted inside the international laws of war. Joining us now is George Friedman. He's founder and president of Geopolitical Futures. And George, when you take a look, let's start big picture. Lots of questions in terms of how Iran is going to respond here. What do you think is the most likely scenario?
Well, nothing much in near run. Iran has a huge problem with the sanctions, tremendous internal problems. If it has a major strike elsewhere, other countries might join it. But right now they got a bigger problem. Internally, how did the Americans know where Soleimani and the Iraqi were? How do they know what time he'd be there? Right now, what the Iranians are doing is trying to examine their entire intelligence structure to find out how it leaked. Because that really is the mystery of this. Not that there was the attack, but that the Iranians seem to be penetrated.
Well, once they do figure that out and they're trying to figure out how to respond, in terms of the U.S. best preparing itself for possible retaliation, do you think we could see something like a disruption in the Strait of Hormuz, or do you think a more likely scenario would be some sort of cyber threat from Iran?
Well, they've already tried to close the Straits of Hormuz a few months ago. The U.S. didn't respond, and frankly, at the moment, Hormuz is important, but it's not like it was 10 or 15 years ago. Some sort of cyber attack, don't know what that means, don't know what it would affect, don't know if they have the capability. Cyber attacks are things that seem to be either hacking somebody's email account, but I don't really see this as a response. The normal response for Iranian intelligence is two things. One, they wait quite a while before carrying out the response, and two is attack on a populated area, trying to cause as many casualties as possible.
George, the Trump administration, it's no secret that they favor a regime change. Right after the attack was carried out, we had John Bolton, Ambassador Bolton, on Twitter basically saying that maybe this will be the start of some sort of regime change over in Iran. What do you think the likelihood of that is?
I think at the moment not very likely, and I should point out there's been the policy of lots of administrations before the Trump administration. We don't like Iran. The break point came when the Shah fell, when the small businessmen went out in the streets and demonstrated and the army split. Well, you've had some demonstrations by small businessmen, but the army remains firm. So I have to say for this period of time, it's going to hold together. But if they start to think, the people start to think that these sanctions are a permanent feature of Iranian life, they're hurting badly by these.
George, do you expect further escalation? I know you're saying it might take a while to respond, but are you expecting some sort of response?
Well, right now, they have to figure out if they plan a response, will the Americans find out? Right now, they've had a huge intelligence breach, so they have to put it off. As to what kind of response they'd make, they're not particularly creative. They did things like blow up the Marine barracks, El Khobar Towers, kind of military targets, but primarily designed to inflict casualties. The problem that they have is right now, and it's not a trivial problem, is they don't know if the U.S. knows everything they're doing. They may hope it's not true, but the evidence is that we have some pretty good intelligence on them.
George, what do you think the U.S. should do just in order to best protect itself in terms of not having further escalation? Is there anything that can be done at this point to try to kind of calm some of the tensions, some of the fears that are out there right now?
Well, let's begin this with the fact that the Iranians attacked the American embassy in Iraq, took it over, there were some fires, then they left. So we've already had one Iranian action prior to this drone strike. It's very hard to protect against a normal terrorist attack. Iranians do not have the ability to wage war against the United States. If they were to get into an air war, the United States would very quickly eliminate them. What they really are likely to do, I think, at this point, is to reach out, probably through Qatar, and see if they can find some sort of de-escalation mode. But the thing to remember is that they want to hold on to Iraq. There was the war they fought with Iraq. Over 1 million Iranians were casualties in this attack. They are afraid of Iraq becoming another American bastion. So any negotiation is probably going to wind up on Iraq. As to the kind of attacks they can mount, well, they can always put a car bomb somewhere.
All right, George Freeman of Geopolitical Futures, thanks for joining me. Well, straight ahead, how the global shipping industry is preparing for a spike in tensions between the U.S. and Iran. We've got those details. Don't go away. We have some breaking news. President Trump speaking at the Oval Office. Let's watch.
Tell us about what you knew prior to ordering the attack. Well, number one, I knew the past. His past was horrible. He was a terrorist. He was so designated by President Obama, as you know, and he wasn't even supposed to be outside of his own country. He was, so right there. But that's, in a way, the least of it. We had an attack very recently that he was in charge of where we had people horribly wounded, 1 dead. In fact, the number now, as of this morning, I believe is 2 dead, and that was his. He was traveling with the head of Hezbollah. They weren't there to discuss a vacation. They weren't there to go to a nice resort someplace in Baghdad. They were there to discuss bad business. And we saved a lot of lives by terminating his life. A lot of lives are saved. They were planning something, and you're going to be hearing about it, or at least various people in Congress are going to be hearing about it tomorrow. Our Secretary of State covered it very well a little while ago. I saw his news conference, Mike. And if you want to mention a couple of things in addition to what I've just said, but we had tremendous information. We've been following him for a long time, and we followed his path for those 3 days. And they were not good stops. We didn't like where he was stopping. They were not good stops. We saved a lot of lives. Mike?
Mr. President, I'd only add we had deep intelligence indicating there was active plotting that put American lives at risk. And I'm confident, I think the President's confident too, that the actions that the President took saved American lives, saved lives of Iraqi Muslims as well. It was the right thing to do, and our Department of Defense did an excellent job executing the mission.
And as you know, he killed at least 608 Americans, but the number is much higher than that. He's also very much roadside bombs and all of the horrible explosives that you see. He was a big believer and sent them everywhere. He was somebody that we did ourselves, and we did a lot of countries a big favor. And I've been hearing from countries, they were extremely happy with what we did. And if you look inside Iran itself, there were plenty of those leaders that were happy because they feared him and didn't like him in many cases.
Could you also clear up, Mr. President, whether Iranian cultural sites would be on any future target list?
Well, as I said yesterday, it was very interesting. They're allowed to kill our people. They're allowed to maim our people. They're allowed to blow up everything that we have, and there's nothing that stops them. And we are, according to various laws, supposed to be very careful with their cultural heritage. And you know what? If that's what the law is, I like to obey the law. But think of it. They kill our people. They blow up our people. And then we have to be very gentle with their cultural institutions. But I'm okay with it. It's okay with me. I will say this. If Iran does anything that they shouldn't be doing, they're going to be suffering the consequences, and very strongly.
Are you seeing any signs of imminent retaliation from the Iranians? Any indications of imminent?
Well, don't forget, in our case, it was retaliation because they were there first. They killed, and look, I don't have to talk about him for 18 to 20 years. He was a monster. But just in the very short period of time, 2 people dead, people badly injured, and then before that, there were other attacks. And look at what he was planning. So that'll be discussed tomorrow morning. Right now, it's classified. And that'll be discussed tomorrow with Mike Pompeo and the Joint Chiefs of Staff.
And is the U.S. prepared for an Iranian attack?
We're prepared. We're totally prepared. And likewise, we're prepared to attack if we have to, as retribution.
Mr. President, if Iran's leader said that any response to the Soleimani killing would be, quote, proportional, what would the United States do in the event of any Iranian response?
So, again, John, if you look at what's going on, ours was an attack based on what they did. We weren't the first one out. He killed an American. Now 2 people are dead from the same attack, and some people very badly wounded. And that was one of his smaller endeavors. You look over his past. His past, he's been called a monster, and he was a monster. And he's no longer a monster. He's dead. And that's a good thing for a lot of countries. And he was planning a very big attack and a very bad attack for us and other people. And we stopped him. And I don't think anybody can complain about it. I don't hear too many people, other than politicians who are trying to win the presidency. Those are the ones that are complaining. But I don't hear anybody else complaining.
Mr. President, you call him a monster, but your friend Erdogan called him a martyr.
Well, that's everybody to each his own. I mean, I disagree 100%, and I'm sure he does too. But he has a public to take care of, and I guess that's for his own reason. But I'm actually surprised to hear that, but that's okay.
Are you willing to make a deal with Greece regarding F-35, sir?
Say it?
Are you willing to make a deal with Greece regarding F-35?
So Greece and I and my people, and we have a whole group of people, and as you see, they brought a lot of great representatives from Greece that we've been dealing with. We have a tremendous Greek population, over 3 million people, as I understand it. That's fantastic. I really feel I know most of them. I think I know all of them, come to think of it. But it's a great population in the United States. We're going to be meeting, we're going to be talking, we're going to be negotiating, and we're going to be making a lot of deals. We have a really great relationship with Greece.
Let me add something to that. Greece is interested, Mr. President, in participating in the F-35 program. As you know, we are already upgrading our F-16s, and that program will be completed in 2023-2024. So we're very much interested in participating in the F-35 program after that. And I'm sure that the U.S. will take into consideration the fact that this country is coming out of an economic crisis in terms of structuring the program in the best possible way for my country.
That's true. And, you know, they just signed a very big renovation of existing aircraft. They have great aircraft, but it's gotten a little bit tired. And they've done a renovation that's going to bring it up to brand new. And we look forward to doing that. A couple of our great companies are doing it.
How do you feel about the idea of the supposed withdrawal from Iraq being a possibility? Isn't that something Soleimani actually wanted all these years?
Well, it's something that I want too. I mean, eventually they have to be able to defend themselves and take care of themselves. And it's something ultimately that I want to see. We don't want to be there forever. We want to be able to get out. I didn't want to be there in the first place, to be honest, and everybody knows that. That was when I was a civilian, I said it. But we were there, and they made a decision, and I disagreed with that decision very strongly. But we're there now. We've done a great job. We've gotten rid of the caliphate. 100% of the caliphate is gone, and which is ISIS. We have thousands of ISIS prisoners that we're keeping right now under lock and key, and we want Europe to take many of these prisoners because they came from Germany, France, and other places. Probably a few from Greece, in all fairness. We'll have to talk to you about that.
None from Greece so far.
You're lucky. You're lucky. But we have a lot of people right now in prison, ISIS fighters that are tough fighters, and they are where they should be. So I think we've done a fantastic job, but eventually we want to be able to let Iraq run its own affairs, and that's very important. So at some point we want to get out, but this isn't the right point. The other thing is, if we do get out, you know, we've spent a tremendous amount of money on building airports and building, it's one of the largest embassies we have in the world, Mike, and we want to be reimbursed for the various costs that we have had, and they're very significant, but we'll work something out. And I talk sanctions, but I'm only talking sanctions if we're not treated with respect. We have to be treated with respect. With what, excuse me, wait, 1 second. With what we did with ISIS, and this was done during my administration, because it was a mess before we got here. With what we did with ISIS, we've done the Middle East and we've done a lot of other countries a tremendous favor. Yeah, go ahead.
Do you agree with the Turkish provocations in Libya, in Eastern Mediterranean, I guess against Greece, and are you willing to talk to your friend Erdogan to
We are talking to him, and we're talking to, we're talking to, when you're talking about Libya, we're discussing with President Erdogan, we're discussing with many other countries. I just spoke with the Chancellor of Germany, with Angela, and we talked about that subject specifically, Libya, what's going on. We'll be talking to Russia, they're involved. A lot of countries are involved with respect to Libya, and it's right now a mess. But there are a lot of countries, and they all want to know where we stand, and they do know where we stand. We have a very distinctive stand, and we have meetings set up, and we're going to see if we can work out some kind of a plan for peace.
I think it's important. Mr. President, can I just make one point? One point on this issue. I think it is important to point out that the agreement signed between Turkey and Libya infringe upon Greece's sovereign rights and essentially cause great concern and instability in a region which is already highly problematic. So we'd be very much looking to your support to make sure that these types of provocative agreements are not being put into place. And I think we should refrain in general in the Eastern Mediterranean for any sort of activity that inflames passions and that doesn't, promote regional peace and security. So we'll be very much looking forward to your support on this issue, because it is a very important issue for my country.
Mr. President, the Iraqi government says it expects U.S. forces to leave the country after the letter that it received, General Mark Miller said, by mistake yesterday. What do you say to the Iraqi government about the possibility of U.S. forces leaving based on that letter?
Well, I don't know anything about that letter. The letter was sent, and I understand it was an unsigned letter. So I could maybe let Mike speak to it. I don't know if that letter was a hoax or was it unsigned.
The letter itself was a mistake. I think
what?
the Department of Defense has spoken that it was a mistake. It wasn't intended.
But the Iraqi government is saying they're taking you at your word. They expect U.S. forces to leave.
Well, I think it's the worst thing that can happen to Iraq. If we leave, that would mean that Iran would have a much bigger foothold, and the people of Iraq do not want to see Iran running the country. That I can tell you. So we'll see how it all works out. I know it's going to work out well for us, because at some point we want to be able to get out. We want to bring our soldiers back home. I will say that we have had tremendous support from the people of Iraq, appreciating what we've done, and they don't want to see Iran go into Iraq. But they're neighbors, and over a period of years, something will happen. We'll see what that is. But what was said yesterday, I didn't know about. I really don't know about it. What is that, Mike? What exactly?
I just know that there was a draft letter that was
A
sent out
draft
by the-
unsigned.
unsigned letter.
And the media knew that,
was,
so, you
they,
know, but
they
they
knew
don't
it,
like to
and-
say
and
it, yeah.
the Iraqi people understand that we're there to help them stand up their sovereignty.
The Iraqi people were not happy when the suggestion was made yesterday that we were thinking about leaving at some point. They were not happy, but at some point we will want to leave.
Mr. President, you didn't answer the question.
Steve, go ahead.
Are you ready for the Senate impeachment trial?
What?
Are you ready for the Senate trial?
Yeah, whatever it is, it's a hoax. The impeachment is a big hoax. It's become a laughing stock all over the world. There was nothing done wrong. The 2 articles that were sent are not even serious. And by the way, they're not a crime. The Republicans voted approximately 196 to nothing. This was not supposed to be partisan. It was never meant that way by, as they would say, the founders. It's turned out to be a totally partisan hoax, witch hunt. And frankly, it's been going on from before I came down the escalator with our great First Lady. I mean, this has gone on for 3 years, and probably longer than that. And it'll be very interesting when the final tabulation is set and when the facts are released, because a lot of people are working on those facts right now. It's a big deal. It's in many ways the greatest hoax ever perpetrated on our country. It's one of the great hoaxes ever. It started with an illegal document that turned out to be false. The fake document that you know so well, the dossier as they call it. And it went on from there. It was set up by a bunch of dirty cops and others, working with the DNC, working with the Democrats. And from the day I ran, from the day I was elected, and probably before that substantially, not probably. If you look at the insurance policy was long before that. So that means before I ever got elected, they were working on something that's so illegal. So I assume that will be announced at some point into the future, and hopefully not too far into the future. And the impeachment story is, it's just a continuation of the same. It really is a shame that we can't focus on all of the things. You know, we talk today about Iran, we talk about Iraq, we talk about economic development. We have the greatest stock market we've ever had in the history of our country. We have the greatest economy that we've ever had in the history of our country. We're setting records, unemployment records, employment records also. We're going to have almost 160 million people working. And that we have to work on this partisan scam is really a shame. That we have to take time is a shame. All right, that's about it. Yeah, go ahead.
Will you be okay if John Bolton testifies? He indicated yesterday that he would if he is subpoenaed.
Well, that's going to be up to the lawyers. It'll be up to the Senate, and we'll see how they feel. He would know nothing about what we're talking about because, if you know, the Ukrainian government came out with a very strong statement, no pressure, no anything, and that's from the boss. That's from the president of Ukraine. The foreign minister came out with a statement that was equally as strong. And frankly, if you look at it and you look at everything, all they have to do is read the transcripts. You take a look, not just at one, you take a look at 2 transcripts. They were absolutely perfect. There was absolutely nothing done wrong. There was no false statement. And it's crazy that it's gotten to a point where you look, Ukraine, the president of Ukraine said there was no pressure whatsoever. There was no pressure on his country whatsoever. And by the way, in terms of the money, it got there 2 or 3 weeks ahead of schedule, long before it was supposed to be there. There was absolutely nothing done wrong. The one thing I look at is corruption, and the other thing I look at is why isn't France, and why isn't Germany, and maybe I could say why isn't Greece? But why aren't all of these countries, why aren't they paying? Why is it always the United States that has to pay? And I said that very strong. In fact, it's in the transcript, but the press doesn't cover it. Why is it that the United States pays? And it affects Europe far more than it affects the United States. So why isn't it that France, Germany, and all of those countries in Europe that are so strongly affected, why aren't they paying? Why is it always us? That's one question. And the other question is always about corruption. We're sending all of this money. Where is it going? Where is it going? And the president, by the way, got elected on anti-corruption, and I think he's going to do a great job. But I appreciated his statement. He's made it many times. No pressure whatsoever. Thank you all very much.
Jail time for Michael Flynn.
This is indeed over, and it looks like it is. That was President Trump addressing tensions with Iran during a press conference with the Prime Minister of Greece in the Oval Office. The president says the U.S. is prepared for any potential retaliation from Iran. Also discussing impeachment with me now is my co-host Miles Udlin and Yahoo Finance's Akiko Fujita. So let's check in right now on the markets. The president also invoking the great economy and the greatest stock market of all time. Let's take a look right now. We got mixed. We're mixed. Very close to all-time highs.
Still pretty good market, sure.
Pretty good, holding in there for sure. A ton of 52-week highs to talk about. But as you can see right now, NASDAQ, the only one holding on to a green arrow. Investors still a little bit nervous here with what's happening in the Middle East. Dow down triple digits earlier, just about 94 points right now. Losses there for Merck, Chevron, Intel, all down more than 1.5%. S&P also in the red. We've got real estate and energy, currently the worst performing sector. And NASDAQ holding on to gains there. Miles' favorite ticker, MU, Micron, big move. Cowen making some news there. Western Digital, microchip technology also to the upside. So we just heard from the president on what's happening with Iran. Obviously, this is a continuing to be wait and see, but also an unfolding situation. But investors continue to shrug it off. Fair to say?
Yep.
And we should continue that, expect that to continue.
Well, it's continuing today. So if that changes, then we will change. But I think, it's kind of been well worn, right? I mean, oil, even last Friday, didn't go up nearly as much as I think many people would have thought. And I think that sort of said it all. And certainly the political noise is only going to get louder as the year goes on. I mean, I think, we now need to realize we're less than 4 weeks away from the Iowa caucus, which means this thing is really starting. And it's going to get a lot louder politically over the next year. And so I know we spent all of 2019 joking about whether trade tensions were moving the market on any one day. Guess what? The market went up 32% when all was said and done. I guess the tensions were good, but it's going to be a lot harder in 2020 to figure out what is moving the market on any one day if you want to look from like a macro perspective, right? I mean, obviously, Merck shares being down today weighing on the Dow because they had a cancer trial go wrong. I know that has nothing to do with what's happening with the U.S. and Iran, and I think we're going to have a lot more days like this where there's a lot of very interesting, important, compelling geopolitical headlines, but doing the whole, is that moving the market is going to be a real challenge.
Yeah, I mean, I would argue that it's tough to price in what's going to happen with Iran, right? I mean, you talk about something like the election, at least we know where the Democratic candidates and their policies are. With Iran, it's essentially a wait-and-see mode right now, at least for the U.S. Iran has vowed retaliation, but we don't know what that means to the oil markets, what kind of attack there could be. And so, to Miles' point, you could argue that risk has not been priced in enough, but also what is there to price in if you don't know what that's going to look like?
In terms of the market today, we really are very close to all-time highs. And it drove me back to go and look at some names. GE, Goldman Sachs, Kellogg, Nike, Salesforce, Shopify, Google, Apple, Crocs, throw in Lululemon. All of these names hitting 52-week highs earlier today. Ross and Tesla, a name that we're going to be talking about right now. Let's go to our call of the day. It's Credit Suisse on Tesla. Analyst Dan Levy raising his price target on the electric car maker from $200 to $340, although he still remains bearish on the company and thinks the stock is expensive. So bull case, he's calling this blue sky raised to $700. Sounds pretty good, but bear case, gray sky, $165. Kind of lands in the middle with 340. And even there, he uses words like generosity. That just to make the math work, he has to be overly generous in terms of the growth that you need to expect from Tesla. So he's not that optimistic.
Well, I mean, I think the street's reaction to Tesla's price move over the last several months is a classic case of why it's so difficult to be a sell-side analyst, because your fundamental model tells you that stock X is worth Y, but then when the price of Y doubles in 6 months, you have clients calling you saying, what are you guys doing here? What are you actually looking at? Why am I paying for this? Why would I ever want to read this? Because you're not anywhere near where the price of the stock is. And so what we inevitably see is sort of what's happening in this note, which is an underperform rating staying on the stock, but the price target ends up moving higher because you have to change some of your base assumptions based on what the market has already told you. But I think it's only, I think this is going to be a very challenging story. Speaking of challenging stories for 2020, of what to make of Tesla. I mean, the stock went from 180 to 470. I suppose the news out of China is very good. Elon Musk seemed very excited last night.
Very happy.
Announcing all of that. Model Y is apparently now coming. And it's also, Tesla kind of opened the door there. Maybe they're going to be delivering cars made in China elsewhere in the world. Not they said it explicitly, but they left the door open for that. Is this now just a China company? I mean, that all sounds very exciting, but very difficult, I think, as an analyst, especially if you are a bear on the stock or you're skeptical of this story, to kind of make sense of what to value it at.
So that run on the stock has led Tesla to have a market cap that's bigger than Ford was at its peak. As the Wall Street Journal's Nate Becker notes, this was in 1999 when Ford sold 4 million cars and trucks. And in 2019, Tesla sold just 367,000, basically. So in the note, one thing that really stood out to me was the idea that all the other OEMs, the car manufacturers, are kind of being knocked right now because we think that we're late cycle, that we're kind of in this cycle that we've sold so many cars. People don't need that many cars right now, but Tesla doesn't get that knock at all. And Levy says in here that there's not much consideration for any sort of broad economic slowdown, which would likely impact Tesla, at least in some form as well. So to get to even this case, his model case, he doesn't have to factor in any slowdown or the fact that maybe people don't need a car right now.
Well, that seems overly optimistic, doesn't it? I mean, I think to Miles's point, right? One of the things that this note raises is the bar has been raised, now time to deliver. And I think, when you look back to the conversations we had around the stock back in 2019, so much of when the stock was down was, well, they've got the Shanghai factory and they've got the production going in China. Well, now that's open, as we saw Elon Musk dancing in China. And so it's got to deliver. I mean, that seems to be the obvious case, but that's one additional factor that raises the bar for the company. So that was the potential. Can they actually push forward on it? I think that's a big question mark moving forward.
I kind of like the dance. I don't know.
Well, I like the part where this is after he took off his jacket.
Yeah.
He swings the jacket. I don't know. It's not an easy watch, can we say? But he seems to be happy, celebrating what's happening in China.
Yeah.
I kind of think it's fun. I don't know. He's had a good month.
He doesn't need anyone to
tell him he's an okay
for him.
dancer.
Yeah, right. We can just leave it. We can just leave it. We don't have to say it's good. All right, coming up here on the final round, CES, not just about gadgets. Car legend Henrik Fisker joins us live from Las Vegas to show off his latest creation, an electric SUV. But first, let's take a look at where European markets closed on this Tuesday.
Noted car designer Henrik Fisker is back with his latest electric car, debuting the new Fisker Ocean at CES. And joining us now to discuss is Henrik Fisker, chairman and CEO of Fisker. So you're calling this car the world's most sustainable vehicle. We just did a whole segment on Tesla and Elon Musk dancing. How is this more sustainable than a Tesla electric vehicle?
Well, thank you for being on the show. You know, we obviously going beyond just making the car electric. So we have looked into all the possible sustainable materials we can use. And if you look inside the vehicle here, all the carpets are made from recycled plastic bottles from the ocean and fishing nets. The material you see up here is made from recycled t-shirts, all vegan leather. So we are trying to really optimize sustainability on this vehicle everywhere. Even on the exterior, we have a solar roof. We use water-based paint, which is becoming more and more normal for everybody. But we really looked into how much sustainability can we put into electric vehicles, because that's where we think the future is going.
And then I want to ask Henrik a little bit about the pricing on this car, and also the options beyond just buying and leasing. And it sounds like not only do you want the car itself to be a sustainable new model, but also the way that customers are financing the vehicle.
Yeah, so we are looking at, you know, we wanted to make an affordable vehicle, and obviously technology is still expensive. So one of the things we are doing, we are going direct to the customer without any brick and mortar. We take all the middlemen out. We have designed a Fisker app where we communicate with our customers. We already have thousands of orders already on the vehicle, and we're able to, on one hand, sell this vehicle for $29,999 after the $7,500 tax discount. But also we are doing a flexible lease model where we actually allow you to lease this vehicle from $379 a month, but you can give it back anytime after 3 months, 6 months, a year. When you give the vehicle back, we actually bring it back out in the market. We own the vehicle, we finance it, and we do all the service. We bring it back out in the market. Somebody else have it maybe for a year or 2 or 3. When they bring it in, we bring it back out. So over 8 to 10 years, we are using the same hardware, which is much more sustainable. We are not trying to get you, the consumer, to buy a new vehicle every 2 years, which is sort of the industry standard. We're trying to be more sustainable, thinking about it, both from an actual sustainability view, but also from a business point of view, where we have a recurrent income stream from these vehicles out in the market.
How much of this is also responding to the market needs? You know, we've been talking a lot about sort of the decline in car ownership, although part of that may be a bit exaggerated. You know, increasingly in the larger cities, people are opting to maybe not necessarily buy cars because they know they can use an Uber or a Lyft and have other options as well. How much of that market dynamic do you think is shifting, and how much of this is a response to that?
That has been a huge point. You're absolutely right. One of the things that we looked at was that people would like a new car, they would like an electric vehicle, but they don't necessarily want to go out and finance a $35,000 or $40,000 vehicle. And if you take today a lease today, you have to take it for 36 months to get a reasonable price, but people don't necessarily want that. So what we are doing is we are offering this flexible lease model where you can get a really cool SUV, but you can give it back after 6 months, 9 months, whatever you want. And on this app, you're even going to be able to do car sharing and car swapping. So if you have 2 people, one lives in New York, the other lives in LA, and let's say the one in LA leaves, and for a couple of months, they can actually lease back out their vehicle to somebody else, so they don't have to pay for this vehicle when they're gone and somebody else can use it. So we think shared mobility is going to be a big thing, and not owning your vehicle, but you still want to feel somewhat emotionally attached to your vehicle. We love our vehicles. We want to leave our old coffee cups in them, our sunglasses and all that stuff. So you still want to feel you own the vehicle, but you don't necessarily need to own it. And in our model, versus when you lease a normal car, it's financed on your credit, but on this vehicle, we take care of finance the vehicle together with our financial supporters. So Credit Suisse is our finance partner, for instance. So we'll be financing these vehicles, and they go out to you on a flexible lease.
And when are they going to go out to people? Because I mean, it sounds too good to be true. Like, it seems like you're going to be inundated with people. When are they coming, and how many cars do you think you're going to be able to put out?
Well, so to make this possible, we have some very big automotive partners where we have shared purchasing. So we've lined up the entire purchasing for this vehicle in terms of all the suppliers. Batteries has already been developed. This car is not a show car. It sits on an actual final developed platform. It's fully drivable. We're going to send out some drivable footage of this vehicle end of this month because we just finished the vehicle actually. But we'll start production next year. Next year, the production's already sold out. We already have some early adopters that's put in $250 order on either Fisker website or a Fisker app. And then high volume goes out in 2022.
Henrik Fisker, Chairman and CEO of Fisker Inc. Thanks so much for joining us from Las Vegas.
Thank you very much.
All right, coming up here on the final round, we will talk about Goldman Sachs' latest transformation, why it's becoming more of a normal bank ahead of its first ever Investor Day. But first, let's take a look at some of today's trending tickers here on Yahoo Finance.
In a filing early this morning, Goldman Sachs revealed it will be reorganizing its businesses in order to better reflect how the firm is now managed. The bank will divide its businesses into 4 main units called Global Markets, Investment Banking, Asset Management, and Consumer Wealth Management. Yahoo Finance's Julia LaRoche joins us now to discuss. So, Julia, what's happening to the masters of the universe, the Goldman Sachs that we think we know? Who are they?
Oh my gosh, everyone's making such a big deal about this. I think if anything, this is a natural evolution. Let's do a little bit of history of Goldman Sachs. So if you go back to the financial crisis, the firm, along with Morgan Stanley, they converted from a broker-dealer to a bank holding company to get access to the Fed's liquidity window. It was a source of liquidity at the time. And so since that time, there are conversations of, well, if you're a bank holding company, now you can start acting like a traditional bank. You're not just an investment bank. And that was kind of the genesis behind Marcus by Goldman Sachs, which is their upstart digital bank. So that's kind of the history lesson there. And then what this change really amounts to is they're changing the way they kind of report their financials, because the real big change here was before these lines of business that you just referenced. It was investment banking, institutional client services, investing and lending, and investment management. Those changes happened back in 2011 because clients wanted more transparency, specifically around trading. So they came up with the investing and lending segment. This is not just one line of business. It was a bunch of different lines of business within this segment. And I got to say, as someone who covers banks, it was always kind of opaque. Like you never really understood what went in there. So here you have David Solomon. He's just over a year into his tenure. He's trying to be more clear. I guess the term you could use is client-centric. It's going to be a lot easier to compare Goldman Sachs' financials to that of like JP Morgan, for example. It just makes it a lot easier from what I've seen on this filing. I got to say, if I'm covering earnings, it just makes more sense.
I guess the question, though, is if Goldman still sees itself as a bank different than some of its banking peers, don't they start, I mean, from a recruiting standpoint and a firm marketing standpoint, they lose some of that, right? Because now they can't really be like, oh, we're different than JP Morgan, because they just reorganize themselves to be more like JP Morgan.
I don't think that's true, Miles. I just feel like if you still can't compare. It's not apples to apples. Yeah, okay, maybe from a analyst perspective of trying to understand the numbers, that makes sense. But you go to Goldman, it has a certain reputation and prestige. I don't think that has changed just because they did this slight change. It's not changing the organization or who's running lines of businesses. They're not like getting rid of lines of businesses. So
right. But if they're changing their bank, I mean, if they're also changing their structure so that investors can understand. I mean, we showed the 5-year chart. It's massively underperformed the market. It's up 25% over the last 5 years. Is not this change an effort to maybe get investors to understand their business more, and again, thus kind of chipping away, even if just cosmetically, at the impression that they're so different?
But you're saying that it just adds more clarity. It doesn't necessarily change the strategy of the bank itself.
I think it adds more clarity. And look, we're going to have the first ever Investor Day, January 29th. This is kind of Goldman Sachs pulling back the curtain, if you will. And look, I don't think you're going to get some big like product launch or a huge strategy rollout. But what I think this will do is it's going to highlight not just David Solomon and the management team, but also the different heads of the different businesses within Goldman, because a lot of it, guys, if you just think of the firm in the past, and I know this has changed in a lot of more recent years, has been kind of closed off. Like you didn't necessarily know who, it's not like people were doing a lot of media in the past, and I think they are starting to do more of that. They have been in the last 10 years or so since I've covered Goldman. This is a new chapter. You have a new leadership at the helm. So I'm pretty positive on it.
Julia LaRoche, have a great evening, and I'm sure we'll talk to you before and after this investment day. What day is that?
January 29th.
January 29th.
All right, coming up here on the final round, we'll have more, plus going out on a limb. Very good, guys. Former Nissan chief Carlos Ghosn, he will speak tomorrow morning, give his side of the story, and what is next for the fugitive auto exec, and will Nissan and the Japanese government stand idly by? We are back with all of that right after this. back to the final round here on Yahoo Finance. Miles Allen with you in New York. I'm joined as always by my co-host Jen Rogers. Also stopping by on this Tuesday is Yahoo Finance's Akiko Fujita. Let's take a look at where the market stands right now. 28.5 minutes to go in the session. Mixed day here. Not a whole lot going on in the major averages. The Nasdaq up 13 basis points. The Dow and the S&P both lower on today's section. For more on today's action, let's go to Inez Ferre. She is live on the floor of the New York Stock Exchange. Inez.
Miles, with the Nasdaq hanging on to the green, the best performers on the Nasdaq today have been Micron, Western Digital, and Microchip Technologies. Take a look at Micron and Western Digital. Those two hit 52-week highs after Cowen upgraded the stocks to outperform with a price target increase for each, with the analysts expecting demand for chips and memory devices to keep improving in 2020. And then Microchip Technologies hit an all-time high today after the company raised its revenue guidance for its fiscal third quarter for the second time in 1 month, with the company believing that orders hit the bottom back in December and that will improve in 2020. And then we're watching Netflix today. We've been watching this stock, not moving too much. In fact, it's been slightly in the red. This is on the heels of a JP Morgan note, a bullish note on subscriber growth estimates, with JP Morgan lifting its subscriber growth estimates for Netflix, really based on its international growth. Several weeks ago, Netflix had come out with some data regarding its global growth and the rate at which it's been growing globally. And really, analysts have been weighing in on this, saying that Netflix has had first mover advantage, that it costs less to make content abroad, and very bullish on international growth going forward. Miles, Jen.
All right, Inez Ferre live on the floor of the New York Stock Exchange. We'll talk to you after the closing bell.
The Carlos Ghosn saga continues, with Japanese authorities obtaining an arrest warrant for his wife, Carole. Prosecutors say that Carole Ghosn gave false testimony to a Tokyo court about her husband's case back in April of last year. Carlos Ghosn plans to hold a press conference tomorrow at 8 a.m. Eastern in Lebanon, where he fled to escape trial in Japan. Meanwhile, Nissan is continuing to lawyer up. Ghosn threatens legal action against the automaker. So, Akiko, you've covered this company and Carlos Ghosn for a while. What should we be expecting tomorrow?
I don't know if he'll give details on. He's not going to give
Is he
details
gonna,
on who
sit
actually.
down and say, "Here's how I did it"?
I mean, I think he's ready to fight back, right? I mean, he has spent the last. What is it, a year, just over a year?
Yeah.
Taking the hits, essentially, in Japan. I mean, he's released a video message before, but this is the first time I think it's going to be a live press conference. I mean, he's ready to defend himself from the charges. Well, what I wonder, though, is how far the Japanese officials are willing to go to fight this, right? Lebanon doesn't have an extradition treaty. And over the last year or so, even in the Japanese media, this case has been starting they've received a lot of criticism for some of the holes that are in there. And so you're wondering, does the Japanese government really want this to be prolonged even more at a time when, their criminal justice system is under so much scrutiny? That's what I'm curious about. Because as far as we know, if Japan says, we're not going to pursue this further, which publicly they can't do, Carlos Ghosn's a free man in Lebanon.
Well, I mean, then it becomes, people are saying, what are the other options? Or could he be charged in France? Is he ever going to leave Lebanon? Rick Newman has a piece. Is he ever going to work again? And trying to figure out the options for that. I mean, that seems far-fetched that he would ever be able.
Well, I think Rick's theory is that he would be like a consultant, right? Behind the scenes, not necessarily a CEO in a very public way.
Yeah.
He may already be, yeah.
I think it's just, the way the story has morphed from, Nissan, one of the prides of Japan's economy, had, alleged accounting issues happening, to, now we're going to have an international referendum on the way that Japan adjudicates securities law. I don't think is really a direction that the Japanese government was prepared to go. And to your point, Akiko, I don't think it's a direction they want to go. And so, maybe Ghosn knew that, or maybe his lawyers knew that. And, they're like, if you could figure out a way out of this, it might just kind of go away. I mean, I guess the thing is, he obviously, and I know he said it all publicly because he doesn't want to implicate his wife, he doesn't want to implicate people who work for him. Obviously, it wasn't his idea. He didn't mastermind how to get himself out of there. A lot of people knew about this plan, and one sort of wonders, did some Japanese authorities
look the other way?
Know that this was happening?
Yeah, I mean, that's a big question mark, but Would be interesting to pursue that theory. You know, if you're Nissan, though, you've got a lot of other issues on hand. I pulled up the last earnings report, right? I mean, profit forecast down. They took a 70% drop in quarterly profit. I mean, they have been struggling. And even if you know, on the one hand, you've got the company that is so, you know, forever tied to Carlos Ghosn, but they have a new CEO in place as well, and this is a company that's trying to turn things around. I can't imagine they would want to continue dragging on with this case in a legal fight at a time when there's questions about their own strategy and viability.
But haven't they spent a lot of money already, like trailing him and doing all the legal stuff that they have been trying to do in Japan? Are they going to drop it just like this? I mean, could they be taking it up other places as well? I mean, I get your point that maybe they don't want to have everything dug up there, but it would be nice to have somebody to blame besides Carlos. Well, you need somebody.
Yeah, I mean, do you though? Like, I mean,
I think you do.
This sunk cost fallacy, right?
This doesn't, like, to be clear, this doesn't all just clear Carlos Ghosn, right? There are still those allegations that are on the table, supported by documents at least that Nissan put forward.
Yeah.
And so there are still questions about corruption around Carlos Ghosn. I don't think that just disappears.
Yeah.
But now the story isn't as one-sided once Carlos Ghosn speaks, and we get to hear how he believes this was all masterminded, if that's in fact what he's going to say.
So what time is it at that you're going to be up at watching this? We believe it's 8
a.m.
8 a.m. Eastern. Yeah.
1 p.m. Lebanon time.
People will be viewing from all different continents, right? Here in the U.S., over in Japan.
Yeah, I think we're going to have it live, I believe.
Exciting.
Right?
I mean, I think it's a fantastically interesting story.
And the New York Times had that article that he had.
Is there a Carlos Ghosn like streaming service? Is there Ghosn Plus that we need to sign up for tomorrow to get this? I think it's just going to be like on YouTube.
I'm sure when I go to try and watch it, I'll be like, you need to subscribe.
Yeah, there you
and then
go.
I'll forget my password.
You know, you get a 6-month free trial of Ghosn Plus, and then you can watch the press conference. All right, coming up here on the final round, we'll talk about the state of the U.S. economy as 2020 gets underway. Bank of America economist Joe Song will join us to explain why it is a tale of two economies right now. But first, take a look at where the banks are trading with 22 minutes to go in the session. All right, let's take a look at some of today's winners and losers in the stock market. Stocks in the red include Merck after the pharmaceutical giant's Keytruda drug failed to meet one of its two primary goals in a late-stage lung cancer study, excuse me. Chevron shares lower on news the energy company has evacuated all of its American personnel from Iraq amid increased tension throughout the region.
Now for some stocks in the green square after Bank of America upgraded the payments company to buy from neutral, with an analyst noting the stock's relatively weak performance in 2019 now makes it an attractive buy. Apache shares of the oil company surging today after announcing a major oil discovery in an offshore South American facility.
Our next guest says it's the tale of two economies as we enter 2020, but does one of these stories have to be the ultimate winner? Joe Song is an economist at Bank of America, and he joins us now to discuss. So, Joe, I think many of our viewers will know the services versus manufacturing thesis or story that has been in play this morning. Better than expected services data a couple days ago, worse than expected manufacturing data. As you see it heading into 2020, is it kind of like one of these has to win, or how do you sort of see this resolving? Because the market has decided that the economy's troughed and everything's going to be great next year.
Yeah, we don't think it necessarily needs to be one or the other, right? So, but we definitely been seeing this divergence between the manufacturing sector and the service sector. We think that the manufacturing sector will continue to be challenged heading into 2020. We see a lot of headwinds in that sector, but the service industry, you know, it's humming along, right? The consumer is still in a really good spot. Labor market is still strong. So fourth quarter, we're looking at somewhere between 2 and 2.5% growth. Obviously, but first quarter, we do see some challenges, some headwinds that the U.S. economy will have to weather.
Let's talk about labor a little bit more, because I can't believe it, but we have a jobs report already coming. It feels like we just did it. Glassdoor Economic Research had a number out today, job market report. Job openings falling 1.8%. That's the first drop that we've seen since March 2017. What is your outlook, not just for this Friday, but for labor overall for 2020?
Yeah, we do see some moderation in the pace of job gains moving forward. I think what we saw in 2018 and 2019 was spurred on by the tax cuts and the additional fiscal stimulus that we got. But in 2020, we're probably going to get to more sustainable levels. For Friday's employment report, we're looking for 150. Remember, last month's report was boosted up by GM workers getting back to work, so that made the number look a little stronger. So we'll probably get to something in the mid 100s, but we do see some downside risks. We also have a proprietary tracker that was actually looking for something a bit weaker than that. So we do see some moderation. Maybe the unemployment rate ticks up modestly, but overall, the labor market is strong. The consumer still feels like the labor market is strong. So if you look at the Conference Board's labor market differential index, most people think that the job market is still really good.
What do you think is going to be sort of contributing to the downside? I'm trying to figure out what actually has shifted between the last jobs report and now. I mean, we're going off of a holiday shopping season, obviously a lot of hiring, coming on the back of that as well. But we're also hearing that maybe consumers aren't quite as confident. The confidence is there, but not to the level where it was.
Yeah, so it seems like every time we put out a fire, i.e. the trade war, something else comes up with the Iran escalation. And I think that has an effect on the consumer psyche to a certain extent. So people want to break out and be optimistic, just as a stock market. But when you start to see these negative headlines come through, on your iPhones, that's, I think, when people get a bit more cautious. And I think that's what we're starting to see again heading into the new year. So I think that has us a bit more cautious about the outlook moving forward.
If we go back to the middle of last year, we had an inverted yield curve. We got the 2s10s inversion in August. I think there was a real sense that the economy was about to roll over. And then as things stabilized, everyone said, no, look, the labor market's fine. So we can't have a recession if the labor market is fine. What are the things that you're looking at from in the next 3 or 5 years? If we think about where, can the expansion continue, or are we going to hit recession? What to you is the most important thing to keep in mind, looking for just the basic, is the economy growing or is the economy turning into recession? Because last year everyone decided bond market knows all, and that obviously didn't end up being true.
And I think it all boils down to the consumer. right? If the consumer is spending, I think the U.S. economy will be just fine. But as we go back to this idea of the consumer losing its confidence, losing its psyche, that's when you start to worry about them rolling over, consumer demand rolling over, and then that's going to impact the labor market, and that's when you start to see that kind of vicious cycle spiral out. But as long as the consumer spending, as long as the consumer sees their wage gains, job gains, I think the U.S. economy will be in a decent spot.
What kind of external shock would it take to change consumer sentiment in terms of spending? So we're all seeing these headlines and news out of the Middle East. Is that the type of external shock that could make a difference and push you into a recession, or is that just a step too far to make that connection?
I think no one knows for sure, but I believe Iran is at the top of the list, the worry list, and if there is further escalation, let's say that a Saudi oil field is struck and oil prices jump $20, $30. That's actually going to have a meaningful impact on the consumer's pockets, right? They're going to see their cost of living go up, and that means less spending on disposable or discretionary spending, right? So I think that's where you start to worry that you see an escalation, and it actually directly impacts the consumer, the way they actually live, the way they actually spend. That's what we'll be looking out for.
And then when you think about the Fed, I mean, last year, Fed cuts 3 times. That sort of really sends the stock market off to the races. Then we see the not QE. Do you expect they'll be on hold this year? Do you think their bias is for another cut in 2020?
I think we've heard from the Fed pretty strongly that they're going to be on hold as long as the outlook remains in line with their expectations. Obviously, if there is some sort of the narrative shifts because of the Iran escalation or any other external shock, they'll be adjusting. So in that sense, we think that the risk is that you could get additional easing. But our base case view is that they'll still stay on hold for 2020.
All right, Joe Song with Bank of America. Thanks so much for joining us.
Sure.
Coming up, Facebook says it's tackling the brewing storm that will be the deep fake problem heading into the 2020 elections. But is it? Before we head to break, let's take a look at where the FANG names are trading right now. Now, here are some stocks that we're watching. Square, after Bank of America upgraded the payments company to buy from neutral, with an analyst noting the stock's relatively weak performance in 2019 now makes it an attractive buy.
Crypto's back.
Maybe it can be the company of the year again in 2020. Wasn't it the company of the year?
2018. Yeah, we're on a roll with this one. Disney 2020, watch out. Was it? Or Target? Disney was company of the decade. Disney was company of the decade, right? Or Bob Iger? I forget what it was.
Yes, you're right. Target was company of the year.
That one came in late.
Apache, another big mover after the oil company announced a major oil discovery in an offshore South American facility. Huge move for the stock. I heard it was the biggest move in 50 years. I am just repeating something. No, there's more oil. There's more oil to be found, whether or not we need it.
I learned in high school we found all the oil. So I don't know what's going on here.
Found other places to go and different equipment that can get there.
Congrats to Apache Long.
Facebook, in an effort to target misinformation on the site, Facebook is banning deepfakes. Those are videos that have been edited or computer generated in ways undetectable to the average person. The ban, however, doesn't apply to all deepfake content. Akiko, you've been following this story closely. So what are they going to take down? I don't even, is there anything?
So I guess to understand where they're going with this, right? Deepfakes are, manipulated content that is used in a way that basically uses a deep neural network. And I use that technical term because when you look at something like Nancy Pelosi, that video we were just showing, that's not considered a deepfake. And when you look specifically at what Facebook came out with today, they're talking about a very specific type of video. So content that's edited or synthesized in ways that aren't apparent to an average person. These are Facebook's words, product or artificial intelligence or machine learning. So essentially they're saying, look, if you have video that it's so hard to detect, then we will take it down. But that doesn't apply to some of the more controversial things we've talked about. Nancy Pelosi is one. That's just simply slowing the video down.
And editing.
There was that video from Joe Biden that was circulating over the weekend where there were words edited out to make it seem like he was racist. And so Facebook says this isn't going to apply to satire or comedy, which is a majority of some of the video that we've seen online that has really gone viral. You could argue Facebook is positioning itself for the advancement of this technology. It's definitely headed in that way, but in terms of the 2020 election, most of the video that we're seeing circulated right now is just what they call shallow fakes, things that can be edited at home. There's a ton of tutorials on YouTube, and so I'm not sure that really solves the election manipulation question.
Of course it doesn't. I mean, it's classic Facebook. It's like, we're fixing a problem, but we are absolutely not. I mean, they're essentially saying we will not be policing misinformation on our platform. We are just going
they're still not taking down political ads and saying that even if it has factual errors, we're going to mark it so that people know what the politicians are trying to say and trying to get the message out. But as Mark Zuckerberg says, he thinks it's important to know how these campaigns are positioned.
And I'm sure Facebook's stellar reputation is going to be backstopping all of the content that comes across. When people see it marked as fake, they're going to say, oh, obviously Facebook is acting,
And it's also very subjective, right?
In my best interest.
Yeah, I mean, it's ridiculous. But, I guess now so they're saying it'd be fine if someone
they are moving the marker, but they're not moving it far enough, I would argue, to really crack down on any kind of disinformation campaign that's likely to occur during the 2020 election.
They're moving in the right direction, but very slowly.
But it's like if I started saying, I love Bitcoin and Elon Musk all the time.
You just said it. I'm going to edit that together.
They wouldn't take. I couldn't go to them and be like, "That's a deep fake."
Yeah, I'm going to make a shallow fake of that. Miles loves Elon Musk. You love his dance.
His dance is great. It's great.
So
it's not quite Ballmer-esque, but
there you go.
It's up there.
Ballmer-esque. It's not quite as good as Steve Ballmer.
He just needs to yell a little more, right?
He's genuinely happy.
Developers.
This is not deep or shallow fake. This is just joy.
This is a preview of me at my wedding later this year. All right, Kiko.
I want video of that.
There you go, Kiko. Thanks so much for joining us.
She gets to go? It was just getting good.
Well, they play the music. They're playing us out. They are playing us out on the final round. Coming up here, we'll have the closing bell on Wall Street Plus. We'll head back to CES and hear from the NFL's Chief Information Officer, about how the league is using big data and the cloud to improve what happens on the field. We are back with that conversation right after a short break.
Welcome back to the final round on Yahoo Finance. I'm Jen Rogers with Miles Udlin, and joining us just in time for the closing bell is Heidi Chung. We are just about 30 seconds away. What are we looking at here? All red now, huh? Yeah. NASDAQ even giving it up. We had an update yesterday with big tech kind of leading the way here, and tech names just can't get it in gear with Google, Facebook, Amazon, all hugging the flat line. Microsoft, another mega cap that can drive a lot of action here, actually off a little bit more than 0.5%. And over on the Dow, we've been having some trouble with the likes of Merck and Chevron. That's the closing bell of the New York Stock Exchange and the NASDAQ market site. So Miles is sick of me asking him this question, so I'll ask you, Heidi.
Ryan, off the hook.
Why are we shrugging off all the wait and see, Iran retaliation, the president speaking in the Oval Office, saying that the U.S. is ready? Obviously, more to come on this story, but the market, why doesn't it care?
Well, it's obviously a wait-and-see approach, as you mentioned, but I think because the whole issue with Iran and all this drama and these tensions, they're not new, right? We've always been having issues with Iran. It's been here for some time now. So I think what's next is what's most important. So what will Iran do? I think at that point we'll see more market reaction. But for now, it's interesting how crude oil is reacting. It's interesting how the markets are reacting. Honestly, crude oil has been in a weird range, and I'm surprised it hasn't broken out even further than it did like 2 or 3 sessions ago. I wish we had Jared Blickery here to really tell us about this range that we've been trading in. But even Brent, it crossed above $70 per barrel very briefly and then sort of paired those gains and has been trading under 69 barrels. I mean, I get it that the U.S. is a top producer now, but even so, other nations are reliant on that region. So to see Brent not surge even higher has been interesting, I think. But today, I like the chips. The chip rip has been fun with Micron and Western Digital ripping higher after those upraise from Cowen.
Yeah, and along with that, we continue to see a lot of these software plays that were so loved in the early mid part of 2019, then really got the short end of the stick as the broader market rallied into the end of the year. We're talking about names like Zoom up 3%, 2.5% today. I know we put it in that group, even though it's not a tech stock. Beyond Meat was up 12% today. Now they had some
Huge
news.
move.
I think obviously the way that stock has behaved, just from a kind of a classic short squeeze. There's been plenty of those throughout the year, but Paycom, Paylocity, PagerDuty, these are names that had gotten hit very hard, but we saw Paycom, Paylocity yesterday hitting new highs. Coupa hit a new high yesterday. Microsoft shares really remain right near a record high. And so overall, that group speaks to the rotation that's still kind of alive in this market. You mentioned the chip names there. We've seen the Russell act pretty well over the last couple of sessions. It's outperformed the S&P, did not outperform the market today, but has over the last couple of sessions. And so we've seen some signs of life in this rotationary environment, if we want to call it that. And you continue to see gold bid, which I think is very an interesting kind of dynamic. Bitcoin up
as well.
8,200,
Flight
why
to
not?
safety
Exactly.
or risk on.
Maybe people are pricing in the
sure.
halvening,
Yeah,
because that whole debate.
you love crypto.
That happened over Christmas. You missed that one.
I definitely.
People fighting over what was priced into Bitcoin, and everyone got to back into my favorite circular thing, which is the price is what's priced in.
One stock that we haven't talked a lot about is the best performer on the Dow today. We talk about it all the time.
I know what it was, Boeing.
It was Boeing. It was Boeing. And why? This rumor.
Because they have to train all the pilots on the 737 MAX.
And there might be wiring issues.
Right.
There are
the rumor that maybe Warren Buffett would Berkshire Hathaway.
That's what they're attributing that to.
The rumor that he would be taking a stake in Boeing, Berkshire Hathaway. I mean, Warren Buffett makes no secret of the fact that he likes flying, moving, planes, trains,
precision,
all of that. So could sort of possibly, maybe make sense. Again, this is a rumor, but Boeing is the
28 billion or something.
No, he's got 100-something billion.
Yeah, he's got a lot of money to spend.
He's just going to buy back more. He should buy back more stock. That's what he should do. Look at where that got Apple. Stock doubled last year.
Yeah.
That's his biggest holding right now, right?
Yeah, by quite a bit. All right. Let's go to the floor of the New York Stock Exchange. Inez Frey standing by for more on today's market action. Inez, we're talking a little bit about crude oil down about 1% today. What's the story there?
Miles, crude oil was down about 1% today, and some of the energy stocks were a bit under pressure, especially earlier this morning. And Chevron had been under pressure today. This is after being downgraded at Bank of America to underperform from neutral, with the analyst notes saying that the oil company is fully valued. But I will tell you one energy stock that was not under pressure today that was seeing a big pop, the best performer of the S&P 500 today being Apache, and this is after the company said it found significant deposits of oil off the coast of Suriname, that's in the northeast coast of South America. And analysts had been talking about this area as one of the most anticipated wells in the world. And I was talking to an energy trader here this morning that was telling me this is very significant. It was more than expected, and you could see it being reflected in the shares and the pop that the shares saw today, 26% higher. Miles, Jen.
All right, Inez Frey live on the floor of the New York Stock Exchange.
The third day of CES 2020 is underway, and Yahoo Finance tech editor Dan Howley is live in Las Vegas with the latest. Dan.
We are here with Michelle McKenna. She is the CIO of the NFL. So we have the NFL, and we have the largest tech show, I guess, on Earth. What is the NFL doing here, Michelle?
Well, of course, tech and sports are intersected in a big way, but I just spoke at the CES Sports Stage, where we talked about a lot of the cool stuff we're doing with technology in the league.
So what are you guys doing? I know you have a partnership with AWS. We see that on the games. It'll give us the AWS view, Amazon Web Services. So what kind of partnership is that, and what does it do for the viewer as well as players and teams?
You know, AWS has been a great partner for us, first as Next Gen Stats, which is our player and ball tracking system. So all the cool stats you get and see displayed on a game day, that comes courtesy of AWS. And we also just entered a partnership in December to develop something called the Digital Athlete, which is using their AI and ML capabilities to help really fundamentally understand injuries and further advance the player health and safety.
So how does that work? Is there going to be some kind of tracking on players, monitors, sensors? How would that end up working down the line?
Yeah, I think all of that. The fact that there is so much that we can now track, and we already have chips on shoulder pads, and we're adding chips to shoes, and we have mouth guards that have sensors. And so taking all that data and being able to process it fast, quick, and also gain the insights is what we think will really help us advance that very quickly.
I guess, you look at the stadiums, we talk about 5G, Verizon, our parent company, talks about 5G in the stadiums. What kind of other technology are you seeing kind of percolate down into consumers who watch these kinds of shows or sports and in the stadium and at home?
Yeah, I think certainly 5G is the most exciting thing we've got on the immediate horizon, and we already have 16 stadiums live with 5G today. But virtual reality is a big thing. I know we've been talking about that at CES and Tech for a long time, but we're using it in new ways to train officials now, to train players and give players reps without being on the field, to give fans the ability to be immersed in the game even if they're not there. And we think all of these things will help bring around the next generation of fandom, which is a newer, younger, and maybe, frankly, not even familiar with football.
So is it something where, you have the athletes, say, Tom Brady or someone like that, we'll just name the biggest name, puts on a VR headset and he can see what would be going on, he gets his vision of the field, or how would that kind of work?
Yeah, exactly. We build, some clubs build virtual reality studios at their facilities, and they tape and do analysis and then put the players immersed in the experience, and it's a great coaching tool, and that's what we're looking to do with our officials as well.
I guess going forward, where do you see kind of technology and the NFL continuing to intersect, right? You think of football, you think of, going out on the gridiron, right? Just running the ball, catching the ball. You don't really think of the technology behind it, but where do you see that going as far as the sport itself? Would we see chips in the balls? Would we see the goalposts measuring the wind better? How would that work?
Yeah, I think at the end of the day, look, we've been around, we're celebrating our 100th year this year. So we embrace our traditions of what makes us great, and that's making sure the game is there for the next generation of fans. So anything we can do, if it's tech related to help preserve that game, we're going to do. Chips in balls, chips in the goalposts, chips in all of that stuff exists. I think in the next several years, you'll see that integrated in a way that helps keep us and continue to propel us as the best sports entertainment in the world.
Do you see that kind of going down into the amateur ranks, the college level, the high school level, the same kind of technologies that, the player tracking, things along those lines?
Yeah, I think that's why it's so important that we get this player health and safety stuff done, because not only will it certainly help NFL players, but it will trickle down to all of football, all of sports, and perhaps, who knows, military and other ways in which you can prevent injury in situations. So we absolutely have seen that as a trend. We put tablets on the sidelines with Microsoft a few years ago. We've seen now tablets popping up on high school sidelines and on college sidelines, communication systems. So we do know that we're stewards of the game, not just stewards of the NFL, and we take that very seriously.
I got to ask one more question. You talk about the tablets. When you see someone toss the tablet around, does it get you kind of like, ooh, please don't throw that?
We have a lot of spares just in case, but I would say this: Microsoft built a, almost coach-proof, almost coach-proof system, and we've had really good luck with it. But yes, I do cringe a bit when that happens.
All right, Michelle, thank you very much.
Thank you.
Back to you guys in New York.
Dan Howley and NFL's Chief Information Officer Michelle McKenna live from CES in Las Vegas.
All right, coming up here on the final round, Invesco's Tim Horsburgh on why the bank says it's still risk on in 2020. But first, let's take a look at where the big tech names closed on this Tuesday. Let's take a look at sector winners and losers during today's session. Sectors in the red can include consumer staples, down about 0.7%, weighed down by shares of ConAgra, Kraft Heinz, as well as Tyson Foods. Real estate sector, XLRE off about 1%, weighed down by American Tower, Boston Properties, as well as shares of Crown Castle. Looking at sectors in the green today, only one XLC up 0.15% on the session. Twitter, Fox, and Activision Blizzard doing some of the work for communication services there.
Barely anything. Geopolitical uncertainty isn't weighing on our next guest. He's still favoring risk assets in 2020. Tim Horsberg is investment strategist at Invesco. So seems like you're not alone in this idea, and we're seeing it play out in the market. As soon as we had the news last Friday out of the Middle East, we were hearing, we had Mohamed El-Arian from Allianz on saying people were going to fade this. Why do you feel confident here saying that risk assets are an okay place to be in 2020, given all the headlines?
Well, I think that's a great point when you look at the headline risk and sort of the initial reaction to some of the news that came out of the Middle East last week. It was this would be market negative. And instead, we've seen that market reaction sort of shrug off some of that risk or the fear. And I think a lot of it is related to underlying strength here in the U.S. economy. So when we look at the consumer, we look at some of those numbers that really powered the rally into the fall of 2019, much of that is still intact. So I think until we see further developments there, that will still be the dominant narrative for the market.
Did the way the market behaved at the end of last year remind you at all of how we saw the market act in 2017? Because, and did that set you up, or does that set you up with a little bit of caution here in the beginning of 2020? Because really from those October 8th lows to the end of the year was pretty much unabated up and to the right.
I think that's also a really interesting point that you bring up, because when we look at to pick another year, 2018, I think that was a story of a little bit better growth, but bad policy, particularly tighter monetary policy. And I think a lot of last year was about a reversal of that, particularly in the fall, and some of the optimism around more accommodative monetary policy. So do we think that that trend in its kind of breadth can continue into 2020? Probably not. I think we're prepared for a little bit more of a subdued run from here. It could be a little bit more volatile, as I think some of that initial optimism around reflation, around easier monetary policy sort of fades a bit. So I think it's definitely, we're tempering our optimism looking into it.
Yeah, so and then I guess, another hot meme in the last couple of weeks has been this idea that we've got a new leg of the bull market, or that this is year 1 or 2 of a new bull, whatever you want to say, right? You've seen all the takes to that respect. I mean, when you think about that view, though, we are now looking at a few different cycles within this bigger cycle, and certainly something changed last year. Does it seem like we might be in a new phase, particularly as that policy risk you mentioned seems to have been taken out of the market to some extent?
Well, when we look at the average age, and just to take one of the several cycles that you're sort of talking about of business cycles here in the U.S., that's typically since World War II about 5 years or 60 months. So if we're dating the end of the last recession to June of 2009, this is coming up on 11 years of a cycle as of June of 2020. So it's a long one. And I think one quote that we like to look at, and it's more meant tongue-in-cheek, but an economist from MIT, Rudy Dornbush, who's since passed away, used to joke, business cycles don't die of old age, they're murdered by the Federal Reserve. And I think that sort of reinvigoration of the cycle on the back of more accommodative Fed policy has certainly been that one big pillar propelling us forward. Whether this is one of many cycles or where it stands, it's harder to say, but I think we have seen a reinvigoration of the cycle because of that easier policy stance.
Tim, so the investors that are sort of sitting on the sidelines right now and they want to jump into the market, put fresh money to work, where do they put their money to work? Equities over bonds? You're saying growth over value. So what sectors do you also favor as well?
Well, I think when we look at what's worked over the past, let's call it really 10 years of the cycle, particularly growth over value, particularly stocks over bonds, or even U.S. versus international, I think a lot of those calls are still going to hold looking into the year. I think last fall there was some deliberation. We saw defensives rally, then we saw value start to come back to life. Is this for real? But I think when we look at a very flat yield curve, I think we look at the U.S. kind of accelerating back to trend growth. Those are the types of environments where we generally see things like growth outperform value. So still favoring sort of tech, industrials to an extent, healthcare, some of those names that have done well in the past over some of those more value-oriented sectors, even energy in this type of environment.
What are you saying to clients who didn't really get to participate last year? So when you look at the flows, people were net equity sellers.
Yeah.
And then they look and they say, oh, wow, that was such a great year, I missed it.
Yeah.
Do I go in now or do I just sit on the sidelines? Look, I got scared in December 2018. Should I still be waiting?
Yeah, I think that's a really interesting point, because when we look even after last year, but really over the course of this whole cycle, again, U.S. investors on the retail side have been net sellers of equities the whole time. One of the best bull markets we've had in history here in the U.S. And I think there's certain junctures, like after 2013, which was another great year, or even after 2017, like we referenced, where we say, wow, have we missed it? And I thought this is an interesting stat. We actually looked back to the inception of the S&P 500 index back in the 1950s, and about 25% of the time, the index was hitting new highs. So about a quarter of the time throughout the history of the S&P over the last 60-odd years, we were at or near or approaching or hitting new highs each day. So I think that to say, look, we've had a great run, you've missed it, sit on the sideline, too simplistic. I think that when we're looking at those underlying fundamentals, earnings growth, listening to companies, this still has some room to run. So even if investors sat on the sideline last year, we're still buyers, even at this point, at a higher level than we were, but certainly not, we think, at the end of the road.
And then the election, obviously we all know it's coming up, 10 months, 11 months from now. Where does that factor into your outlook, and at what point do you think the markets might aggressively price in an outcome?
Yeah, it's an interesting question, because when we think about the elections historically and look over the last 10 years, we basically had two really big pieces of legislation passed, right? The Affordable Care Act and then the tax cuts of 2 years ago. And that's over a 10-year period where you had unified party control. So I think the lesson that we draw as we think about kind of market assessment related to the election, it's very hard to pass some of these transformative bills that are being proposed. So our approach right now, at least with the elections, is to been wait and see and continue on with a focus on the fundamentals. And only in the most extreme circumstance would we really factor in, I think, some of the more, let's say, ambitious proposals that have been floated in particularly the Democratic primaries. So for now, our view has been steady as she goes, but I think only under really, really extreme circumstances with political alignments would we change that.
Tim Horsburgh from Invesco, great to see you.
All right, coming up here, we'll have more on the final round, plus what we're watching tomorrow in the look ahead, and Starbucks bringing plant-based milk to the heartland. Will oat milk lattes sell in America's Dairyland like Wisconsin? We'll discuss coming up after the break. now, here's some stocks that we're watching in today's market. Square shares were higher after Bank of America upgraded the payments company to buy from neutral. Analysts noting the stock's relatively weak performance in 2019 now makes it an attractive buy. Shares of Apache spiking up over 20% today. The oil company announced a major discovery in an offshore South American facility. And Under Armour, shares of the athletic apparel retailer, not doing a whole lot today, down a little bit after a bearish turn from analysts over at JP Morgan, who lowered their revenue estimates for fiscal 2020 as the company continues to struggle in North America.
And now, here's Miles, once again, with a look at what will be making headlines on Wednesday.
All right, well, on Friday, we're going to get the December jobs report. This data, we always say, constitutes the month's biggest economic report. Now, some folks might wonder why. Month after month, the same number is so important. After all, hasn't the labor market story kind of been the same? You know, a couple 100,000 jobs added here and there, unemployment rate continuing to fall. But data from Indeed that we saw on Tuesday pointed out that this high-level view of the market misses one of the biggest stories that's been happening in the labor market. And that story, we think, is one that has Jay Powell quite excited. Now, Indeed highlighted worker flows from out of the labor force to employed, showing that these flows are at a record high. In November, almost 75% of the folks who got a job hadn't even been looking for work a month earlier. This is the hard data behind the qualitative observations that we've heard from Powell, that anyone who wants a job can get a job. And while the big headline job gains are great and the 50-year low on the unemployment rate is to be celebrated, it's this kind of flows data that likely, more than anything else, keeps Powell resolute in keeping Fed policy where it's at. Now turning to the calendar, for Wednesday on the economic data side, we'll get the first of 3 days of labor market data. ADP's December read on private payroll growth is set for release in the morning. Economists expect 160,000 jobs were added last month. That would be a big turnaround from November's disappointing data showing just 67,000 private jobs were created. Then on the earnings side, Walgreens, Bed Bath & Beyond, Constellation Brands, and Lennar are among the notable companies set to report their quarterly results.
Those feel like the first earnings of 2020. Did you guys have any of those?
Those are like the end.
Friday.
No, those are like the stragglers.
No, I know it's not
Nothing
earnings.
last
No,
week.
I'm saying it's not earnings season, but
Right.
we just haven't had any.
We haven't.
Did we have like one? We had like one, Neo reported their results
What?
on like
That was- isn't that
Christmas Eve
before?
morning or
Really?
something. Or,
But that's
New
not
Year's Eve day.
2020.
New Year's
Her
Eve
point
day
was
morning.
2020.
I just feel like we haven't had any. Since
2020? 2020 started when you left So December 24th, 2019 was 2020.
Heidi, 2020
Whatever that
started
means.
on the first trading day. January 2nd. Either way, I
2020 has started now.
right now. Oat milk fans rejoice. Are there any? I guess.
I was just
guess
saying,
so.
like,
I mean, people
who out there is like, I'm a huge oat milk fan.
It's gross,
Each
but
other.
if you're an oat milk fan, you can finally order your oat milk latte at Starbucks. The catch is, it'll only be available in the Midwest.
This I don't get.
I know. 1,300 cafes in Illinois, Indiana, Iowa, Michigan, Missouri, and Wisconsin will offer the popular dairy alternative.
Because Starbucks doesn't need to test it in New York City or California because they know it'll sell. If there's demand for it there. If it
Why
can
don't they
sell
offer
in the
it?
mid.
Just offer
Well,
it.
they
in New
are
York.
They need to
offering it at
test
the
it.
reserve places. in
Right,
the
they
big
have it
cities
at
already,
at
and
the
they know it
reserves.
works.
Yeah. So then they have to see if it's going to sell in the middle of the country. If it does, then sure, why not add it to the menus nationally?
All right,
It
now-
makes sense.
All right, so Heidi, are you actually an oat
No,
milk?
I'm a half and half fan. I still consume
so
milk.
So you like coffee that tastes good?
Yes.
Okay.
Wait,
you don't want to put like bad things like skim milk or oat milk
No,
or almond milk in
it's
your
terrible.
coffee. Right.
Almond milk is terrible. Whoever likes that, I question them.
So half and half, you mean like half and half, not half oat milk, half regular milk? No. Okay, good.
half cream, half whole milk.
Real half and half.
Yeah, that's what I
Also, I'm scared of developing an intolerance to dairy, so I like to consume it on a regular basis to assure that I can have ice cream very comfortably for the rest of my life.
It's all about ice cream. This might take off. Did you see at the Golden Globes? They had a whole vegan menu, and they tied that to climate change.
Yes.
Like really,
I think that's the new
keying in
thing.
on something, right? That is the new thing.
Yeah, but
Get in.
Don't
Get on
you-
it. I'm not eating any meat here.
don't you
at
also
this
drink
office.
half and half?
Except I had the chicken.
Yeah. Because half and half is good.
Oh, I love half and half.
It's just, now, have you ever put
On
have you ever
cereal?
put- no.
Oh, I put half and half on cereal.
Wait, what?
It's so good.
Yeah, of course it's good.
No,
It's
it's true.
No, of course, it's amazing. Yeah, it's so
good.
rich.
I'm sorry, what were you going to say?
I was just gonna say, have you ever put like a little piece of butter in your coffee?
No.
Frost does that, or did that.
Yeah, apparently the oil, so the fattier oils really increase the caffeination. That's why half and half is good. One, it like lightens the coffee, obviously, but you get a little bit of a stronger, apparently, I think, because the fat oils, you get a little bit of a stronger caffeinated kick.
I think like Tim Ferriss or the people in Silicon Valley do that.
I'm going to have to try it.
Yeah, that's
Loves Tim Ferriss.
But you guys, I highly recommend half and half on Rice Krispies. Half and half on Rice Krispies.
Wow.
Radical.
So good.
This is
I cannot
radical.
even tell you.
2020.
It has always surprised me that there's still this big like local coffee shop, Arb, they offer oat milk and Starbucks doesn't. It's like, why can't Starbucks just offer oat milk?
Well, they are now.
I know, but like
it's expensive. Oat milk is very, very expensive. So recently, Dan Roberts and I went to this new coffee shop, and they offer Oatly oat milk, which is a very expensive brand. And he was telling us, the margins on actual coffee, very good. That's known, right? But the oat milk is cutting into their margins, and they need to figure out a way to make sure that they,
I would think the margins on oat milk would be
Dan knew all
great.
this about margins of coffee.
Wow.
No, this was the owner at the coffee shop.
Oh, the owner.
We went to interview him.
Dan's just asking
Dan
questions.
was just there with me.
Okay, fine.
Yeah, we do.
That's great. All right.
No oat milk for us.
No.
We're good.
No, half and half all day here on the final round. All right, coming up, we got some more food content. Our top take taking on Impossible Foods, targeting fans of pork with a new sausage product, just as it may abandon a big deal with McDonald's. We'll talk all things possible and impossible coming up after the break. Welcome back to the final round here on Yahoo Finance. Miles on with you in New York. I'm joined as always by my co-host Jen Rogers, also joined today by Chief Food Correspondent Heidi Chung. Let's take a look at where we finished on this Tuesday. All three majors were lower. The Dow logging the sharpest losses, off 42 basis points or about 120 points. As we noted earlier in the program, only one sector in the S&P, that was communication services, XLC, finished higher on the session. Quickly looking at the Dow, the biggest loser was Merck, off 2.6% there. Keytruda drug failing to meet an endpoint for one of its cancer trials. JP Morgan, Intel also lower in the Dow. The best performer today in the Dow, Boeing, the only member of the blue chip index, up over 1% on today's session.
Let's turn now to our top take stories we're watching in today's market. Reuters reports that Impossible Foods and McDonald's have abandoned plans for a partnership because the plant-based meat company cannot produce enough of its products to partner with the fast food chain. The news arrives just after Impossible Foods unveiled Impossible Pork and Impossible Sausage, that coming out of CES this week, also announcing the continuation of its partnership with Burger King. There's a plant-based sausage sandwich, the Croissantwich, and it's going to debut at limited Burger King locations later this month. Who better to tackle all of this plant-based news than Heidi Chung? So let's start with this Impossible McDonald's news that's coming out of Reuters,
right?
Which hits on a bunch of key issues that we heard early on for whoever was going to partner with McDonald's. Could anybody scale up that fast?
And as we know, McDonald's doesn't typically supply from one source. They have multiple suppliers, even if it's for one product. So that being said, here in this Reuters piece, it says that Impossible Foods CEO Pat Brown told Reuters in an interview that it would be, quote, stupid for us to be vying for them right now. Having more big customers right now doesn't do us any good until we scale up production. Now, I reached out to Impossible Foods to confirm this and for comment, and they got back to me saying, quote, we don't comment on prospective deals. So sorry. When there's real news, I will be in touch, end quote. So, I mean, this is something that Reuters is saying Impossible Foods CEO said. Now, this makes a lot of sense to me, though, because they have a really, really big partnership with Burger King right now, right? So nationally, across more than 9,000 locations, they're supplying Impossible Whopper meat to Burger King. And now with this new partnership that they're testing out, the Impossible Sausage, that takes a lot of production capacity for this company. Now, recently, I think it was back in July of this year, I'm confirming that, end of July of 2019, they partnered with OSI Group, which is a meat supplier, and they supply to a ton of different restaurants here in the United States to ramp up production. They only had one production facility out of Oakland before this partnership. So even with this, the fact that Pat Brown is saying they don't have the capacity to partner with somebody like McDonald's should be kind of concerning, right? Given that Impossible Foods is not a public company, though, they're able to be a lot more flexible with commentary like this from an executive. But maybe this is a win for Beyond Meat if this is in fact true. As we know, they are testing out the PLT burger over in Canada. So the CEO sounded really optimistic previously when he was asked about that.
And Beyond Meat shares were up about 12% today. This report from Reuters coming out during the last hour of trading. And you can see Beyond continued to make gains here, even though the market was turning lower at that time.
Right. And just to Impossible's credit, though, I think that this launch came at a very good time. And it was very timely given the fact that the African swine fever has essentially knocked out a huge population of hogs, not only in Asia, but also just in that entire region, right? So the fact that when there's issues with supply when it comes to actual meat, the fact that they can supply fake meat and perhaps pork, unless they can get the production capabilities up, I don't know if it's necessarily a good or bad thing at this point.
I think I shouldn't say I'm skeptical of fake meat, because I don't think we're just gonna not eat it, but there was so much hype around this sector in 2019 that to me, I keep going back to, it's not actually good for you.
Right.
It's not like it's markedly better for you than regular meat is. Now, maybe there's some environmental benefits, and I know people like to cite that, but at the same time, something that's made with 80 ingredients for a couple ounces of not beef can't, to me, be long-term less sustainable than cows farting, but I don't know.
Well, genetically modified, right? Impossible Foods is genetically modified because they're trying to get that heme out of hemoglobin, which is a protein that we're all pretty much aware of, I think, at this point. But they used to extract that. Yeah, it's in a lot of blood. That's why it gives it that meat flavor and it bleeds like meat. But that was essentially extracted from soybeans. But now what they do is they took the DNA from the soybeans and then put it in something else. And then that is genetically modified to ferment, kind of like how beer is fermented. And it's like this whole process. And to your point, the sodium content on these things are extremely high.
So it tastes decent.
So I think that's going to be the focus going forward. Okay, so you got it to taste like meat in 2019 and taste good, but now you're going to have to make it very healthy for people. Otherwise, people are just not going to eat it.
Right, and I mean, I think the green choice would be to be vegetarian.
Yeah.
Like that's the greenest decision that I think anyone can make, is to not eat meat. And I don't think fake meat is necessarily complementary to that. That's why these companies talk so much about the flexitarians.
Right.
They really are
Them.
after meat eaters who aren't being conscious of things like the environment, because they know their product isn't necessarily
all that healthy
environmentally or health. Yeah.
I just feel like as these develop and they keep coming out with more and different and better products, it's just become a commodity. Like right now we talk about Impossible and Beyond, but eventually is it just going to be replaceable? Does the brand really matter?
I
Can't
don't think
McDonald's just do their own?
I don't think
figure out
there's
how to scale that.
any brand loyalty, but I will say some people prefer the taste of Beyond, which is made with pea protein isolate, opposed to something like Impossible Foods, which is made with heme and potatoes. So at the end of the day, I think the big question here is, for fast food companies and restaurants alike, commodity inflation and wage inflation are two big headwinds for them, right? So in an environment where we're seeing beef inflation and pork inflation, having an alternative like this kind of helps them out. So I don't know where it goes from here, but it's interesting to find out.
Thank you, Heidi.
More to come. Yes, thank you, Heidi. All right, according to the FDA, 1 in 8 American adults regret getting at least one of their tattoos. The Finery is a tattoo removal business looking to capitalize on this growing industry. Joining us now is Carmen Vanderheyden Brody, the CEO of the Finery. Carmen, thanks for stopping by. So my first question is, how onerous is the process of getting tattoos removed? Because a big reason for me personally why part of the reason why I never got a tattoo is because I just assumed that it would have to stay. There would not be an option to get it removed.
Right, and that used to be the way that it was, but now we can remove them. It usually, for most people, will take about a year, so it's not a short process, but our office visit takes about 15 minutes. Some people get rid of them in as few as 2 treatments, but some take 8 or 10. So, yeah, you're absolutely right.
It's still
a
time,
bit of a
I
process.
guess.
Yeah, it's still time. I have all kinds of artists I can refer you to.
That sleeve is coming in nice.
You're on both sides of the business.
Totally.
Really? So you're
Totally.
like pro tattoo, but you're also into getting them removed.
Absolutely pro tattoo, yes. So a big part of our business is those people who are removing or reducing the tattoo so that they can put a new tattoo in place of it. The advancement of technology in artistry has catapulted, so the artistry now is different. It's better. You don't just have to have traditional tattooing. There is realism and all kinds of things. So
I guess that answers, I remember we talked about having you on a couple months back, and my thing was like, well, everyone has tattoos now, so it's fine. And I guess, you saying that your customer is actually someone who wants to replace a tattoo makes sense. So even though tattoos aren't really they're not really stigmatized, however you want to say it. There's no stigma attached to having a tattoo as much anymore. That isn't really kind of a concern, at least as far as you see it, to your business.
no, that's not a concern at all. In fact, I embrace the fact that there's no stigma attached to it anymore. There's no stigma attached to getting it, and there's no stigma attached to removing it, which is fantastic. So the more people who get tattoos are the more opportunities for me, right?
So tattoo artists are artists, right? This is their craft. They have portfolios when they're looking to get hired at a salon or wherever it may be. But on the flip side, when you're removing a tattoo, are these people that need some kind of medical certification? Are they just random people that can operate the machine? How is that?
Sure. It's all medically supervised. So there's the medical supervisor, we have a clinical advisor, and then all of our well, it depends on which state you're in, but either you're an esthetician, you're an RN, there is medical oversight for sure. And then there's just a ton of training, because this is not something where you set the buttons in 1, 2, 3. This is treatment 1, this is treatment 2, this is treatment 3. There's also an art to removing, just the way there's an art to putting it on. So we need to watch how you're responding, right? How your body's responding, the depth of the ink, the colors of the ink. Newly, tattoo removal is full spectrum. Used to be we could only remove black and red. Now we can remove most all colors.
Just some numbers here, I guess, like real quick. I mean, I'm curious, like how much it costs and how big you're planning on getting. Just give us the little pitch on that.
Sure, that's all exciting. So it costs generally, we do in-house financing for our clients, so it's generally between $100 and $300 per month.
Okay, and it takes about a year, you said.
And it takes about a year, exactly. So, and again, some people are done more quickly, in which case, they don't pay for as long, but some people take a little longer, in which case we guarantee our work. So they only pay for a certain amount of time. If it goes over that, it's a stubborn tattoo. It's on us after that. Numbers as far as growth goes, we started back in 2011. I started it myself, and then my family came on board. In that time, over this last 8-9 years, we've treated 100,000 treatments. We started one location. Now we have 2 in Manhattan, 1 in Financial District, 1 in Midtown. Brooklyn opens in a couple of weeks. We also have Philadelphia, Buffalo, and then I have a mobile unit, which is really kind of interesting. We service 25 different shops right now where we go in and we offer the tattoo removal service to somebody else's menu. So we do that in the Northeast so far. The beginning of next year, I have 4 new locations planned.
Really interesting stuff. How about that? All right, Carmen Vanderheyden Brody is the CEO of The Finery. Thanks so much for joining us.
You're very welcome. Thank you for having me.
And Heidi Chung, thanks for joining us
guys.
well. We'll see you next week.
Bye. Coming up, Planet Fitness CEO Chris Rondeau wants to pump you up and get ready for the company's next explosive growth era. We're going to hear from him right after this.
All right, let's take a look now at some of our winners and losers in today's stock market. Stocks in the red include Merck, biggest loser rather, in the Dow. The pharmaceutical giant saw its shares lower after its Keytruda drug failed to meet one of its 2 primary goals in a late-stage cancer study. Shares of Chevron lower on news the energy company has evacuated all of its American personnel from Iraq amid increased tension throughout the Middle East.
Now for some stocks in the green. Square, after Bank of America upgraded the payments company to buy from neutral, with an analyst noting the stock's relatively weak performance in 2019 now makes it an attractive buy. And Apache shares of the oil company surging today after announcing a major oil discovery in an offshore South American facility. It's officially 2020, which means people everywhere are rushing to the gym to fulfill their New Year's resolutions. I haven't been yet. So
I've been.
You've been. Got to do that. So it's no surprise Planet Fitness is getting a lot of attention. The company's CEO, Chris Rondeau, was live at the New York Stock Exchange earlier, ringing the opening bell, and he joined Yahoo Finance with his business outlook for next year. Take a listen.
Yeah, absolutely. I mean, this time of year is really, good for our whole industry. And right now, we have a great promotion going to Planet Fitness where you join for 20 cents down and only $10 per month. And we have great equipment. We're all 2,000 stores now. We broke out 2,000 stores December 31st. So we're pretty much in everybody's backyard at this point. So convenience is key these days. And if it's out of the way, you're just not going to work out. So convenience is a big piece of it.
Chris, you guys were another big year in 2019. You're a full-on growth beast, opening close to 300 stores. How many are you looking to open up this year?
Yeah, we opened 261 in 2019, which is a new record for us, over 230 in 2018, which is also a record. So great momentum here going. This year for 2020, we haven't quite put our forecast together yet, but right now on top of the 2,000 stores open, Brian, we have over 1,000 locations still committed in area development agreements with our current franchisees, and half of those will open the next 3 years. So we're got a lot of runway for growth and a U.S. potential for 4,000 stores.
Look, you're in a crowded space, right? This is no surprise. There are the traditional gyms, but you've also got the boutique places like Orange Theory.
Sure.
They're popping up everywhere. You've got Peloton, seems to be on a tear. How is this impacting Planet Fitness, or how are you changing strategy, if at all, to better compete?
Yeah, no strategy change at all for Planet Fitness, and I'll tell you why. We cater to casual first-time gym goers. It's really our judgment-free zone. People think it's just about price. It's more our atmospheric component. Almost 40% of our members never belong to a gym in their entire life. When you think about the industry, in 2018, the industry added 1,100 locations, and the industry added 1.6 million members. We added 1.8 million members in that same year. So we accounted for 100% of member growth. And that's really because the industry keeps adding locations, Orange Theories, Soul Cycles, you go down the list, but they're catering to the getting fitter. They're catering all to the same customer, and they're just swapping out people. So they're not really getting more people off the couch like Planet Fitness is.
Chris, I have to ask you, recently there was a management change. Your CFO took over the president role. He will be working more closely with you, with the franchisees. Are you looking at succession at all? You've been at the company since 1993. You've seen and done it all at Planet Fitness.
No, I think, we're really getting ready to pose for our next big explosive growth here. Only halfway there to 4,000 stores. Giving Dorvin more bandwidth here to focus more on development, in the years to come, more international. So with the new CFO coming on board, Tom Fitzgerald, also new CMO, Jeremy came on board as well. So just really getting a good bench strength here for our next wave of growth for the future.
Also partnerships. You talked about international expansion. Partnerships, though, are a big part of your growth strategy. You cut that deal with Kohl's last year. I'm curious how that's going, and can we expect more of that, and with whom this year?
Yeah, I mean, with what's going on with retail these days, everybody sees. I mean, every month it seems like there's a new closure or a new downsizing or right sizing of other retailers. So yeah, we've done a deal with Kohl's with about 4 or 5 locations so far in 2019. More posed for 2020 as well, where they're going from call it 70,000 square feet to 50,000 square feet. We're at 20,000 square feet right next to them with our own private facade. Looks just like a strip center. It's really because we drive traffic. So a lot of retailers want us there. Each store drives about 5,000 workouts every single week, and a majority of those workouts are Monday through Wednesday. So we're really bringing traffic to the center when the retailers aren't busy. So it's a great complement for for other tenants.
All right, coming up here on the final round, we'll have what you missed on Yahoo Finance today, and we are back with that right after this. out for all the best moments that you missed today right here on Yahoo Finance.
You know, I think investors are starting to be a little callous to what's been happening in the Middle East. We've had this problem in the Middle East going on for over 20 years now, if you just count back to September 11th. So I think investors realize that geopolitical events like this, while they cause a lot of news and a lot of noise, that they tend to have a temporary effect on the market.
There is no way artificial intelligence can tell the difference between parody and satire and serious disinformation, because a lot of humans can't even tell the difference.
Well, and this, by the way, goes to the top risk from Eurasia that it released yesterday, that there is going to be a credibility crisis
on our election
in the United States or surrounding the election because people aren't going to know what to believe.
And also, a lot of this is subjective, right? One person can consider it a parody or a satire, and the person who's being targeted can say, no, this is misinformation.
It's silent, it's super powerful. It's like, I call it flight on land. Unbelievable performance, waftability, flight on land, magic carpet ride. So very, very different from your mom's Dasher.
There was a study published a couple of years ago from the University of Minnesota that found that 70% of the ground pork sold in supermarkets is contaminated with fecal pathogens, most of which are antibiotic resistant.
In order for cryptocurrency to really proliferate to the next level, tax compliance has to be followed. And the IRS, of course, anything that materially moves in value, it always has been taxable, whether that be property, real estate, equities, bonds.
Oil prices have kind of settled back. I mean, last year we had that drone attack, same thing happened, big spike in oil, it came back. And I mean, really, we've kind of been at war with Iran since the 1980s. So I don't think it's as earth-shattering as as people may think, especially the market right now is not reacting that dramatically.
I think we've heard from the Fed pretty strongly that they're going to be on hold as long as the outlook remains in line with their expectations. Obviously, if there is some sort of if the narrative shifts because of the Iran escalation or any other external shock, they'll be adjusting. So in that sense, we think that the risk is that you could get additional easing. But our base case view is that they'll still stay on hold for 2020.
Taking a final look right now where the market's finished for the day. A down day across the board. Dow off triple digits there. A NASDAQ turning red just at the very end. Boeing, one Dow stock that was higher. Overall, though, even though we did have some momentum names that were higher.
A few.
It's not all doom and gloom, though, because it is the one-year anniversary of Yahoo Finance. Yahoo Finance celebrates a year of bell-to-bell live coverage today.
Has it been that long, Jen?
Somehow it has been. I don't know, but we were at that other place. Which
yeah, we were at that other place.
AMB.
That's right. It hasn't quite been. We'll do another one-year anniversary on like March 25th or whatever that was.
Yeah, when we get back in the studio right here.
That's great. I remember when the show used to be 20 minutes.
Wow.
Is that coming back?
Maybe. That's all for now from New York. I'm Jen Rogers with Miles Edlin, and this is the final round on Yahoo Finance.